पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Hi, thanks so much for joining in. It's a big day today for Indian equity markets, money markets, and indeed the economy, because it is the outcome of the Monetary Policy Committee's meeting that concluded yesterday. And it's widely expected to be a status quo, Hira.
Absolutely, status quo. And I think I'm going to really watch out for the commentary, the tonality that comes out of it, because expectations in terms of numbers are very clear on the street, right? So the key is going to be, what is the governor actually going to come out and say? What is his tone going to be looking like? So that's going to be the key in terms of domestic markets. But I don't want to miss talking about SpaceX.
Oh yeah, SpaceX numbers.
Did the numbers take off or not?
The numbers looked incredible in that the revenue numbers were incredible. The stock was up before the presentation of the results. I'll come to that in just a bit.
But I think the AI costs. That's
the AI
a concerning
costs,
area,
yes,
right?
exactly. And we'll come to that in just a bit. But before that, let's refer to what's having a bearing on global markets. And that is the fact that geopolitical tensions are easing and oil prices have dropped a further 5% after US and Qatari officials have both commented on the Iran war. Brent has dropped to sub $80 to the barrel, and that is good news for the Indian equity markets as well. Qatar has said on Tuesday that mediators were making progress in efforts to end the war. US Secretary of State Marco Rubio has also asserted that progress was being made. He said that talks about moving ships through the strait were progressing. Listen in.
Well, I think there's two things to talk about when there's a deal. There's the big deal, which is the one that has to do with their nuclear ambitions. They can never have a nuclear weapon. The president's been cleared about that. So the denuclearization of Iran is the ultimate deal. I think the immediate deal, the one that you've seen a lot of focus on, is the Straits. The Straits, there are ships moving through the Straits. There's oil moving right now through the Straits. So the Straits are open. Nonetheless, I think that there's a conversation and negotiation that we are involved in between Oman and Iran on how more ships can be able to go through there safely in the short term as we move towards these longer term talks about denuclearization. And suffice it to say, there's been progress made in those talks, but not finality yet. We're hoping that will happen, very shortly.
Okay, very shortly is the word from Marco Rubio. It certainly was the word from Treasury Secretary Scott Bessent as well. And he was quoted before Marco Rubio, and he said that a deal was likely soon. He spoke about either Tuesday or Wednesday. Tuesday certainly has not happened, but one can hope that a deal is signed imminently and hopefully within the next 24 hours. Meanwhile, there are others that are saying perhaps that is a little too optimistic. That's because Tehran has denied President Donald Trump's assertion that talks are ongoing. Now let's talk about the markets, because you had the S&P 500 and the Dow Jones Industrial Average that closed at record highs. You had Caterpillar and Palantir results that fueled that risk-on sentiment. Palantir's stock rose, take a breath, 29.5%, and that's after raising its annual revenue forecast. Caterpillar did that as well, and that bodes well for industrial stocks globally. The Dow recorded a closing high for a second day in a row, and the S&P 500 tech sector recorded a 4.1% gain on Tuesday. 85.2% of the 304 S&P 500 stocks or companies that have reported their numbers so far have beaten estimates according to LSEG. And now Hiral was talking about SpaceX. It closed 9.4% higher before the numbers were presented, but it did drop after the closing bell as much as 4% after the numbers were presented. The company's revenue nearly doubled, aided by Starlink and its AI businesses, but the concern lies exactly in what she was talking about. The capital expenditure has caused some worry. They've spent $18 billion on capex in the second quarter compared with $2.83 billion a year ago, and a large part of that, over $15 billion, has gone into AI. Of course, it's expected to give returns to the company very shortly, but there's concern about how much they're spending. Meanwhile, in data, US job openings have dropped in June, but hiring has risen and layoffs were low, and treasury yields have actually fallen on geopolitical tensions easing, and Asia Pacific equities were sharply higher this morning, all very positive.
Let's get on board Richard Harris, who's Chief Executive of Port Shelter Investment Management. Quite a bit has happened overnight, and so it took some time to sum it up, Richard. Thanks so much for waiting by, and pleasure having you as always. What do you make of the risk-on sentiment? And it seems to be good. The earnings in the US are better than expected, as I was pointing out. Over 80% of companies are posting better than expected numbers, and they were already elevated expectations. So the party is set to go on for some time now.
Yes, absolutely. I mean, it's everything's booming, everything is going up. But of course, we're sitting on a bubble of liquidity. We've got something like $2.4 trillion going into data centers and other AI activities. We've had Trump's Big Beautiful Bill, which has given thousands of dollars to tax-paying Americans. And we're just seeing more and more debt occurring in the markets. You know, the US is increasing their debt levels by $2 trillion a year at the moment. You know, so it's all this money is flowing around, and money's creating bubbles, and bubbles create narratives, and narratives create further bubbles. So what we're seeing at the moment is an enormous amount of enthusiasm for AI, for data center stuff, for anything to do with tech, you know, Palantir you just had on the screen there, for a wide variety of AI and tech rated assets are just inflating because there's so much money around and there's so many narratives around.
Right, Richard. Good morning. Hiral on this side. You're talking about bubbles. The question is, when do they burst, right? And then what are the repercussions that one could actually see? However, when you're talking about this entire AI bubble as well, I would not want to miss asking you, what do you make of the SpaceX first quarter results that have come in post the IPO? And they have been talking about elevated AI costs, which has impacted the business, and that's the reason why you've seen that kind of correction in terms of the stock as well. How do you read the fine print?
Well, SpaceX is a microcosm of what we're seeing in the markets. We've got enormous enthusiasm about one particular stock, one particular sector. And let's face it, we all love space, you know, Star Wars, E.T., all of these things. They are captivating, and there are some captivating stories there. I think certainly in terms of getting telephone calls from space is a fantastic thing. But we're really looking at revenues in the future. Expectations are extremely high. We're talking about a company, I think it had revenues of something like 7 billion. Well, in the same quarter, Exxon had revenues of something like 116 billion. Their earnings were 14 billion. SpaceX has no earnings, and SpaceX's expenses, what they're trying to put into data services, are the same as Exxon's second quarter's earnings. So we're looking at a massive difference in valuation, which is really buoyed by what I was saying earlier. There's an enormous amount of liquidity. The liquidity likes to chase winners, and SpaceX is very much in that category of winners. The fact that it's come off a lot recently really, I think, doesn't make much of a difference, because it was IPO'd at a very high level and it went to a much higher level after that. So we've seen the share price come down significantly, but that's not really a reflection, I think, on what people really think about the stock.
Okay, so Richard, the question then is, if someone is holding the SpaceX stock, what would you advise them to do? Because is there a situation where any bounce that they see in terms of SpaceX should be used as an opportunity to book profits and exit?
Well, I'm not sure there are too many profits there at the moment. You know, you might be buying now.
I mean, it's come off quite a bit. It's come off, what, 22% from its IPO price. But the moment they get that upside, at that given point in time, would you advise that please book profits?
Well, really, you should be buying at the bottom. So if you have confidence in SpaceX today, you should be buying at today's price, not waiting until it's gone up 15%. I think it's very difficult. It's a very speculative stock. It's going to go up and down. Maybe it's another Tesla that'll just keep going up and nobody quite knows why. I think space is a very interesting area. They're doing some very unique things. But don't forget, you've got Starlink, which at the moment looks to be, I think, probably the most interesting shorter-term business, and a very interesting one. But Amazon are now threatening to put up 3,000 satellites of themselves to create their own Amazon Starlink. So what happens if you start getting competition? So I think that, yes, it's something you might have as a flutter, as a bit of fun, but there are no real valuation elements backing it up. You're really just looking at the next buyer scenario on that one.
In essence, Richard, is the issue with so many stocks in the concentrated rally that we've seen in so many risk markets around the world, right? The question is, how would you advise, or what do you think will happen with regard to rotation? Because at this juncture, you're talking about valuations vis-a-vis India as well. And a lot of people make this argument to say that in some of these markets, in South Korea and the US as well, the multiples are not as high as you would see in India. But we're talking about those multiples not being high by judging them based on forward earnings that at this juncture are at the very zenith. And so therefore, if they come off, there is no margin of safety.
Well, that's exactly right. And that's the problem in investing in these things that are basically speculative stocks with no strong valuation underpinning. You know, if the market came off suddenly because there was some trigger in the market causing it to fall off, these highly valued stocks are going to be hit very, very hard, very, very hard indeed. And even stocks which have some genuine valuation merit to it, you know, the Alphabets, the Amazons of the world, the Apples, genuine valuation benefits, they'll also come off substantially. But you will also see stocks that aren't valued quite as strongly, that have true value still in them, you know, maybe stocks like the oil companies, which won't come off quite so much. And I think you really have to say, what are we looking at in the future? Are we going to play value, good, strong stocks, which maybe you should have in the core of your portfolio? And are you going to have a little flutter with some of these speculative stocks on the side because they've gone up and it's tough to knock something that keeps going up? But then you just have to say, well, there's a risk-return bias there. In that case, it's a risk bias with these speculative stocks.
Absolutely. I mean, it's going to be interesting to see how the profitability actually pans out for investors on these names as well. But thank you, Richard, always for joining in. Always a pleasure to speak to you. It's interesting to see the kind of moves, Alex, that you're seeing in terms of Nikkei, you're seeing in terms of Kospi.
Yeah.
Yet again today.
Romping rally.
Yeah, I mean, 4% in terms of Kospi. Look at a Nikkei as well. I think similar are the kind of returns, 3.5% there. So good amount of rally coming in there. And they're taking cues from the record high levels that we've seen in the US markets, though your US futures are slightly subdued. But if you have to look at the Indian markets as well, you know, we have seen profit booking in yesterday's session, but it seems that this was some amount of healthy profit booking that we've seen as well because of that sharp rally that we had seen in the last couple of sessions. Now, it's a 4-day winning streak that Nifty has actually snapped. We've ended nearly 159 points lower at 24,614. The underlying momentum, if you have to see in terms of markets, continues to favor the bulls. And this is despite that short-term consolidation that is coming in as well. You have seen Nifty take a sharp 150 points spike in the closing auction session yesterday. And that was aided by more than a 1% move in more than 10 Nifty 50 stocks. If you talk about Bank Nifty as well, you're seeing Bank Nifty consolidate at levels of around 58,000. So that is the key. And in terms of Nifty's constituents, they have remained under pressure throughout the session. If you talk about Apollo Hospitals, Hindalco, Trent, these were the top gainers, whereas Grasim, HDFC Life, Bajaj Auto, these were the biggest laggards as well. In terms of individual sectors, majority of them ended in the red. It was only media and metals that saw a positive ending. Real estate, oil and gas, FMCG, I beg your pardon, and IT, these were the sectors that actually led the decline in yesterday's session. Broader markets as well, mid-cap index fell around 0.3%. Small cap, however, bucked the trend and it gained nearly 0.2% in trade. So there was that little bit of divergence between the mid-caps and the small caps as well. If you talk about the market breadth, that has turned slightly weak in yesterday's session because the advanced decline ratio was at 0.99 on the BSE. So selective profit booking was seen in mid-caps and the small cap space after the strong buying interest over the past 2 sessions. So that's what we are watching out for in terms of today's session as well, because if you just quickly pull up the implied open right now, that will tell you the
190 points or thereabouts.
Thereabouts, right? So 190 points is at the kind of upside. Yesterday you saw that downtick. there is that buying coming in, and let's not forget it was expiry as well yesterday.
It was. I really like the data that you pulled up on the cash closing, and the fact that once again you saw that uptick that took place, and the fact that so many stocks saw that up
it was almost 10 stocks.
And we were speaking to Nilesh Shah yesterday about the closing and the fact that he thinks that it'll take 7 to 10 days for things to settle down. So you will see that elevated volatility in the last hour, where he was saying if I was a fund manager, I would ask my dealer to sell at 3% higher and to buy at 3% lower. If you get through, you get through. But the implications of that is that there are a lot of people that are bidding at those higher numbers and lower numbers. And once those deals actually go through, it pushes the prices higher, has a bearing on the index.
Absolutely. And the question over here is, this actually gives you an opportunity to determine the price. Whether it's right or wrong is a different question, because if you have the money, if you're sitting on that quantum of funds and the volume that you can generate to make these bids, there is an arbitrage opportunity, that exactly what you're talking about, and you have the opportunity to create that price and that momentum.
You know, the beautiful thing here is that the more people realize that there is an opportunity here, the faster this will be solved. In that, when people realize that if they place a bid, they could potentially get a 3% pop, more people will bid, and so therefore the price discovery will be better. So you just need more institutional participation, and that will fix itself. Let's talk about what Morgan Stanley is talking about with regard to India, and this is Ridham Desai's note. He said India has the ingredients to sustain market outperformance, yet the durability of gains will depend on global conditions. And here's the factor: India's growth gap versus the rest of the world is going to be that key trigger. A faster domestic growth and a weak AI capex sentiment. Remember, a lot of people now are talking about the fact that companies in the US and other parts of the world are spending a lot of money setting up that capex, and if that sentiment sours, it's good news for India. Q1 earnings here in India highlight a stronger growth momentum at home. The global AI trade volatility may support relative flows into India. High frequency indicators continue to point to healthy momentum here in India as well. Structural reforms could lift the growth and improve capital flows. This is something that he has said on an ongoing basis. The robust IPO activity should support markets in the near term as well. And quite a few companies are in fact coming up to the Lal Street. Prefer domestic cyclicals over defensives and export-oriented sectors, overweight on financials, consumer discretionary and industrials, underweight on energy, materials, utilities and healthcare. IT services could emerge as a surprise outperformer in the AI era, and the key risk is geopolitical tensions and a slowing global economy. Domestic concerns include farm productivity and judicial bottlenecks. Very interesting when he's talking about IT, when he's talking about cyclicals, and on the flip side when he's talking about energy and materials being underweight. I think it's a valuation story.
It's a valuation story. And you know, the other thing that I'm liking right now with all of these strategy notes that are coming in is there is that little bit of sprinkling of IT that has started to come in, right?
Yeah.
And that's what I'm getting interested about as to yesterday Neeraj was talking about banks with the FIs coming in, and that was the murmur that he's picked up from the conversations that he's had with those investors. Now you're starting to see that sprinkle coming in terms of IT as well. So when banks and IT are coming in at the forefront, probably the FIs are coming back. In fact, let's see what HSBC has to say. Prerna Garg has written this note, and she's saying that India offers diversification and stability, and AI rotation outflows, interestingly, are largely done. With 80% of GEM funds underweight India, a move back to neutral could actually bring $25 billion worth of inflows in the Indian markets. Very similar in terms of tonality if you have to talk about the other strategy notes. Your high frequency indicators are remaining constructive for India. Your Q1 FY27 results have generally come in better than expected, as everyone is talking about. And she favors quality growth names in domestically driven sectors like financials, auto, retail and hospitals. Private banks and real estate look relatively attractive after their underperformance, whilst diversified NBFCs actually stand out. She likes selected industrials benefiting from government policy support, and within the consumption basket prefers consumer discretionary over staples. The key stock ideas that they have in terms of HSBC is ICICI Bank, Cholamandalam, Titan, M&M, Phoenix Mills, Fortis Healthcare, a whole host. Cummins India that will be reporting numbers today, Adani Ports, Hindalco, and Sirma SGS. So very interesting names that you're watching out for. But with all of this said and done, let's quickly look at all the factors. We've spoken about the 4-day, Nifty snapping the 4-day winning streak as well. Apart from that, you've seen strong lower level demand that's coming in. So buy on dips is the strategy that everyone is watching out for in the near term. 24,450 to 24,400 is the band, and maintaining a stop loss below 24,350 as well. That is what technical analysts are alluding to. What they're saying is that avoid aggressive directional shorts unless Nifty breaks and closes below that 24,400 mark. The resistance is coming in at 24,690 as the first level, and you can see the other two on your screens as well. The first support level is at 24,475. In terms of Bank Nifty, we've seen it settle 340 points lower in yesterday's session, and almost a more than 400 points rebound from 3:15 p.m. levels during the closing auction session. Now, look for long re-entries of Bank Nifty, retest that 54,700 and that 57,500 level with a tight stop loss below 57,250. A move above 58,300 will actually trigger a short covering rally as well towards 58,800. Resistance 58,50 and support at 57,505. These are the two important levels you should be tracking. But very important in this last 2 days as to how the F&O data and the divergence is panning out. And Puneet is with us to tell us more. Puneet, good morning. I'm very interested in terms of what the future story is telling you as compared to what your cash levels were indicating. Has the session actually shown you a similar trend as per the first session as well in terms of cash?
Well, good morning, Hirala. And as you rightly mentioned, because you are starting to see that impact on multiple key inputs that we see for the F&O side of things as well. And with the implied open very close to that 24,750 mark as of now. The Bank Nifty too, and as you mentioned, I saw buying in the last few minutes, last 15 minutes of the trading session, and hence we ended close to that 57,900 mark at this point of time. 58,200 continues to be a near-term support, and not a very strong one, but an important level to track for the next leg of growth. Foreign investors continue to be buyers for the second day in a row in this week, and we've seen in the month of July they bought almost $2.3 billion after a 4-month hiatus, essentially. So all those buying moves and with decent income, decent output coming through of almost 2,500 crores will be something to watch as well. What you have seen in terms of the index longs though has been that 13% odd mark. Now this is higher than what they did in the month of July, but still yet to form a meaningful trend at this point of time. Almost 87 to 88% shorts continue to be held, but post expiry yesterday, as well as what you could expect, that the puts have actually receded going into the new weekly as well as the monthly expiry. So 1.34 was this number yesterday, and when you look at the open interest distribution, that shows you this is the exact trend too. We've now yet again had 25,000 on the screen after a really long time, because you have moved up in that 24,000 range as we moved with this index flow. So 24,800, 25,000 now seeing the most active open interest. So is 24,600, while the puts yesterday, which we saw at 24,200, have now receded. So most action being built in on the upper end range between 24,000 as well as 25,000. Finally, stock specific action, result reaction continues as well as on news flow. So LIC, we saw that massive buildup of shorts yesterday. Apart from that, Blue Star was the other one which saw some kind of buildup of shorts, but stock specific action, the open interest loser side was also interesting with Nestle. Comments came through on analyst meet, and then you saw longs being unwinded for this counter. Strong earnings for KEI, 9% uptake, and shorts being covered on this counter as well. So overall, stock specific action does continue on earnings, but the story on benchmarks will be yet again what we'll be watching out for today.
Yeah, absolutely. We'll get to that eventually, but before that, we'll have to deal with monetary policy. Thanks so much, Puneet, for that. And let's talk about the monetary policy. What are the expectations broadly? That there will be a status quo, but I think the fine print is going to be more important to track. And we've got Piyush Shukla, who's at the RBI right now and waiting to get in. Piyush, what are the key details to focus on here?
Yeah, good morning, Alex. So you're right, today the MPC is meeting and broader expectation, and we did a NDTV Profit economist poll as well with 16 economists. Everybody has voted for a status quo, both on policy rate at 5.25% and maintaining the neutral stance. Now, what economists say is that, the RBI would like to maintain a wait and watch approach because the West Asia conflict, it would like to see the spillover effects on both India's growth and inflation dynamics. Accordingly, economists say that while the RBI may vote for a pause in the current meeting, it may deliver a 20 to 50 basis point hike towards the end of current financial year. Now, what the markets will be eyeing, Alex, is the tone, whether the governor is sounding a bit hawkish. Recently, the West Asia conflict, there was a memorandum, but now again that has been broken. So, how does that affect India's inflation? That would be keenly monitored. A few economists are expecting the RBI to slightly revise downwards the inflation forecast, whereas increase slightly upwards the forecast on GDP growth. So both in terms of currency management, we understand last policy RBI had introduced FCNRB measures, so it would be nice to hear from governor on the response the scheme is getting and whether it will be continued beyond the September period. Also on liquidity management, because a lot of liquidity has come to banks because of the CRR cut and these FCNRB, OFCB and ECB related measures. So on liquidity management, the currency management, and of course whether they will tweak any forecast on both growth and inflation is what something the markets will be eyeing today.
Okay, Piyush, good morning. The rain gods are being kind to you as well. But if you have to look at, the key aspect that you really want to know, apart from what everyone on the street is expecting, what would that be?
Hiral, to me, first, the most important thing that the markets will be eyeing is the governor's commentary with regard to the currency management. As we are aware, rupee has been stable at 95 to 96 in this band. But whether the governor, feels that this is still, the rupee continues being undervalued, that is something that I'll be looking out for personally. Second, also, there has been a slew of events with regard to the largest private bank in the country, HDFC Bank, what does the governor has to say about, because the current CEO's deadline ends in October and we are already in the month of August, and RBI typically asks the names, the recommendation before 3 to 6 month period. So this is a bank which has seen a slew of negative development over the last few months. And how does the regulator look at some of the happenings that are taking place at the country's largest private bank? That is something that I'll be keenly eyeing. And third is, of course, whether the governor and the RBI will consider extending the FCNRB window, because it is ending in September this year.
That's actually an interesting point, all three of them. In fact, I'm sure, Piyush, that you're going to be tracking HDFC Bank closely today. Today is a board meeting and there could be some interesting...
The AGM.
Oh, rather, sorry, the AGM. Yeah, the AGM, and there could be some interesting conversations there. Thanks so much for joining us, and of course, we'll get back to you once the decision is out. So, particularly on that last point, on FCNRB, right, if there's commentary on the amount of flows that have come through, which at last count are over $40 billion from the various, the OFSC, as well as the ECB plus the FCNRB. In fact, Samir Arora had an interesting point to make this morning. He was saying he hopes that the window is closed earlier because at this rate,
hit the target.
Yeah.
And at this rate, if the flows continue,
you could hit $80 to $90 billion.
Correct. And then you will have to actually have a redemption plan as well, which has to be in place where you're paying the principal and the interest.
Yes.
So it's going to be interesting as to how we're able to manage the redemption side of it as well, because otherwise that is going to be another balloon.
It would be a problem as well. But let's get into the stocks that you should watch out for. And we've got a few earnings reactions that could happen in trade today, and some strong numbers. Marico certainly stands out. Strong beat on EBITDA as well as PAT. You anticipated that this would happen because of the quarterly update that came through, but the margins have actually supported that. Remember, you don't get the margin picture and the exact volume data in the quarterly updates. Volume actually is grown by as much as 11% year-on-year. India volume, that is, at a 20-quarter high. Strong execution with premium portfolio driving the growth. Parachute volumes rose as much as 10% year-on-year. That's a 20-quarter high. But the value has risen as much as 23%. The value-added hair oils sales have grown as much as 22%, and that is boded well for the margins as well. The guidance is maintained. You've had the management reiterate a double-digit revenue growth and revenue to surpass 15,000 crore rupees in FY27, 20,000 crore rupees by FY30. They expect a high-teen EBITDA growth in the base case with an aspiration to deliver 20% EBITDA growth in FY27. All positive. You could see a bumper number when the stock opens today. The revenue uptick of 23% and more than estimates, or just about more than estimates. The EBITDA certainly is more than expected at 819 crore rupees. The margins come in at 20.7%. Bharti Airtel also marginally above expectations. The India mobile enterprises have a business has performed well, but on the flip side, you've had broadband and DTH that have marginally disappointed. All this actually is based on my colleague Soumit Sarkar's review, and we'll come to that later on in the show. I'll take you to the cliff notes. The mobile growth is on account of the higher ARPU, and that is on account of one extra day in the quarter gone by. 4G and 5G customer base has grown faster than the overall customer base, and broadband has reported its slowest revenue growth in at least 8 quarters. EBITDA growth is the slowest as well in the last 15 quarters. Broadband slower growth is on account of the low ARPU and lower subscriber additions in the quarter gone by, and the DTH business was also weak. EBITDA margin is the lowest in at least the last 24 quarters. Data consumption on the network has increased 11%, which is positive, and the rising consumption is on that network indicates 4G and 5G subscriber adoption as well. So all told, good set of numbers for Airtel as well. And finally, Metropolis. You've had diagnostic companies report good numbers, and this is another one. You had margin improvement that has aided the overall operating profit. Margin improvement is on account of operating leverage and automation. They've seen double-digit patient growth and test volume growth, and specialty testing has actually seen a revenue growth of 17%. This is good for their mix, as a result of which their margins have come in higher at 24.7% compared with 23.2%, and that is an improvement that has seen their PAT number grow quite healthily at about 25-26%.
Okay, interesting names there, and I think even I have 3 earnings. Jyoti Structures is the first one I've picked because a spectacular set of numbers. Thumbs up, strong quarter. They've maintained a sequential turnaround momentum as well. And the board has approved a 250 crore fundraise. 57% growth in terms of total income. Your EBITDA has gone up 90%. Margins have improved substantially as well, and the profits have gone up 74%. So a thumbs up on this one. Nykaa is another one. Now, the earnings have been in line with estimates, and the margins are a slight beat. But overall, it's a good set of numbers that have been reported by Nykaa. Your beauty segment has reported a stable growth. Fashion has outperformed, and your fashion business break-even has achieved. Beauty profitability has improved as well. They've reported a net profit of 80 crores versus a 23 odd crores. Your revenues have seen a growth of around 29%. And if you talk about the margins as well, improved substantially to 8.5% versus a 6.5%. So yes, there is a year-on-year improvement as well, and they've beat street estimates by almost 20 basis points. Castrol India, another one where again, thumbs up because the revenues have seen a growth of 21%. Your EBITDA is up 50%. Margins have improved substantially during the quarter as well, and they've said that they will be paying an interim dividend of 6.25. Now, they've strengthened their market presence through portfolio innovation, expanded distribution and industrial growth. The industrial, institutional and consumer businesses have performed well, and they've been delivering strong volume growth. They've expanded their rural distribution to almost 45,000 outlets and grown the rural service express as well. So thumbs up coming in terms of Castrol. So these are the top 6 that we're looking at, but a bunch of other stocks that are in focus as well on the back of their earnings. And Puneet joins us with more. Puneet, good morning again. And which are the other stocks that you've been tracking today?
Well, thank you for that. Avalon Tech definitely features on the list. A very strong revenue growth that they've recorded in this quarter, up 49%. And with that, despite the volatility that we've seen in this quarter, margins have actually expanded. So EBITDA is up 94%, and hence the EBITDA margin is up almost 280 basis points at 12% versus 9.2. The profit also is up 43% at 348 crores, and the company mentioned that the order book has grown by 23%, so at 2,290 crores, gives good revenue visibility for the next few quarters. The asset turns have been maintained at the 9.9 times, similar to the last quarter, and hence the businesses like clean energy, which is almost 29% of the revenue versus 20% last year. Mobility is also very strong at 32%, while at 25%, and automation is at 32%, pardon me, in terms of verticals. The India business also has increased in revenue to 41 versus 38, and while US continues to dominate majority of the revenues as well. So good quarter for the company. Ask Auto is the other one. Now, similar to the other auto ancillaries, very strong revenue growth at 52%, but a lot of it is led by the commodity price impact, which is reflected in revenue. But the EBITDA is up 34%, but the margins have contracted by almost 120 basis points. So that impact is because of higher aluminum prices. But net profit is also up 28%. Two key verticals that they operate in the advanced braking system, that is up 48% in this quarter, and a 75% growth in the aluminum precision solution business as well. So keep this stock on your radar too. And finally, it's Protein eGov. They have also recorded a decent growth in profit in this particular quarter. They have the new initiatives which the company has been speaking about in the past is up to 17% of revenue versus 10% in the same time last year. So these are the three stocks that continue to be in focus today and might react on earnings reactions.
All right. We've got to slip into a quick break. Puni, thanks so much for that. But on the other side of this very quick break, we will talk about the reactions from our fundamental and technical expert, and also we'll talk a little bit about monetary policy. Stay tuned for that.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना? बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड? एक हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल।
Welcome back to India Market Open on NDTV Profit, and clearly a gap up opening is what we're looking at. But let's get in, as always, Parag Thakkar and Kush Bora in the studios. Good morning. You know, before we start off with anything else, Kush, I want to ask you a question with regards to the CAS auction session that we're talking about. Between the first day and the second day, have you seen any divergence, or it has been very similar?
So first up, a very good morning.
even if you did not start with that question, I was for sure going to start off with that. Okay. Remember yesterday we said one very interesting point. Oh, by the way, why do we need to have this discussion? Monday was regular trading day. Yesterday was expiry. And remember we spoke of precisely this, कि 3:15 बजे तक option sell करके open रख के मत जाना. Let me give you some numbers, data, right? Yeah, exactly. 24,400 call option at 3:15. The closing price at that time was 110. You know what it got settled at? 215. 24,500 call option at 3:15. The closing price, or the last traded price, that's a better way to put it, is 47. You know what it got settled at? 114. Now, I'm not saying that this is entirely a bad thing. In fact, I'm happy. You know why? Because the retail guy is making money out of this.
The writers are losing.
The writers are losing. Look, the institutional guys and the market makers are also smart. They would not be writing in a very big quantity because they know this is perhaps going to happen. And they might also switch to the buy side, especially on the expiry day, right? But if that happens, this is going to seriously distort the volumes, the market activity. So this might need a relook, the entire thing, or a serious, very quick smoothing out. Now, we saw this impact yesterday, which was expiry. Tomorrow, again, there is going to be the Sensex expiry.
Correct.
By the way, this is not a recommendation for you to trade and let your options expire, just because of this cash system. Anything can happen. If it's, 250 points up, it could be 250 points down also. Correct? So, I'm not saying it's not a recommendation, but we have seen this. Even if it's a 2-day trend, we've seen this happen, right? So, this perhaps still needs to be ironed out, right? If not, perhaps relooked. So I'm a little concerned about how this is going to play out, especially on expiry days, right? So be a little cautious. Now over to Nifty.
Yeah, let's talk about it, because effectively, if I remember correctly, 570 was where we closed 315 at on Monday, and we're above that price right now. So therefore, what is the outlook today?
So for all practical purposes, for the next few sessions until this is ironed out, the cash is ironed out, you should actually look at Nifty and Bank Nifty futures to get a very clear reflection of what the actual move is, right? Now again, at 3:15 yesterday, Nifty was at 24,465, just about 100 points down from Monday's closing, right? So I think that is how we're going to take our cues. Remember, we spoke of the PCR being at 1.4, elevated hai, thoda profit booking aayega. That's exactly what we saw yesterday. Not concerned about the kind of dip. In fact, that was a healthy one. 24,400 was the support zone that we had been talking about. That barely got tested in yesterday's session. Nifty is very much on track for 24,800, 25,000 levels from a very near-term perspective that I've been talking about. Maybe if you do get this 180, 200 point kind of, a gap up opening, the risk reward ratio at the initial tick is lost. But if you do get it anywhere close to 24,550, 24,600, you could still make that positional bet. Bank Nifty, very similar, 57,500. That's the level we've been talking about. It touched that level, closed just under that. By close, I mean 315. At 315, it was at about 57,492. So again, very close to that 57,500 mark, right? So Bank Nifty still has that room to move to 58,500, 60,000 levels from here. 56,800, that's your support zone. Very constructive on both the indices, not at all worried about what's happened yesterday. In fact, that was a healthy move. If you want to go long, take your bet. Right now, I still prefer Bank Nifty as that long trade because it's underperformed just a bit over the last few sessions.
Okay.
Your top picks then?
Oh yes, I'm going with all three long calls today as well. I do want to talk about the mid space, but maybe I'll park that because the cash discussion is taking some time. But we'll come back to that. CAMS, Artemis Medicare and Sunflag Ions. These are the three calls that I have for today. The levels on these 835, 865, and the stop loss that you can place on CAMS is 785. Now, Artemis Medicare, this one's also seen a very healthy, mild uptick, but on the back of very healthy volume accumulations. 312, 321 are your targets. 294 is where you keep that stop loss. And Sunflag Ion for targets of 378 and 392 with the stop loss at 354.
Got it. Okay. Just want to mark some of the flashes that you see at the bottom of the screen. Remember, that's where the news breaks first. It's just a reiteration by President Donald Trump. Apparently, he's doing an interview with Fox News where he has said that the discussions with Iran are very good and progress is being made, should have the straits open very soon. The straits going to be open very soon. In his words, if Iran backs out again, they'll get hit very hard. So it's essentially a reiteration of everything that he said in the past. Remember that Iran, for its part, has continued to maintain that talks have not been happening, and they've said that Arakchi, for one, is in Iraq for a pilgrimage, and he's not involved, and the other negotiators are in Iran at this moment. So, all told, geopolitical tension has eased, but we're yet to see durable signs of talks taking place, at least from the perspective of Iran. Let's talk about, before we get into LIC, and that's certainly a big talking point, but there are a couple of stocks that have posted their numbers that were very good, right? Large frontline stocks. Very good being Marico, decent being Bharti Airtel. You tell us what you think.
No, all are my portfolio stocks, all have done well, so I'm happy. Bharti Airtel, as usual, steady compounding, good ARPU above expectation, good subscriber ads, excellent EBITDA performance, and debt reduction also.
But the issue has to do with the broadband business and the D2H business.
That's okay. I think broadly, if you see the EBITDA and how they have shaped up the numbers and operational excellence of this company and financial prudence also, because they have reduced leverage also. So I think Bharti Airtel is looking very good. Marico, Pidilite, you saw the performance. Like Marico, 25% EBITDA growth, 25% PAT growth, 11% domestic India volume growth, aspiration for high teen EBITDA growth. What more you want? For a
and best case 20% EBITDA
from a company which is supposed to be making parachute hair oil. So of course valuations are a little bit punchy. That's okay. Same is the case with Pidilite. Again, 11% volume growth. So April, May, June, I think if you see the numbers of, for example, companies like ASK Auto, Sundaram Fasteners, VRL Logistics, I think we are rocking and nobody is noticing it.
How about Nykaa as well? Because the numbers in line with what the street was estimating as well, but I think the margins have come in as a surprise to me. And if you have to ignore the estimates and look at the year-on-year growth, I think it's a good number.
No, numbers were very good. The question is that in 3 months, stock has gone up by 29%.
Correct.
Market cap will touch 1 lakh crore in all probability today morning. As you said, people have liked the results.
Correct.
So 1 lakh crore market cap is there, and this quarter EBITDA was around 286 crore, right? So and PAT was 80 crore. So I would say that on growth metrics, how they have turned, I would say fashion business has grown at 50%, right? So I think operating metrics are good, but I think that is in the price.
Okay, stay with us. Before we take a chart check with Kush and any of these names, Nestle was the other one which actually saw the numbers come in. Now, the commentary that did come in during market hours, and that was the reason why you saw that correction of 2 to 3% that came in there. But let's understand what brokerages make out of Nestle's story as well. Mahima joins us with what brokerages are actually indicating. Mahima, over to you. Good morning.
Good morning, Hiral. So the analyst meet was yesterday for Nestle, and when the presentation came out, there was some cautious commentary which kind of weighed on the stock. But eventually, when Manish Tiwari was kind of delivering his speech, the stock did also see recovery. But in terms of what now brokerages are making of the entire analyst meet, I'll start with Jefferies. They've maintained hold with a target price of 14.25. What they're saying is that there is positivity in the long-term outlook despite of near-term headwinds. The MD has outlined clear execution-led growth agenda. The focus is on penetration-led growth, premiumization, and runway via distribution, brands, digital execution. Cost savings, in terms of fund marketing, protecting margins is going to be the key priority. And this strengthens the confidence in sustained long-term growth despite of the inflation that we have seen, and of course geopolitical scenario still remains the key near-term risk. Morgan Stanley has maintained equal weight with a target price of 1538. What they've said is that the management is upbeat on growth opportunity ahead, but the focus remains on penetration, premiumization, brands, distribution. And what they're saying is that overall management refrains from providing growth guidance. Valuation reflects recent strong growth trends that we have seen for this one. Lastly, Macquarie has maintained neutral with a target price of 1575. What they're saying is that they're confident on the opportunity, but overall in terms of their analysis of the analyst meet, it was very limited in terms of specific. The concerns about industry growth is still there according to them. Large room for expanding reach and penetration gains are expected considering the support that they have in terms of the long-term growth guidance that the management has given. So this is the overall view of what brokerages are kind of making of the key takeaways that were there from the analyst meet.
Parag bhai, thanks Mahima for that. Parag bhai, Nestle, overall everyone was of the opinion that there is stability when it comes to Nestle. And if you have to peg that with valuations as well, are you still seeing any opportunity?
So basically, I am of the view that Nestle valuations are fully priced. That I said on the results was fantastic.
Yeah.
All four categories showed double-digit growth. EBITDA growth was some 35-40%. But at 60 times it is priced in. So that was the case, and now they have given some cautious commentary that because of this geopolitical and inflation-led problems, consumption might slow down a bit, taper down a bit. So that's okay. Let's see how it goes. It depends on monsoon also.
But Parag bhai, you are mentioning that we are rocking, and these are your words. We are rocking, but people are not noticing. But if you see the last 6 days, and of course there could be some large blocks that have influenced in certain cases, but FIs have been net buyers for 6 days in cash.
Yes.
So therefore the trajectory is heading in the right direction.
I feel that FIs chase earning momentum, right? Why they went to Korea, why they went to Japan, why they went to other countries? Because there was earning momentum there. Now if they see earning momentum returning here, like we saw in Bajaj Finance numbers, or like we saw in ICICI Bank numbers, or now we are seeing in so many other companies numbers, they'll definitely come back. They will just chase earning momentum in my view. And so I'm
Which wants to make a point?
Yeah, I just complete my point that if this West Asia conflict does not extend further, and if this current crude oil price of $78-79 is right and is headed between say 75 and 80, I think we can make a new high.
So you're saying a new high for the Nifty 50?
Yes.
And by when do you anticipate this happening?
So that depends on...
very difficult for a fundamental analyst to say.
So I'm not looking at charts. I'm very weak at predicting Nifty levels and all that. I'm just saying the way results are coming, the way Indian corporates are performing in this kind of geopolitical uncertainty and so many headwinds. I think we are set to go much higher.
This year?
Yeah, this year.
This year. Okay. All right.
Kush, on the charts, if you have to talk about consumption and an add-on to Parag Bhai's statement in terms of Nifty.
I was going to set it up very beautifully, saying Parag Bhai is going to talk about something that he rarely does, which is Nifty, and he's already mentioned it. That abhi to mereko yahan se naya high lag raha hai, which I think is a headline now.
Oil has to stay low. That is a caveat.
With all the caveats, of course. No, consumption, I think broadly is yet to pick up, if you ask me. But if I had to, from momentum perspective, I would pick Nestle and Marico. And from a rebound perspective, I would look at Britannia, perhaps even Colgate. So yeah, that's the quick word on consumption.
Okay, let's head across now to Somit Sarkar. He's been waiting by to tell you what he's hearing from the dealing rooms, and I'm sure that it's an exciting time at this moment, but even the dealing rooms trying to figure out the last few minutes of trade, Somit. But what are the individual counters that you're looking at this morning?
Well, the first stock on the list is Sedemac Mechatronics. Now, dealers are expecting a block deal to happen very soon on this counter. For trend, despite the weakness that we had seen in trade yesterday, this stock was gaining, despite the weakness in the consumption space, this stock continued to gain, and dealers believe that there could be some positive news flow here. They're expecting a positive note to come in from an MNC broking firm. So keep an eye out for trend in trade. For Anantraj and Gujarat Fluoro, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating both these counters, and delivery volumes are also seen on the higher side. And when it comes to Godrej Consumers, dealers are expecting a strong Q1 numbers. Despite the fact the stock was down yesterday, dealers are expecting strong Q1 numbers to come in from Godrej Consumer. And yesterday we did indicate about Nykaa that the numbers could come out to be strong, and the Q1 numbers are quite strong. And in fact, all the brokerages have reiterated their ratings and have hiked the target price marginally for Nykaa.
Okay, interesting names there. Thank you, Somit, for that. In fact, couple of names from what Somit has actually mentioned, I want to pick up with Parag Bhai as well. Parag Bhai, trend. There is weakness in overall market. Trend has been gaining, and there is positive news flow that is expected. So, any view on that one? And you have Godrej Consumers as well. Strong Q1.
So Godrej Consumer is a portfolio stock, so I'll comment on it. So I wish that what Somit is saying comes true because it is there in my portfolio. And plus crude oil falling down, so along with that palm oil cooling off is also helpful for them. And based on the business update, I would have guessed they will do a 12-13% EBITDA growth. If what Samit is saying is right, it should be 14, 15 or higher number. And if that is the case and crude oil is falling, it's a very good combination for Godrej Consumer. Second, what you asked for is Trent. So Trent it remains a great company. It's slightly overvalued like Nyka's of the world, and the market just wants that above 20% growth number, right? Whenever they'll deliver it, suddenly the stock will move. The market is not happy with that 17%.
No, but consistency is going to be key.
Yeah, see, they are
one quarter
good.
of 20% is not good enough.
No, but see, once they get back that above 20% growth, they'll continue, I think. So I think it's just a matter of time. But still, I find it a little bit expensive, so I'm not a buyer right now in that stock.
Yeah, that's fair. All right. But it's come off quite dramatically from the all-time highs. Let's talk about LIC, because this is an interesting update. The OFS, the offer for sale, it kicked off yesterday, of course, for the non-retail component, and cumulative flows of $800 million were expected. They've actually seen an inflow of about $18 million for the Nifty indices. This is actually, I'm not actually certain what this is. Let's talk about the fact that LIC is a potential contender, rather, for the Nifty Next 50 and the Nifty 100, and that's something that could see inflows of upwards of $100 million. The LIC could also make it to the MSCI index as the green shoe option is exercised. The provision states for the MSCI that the post-public offerings or corporate actions, if the market cap and the free float market cap is at 1.8x the normal cutoffs, they will consider the stock irrespective of the free float being less than 15%. All right. So therefore, on account of this issue and the fact that the green shoe option has also been subscribed, there is a possibility for an inclusion. It could take as much as 10 working days post the completion of the deal. LIC seems likely to qualify for the same, and in fact, it should see a $450 to $500 million or thereabouts in the way of inclusion if that does take place. So that's an interesting update.
It's interesting, and the question is, in spite of the size, the demand is so high, right?
I can tell you, if the demand size would have been 50,000 crore, it would have been subscribed. It's a master stroke by government. Just they got 31,500 crore.
Correct.
And the biggest overhang in India's largest and irreplicable franchise got removed. Biggest overhang. Everybody was waiting for this block to happen, and now they have got good time to sell another 15%, right?
Correct.
Now they are at 90%. So there is no urgency to sell for next 2 to 3 years, and it is available at 0.5 times embedded value, and we are talking about, at least I am talking about, Nifty touching new high. So LIC is the biggest beneficiary of that.
Absolutely. And
so
good amount of passive flows also this will attract, right? That's what you're talking about.
Flow aayega ki nahi aayega, it is a buy.
It is a buy in terms of
table thumping buy.
Table thumping,
we should have that.
We should have that. Kush, for you, should I give you a table thumping, or should it be the new
the celebration?
The celebration one.
I love that table thumping graphic. That is so awesome. You can play it again and again, perhaps. No, but for me, this is not really a positional trade. This is more of a rebound trade. The stock was consolidating, has been consolidating. On the downside, you've got 360, 370 as that range. On the upside, 450. It's closer to that lower end of the band, so the risk-reward ratio becomes positive. So maybe you could play for that. Right now, not as convinced as Parag bhai is कि बहुत बड़ा move आएगा यहाँ पे. 450 तक I think is a reasonable move. Beyond that, the trend could turn. So if it closes above that, is when we see the more momentum play come in. Right now, a favorable risk-reward ratio and hence a trading bet. Just a quick word, by the way. Yesterday, as Alex and Hiral mentioned, FIIs were buyers in the cash segment for the 6th straight session. Now, the reason I mention this here, because of course, these deals and a couple of others also had their part, in FIIs being net buyers yesterday. But the previous 5 days, this is turning out to be a trend. Let me not jinx it, right? But this is turning out to be a trend. We've seen them reduce their index short positions also from 90 to 93%. They are now at 87%. So things seem to be turning favorably from that perspective also. So yeah, momentum could actually build up in Nifty, even Bank Nifty.
Okay, so that's with regards to where the momentum that we could see overall in terms of markets. Very quickly, the other names that we want to talk about as well is a dredging corp. If we can pull up that one, Deepak Nitrite. Deepak Nitrite, 36% revenue growth. You're talking about, I just went to Deepak Nitrite, I know. EBITDA margins have improved substantially, in fact, more than double, 21% versus 10%. Profits, 345 crores versus 112 crores. Now, in the phenolics, that's what has seen a sharp margin expansion. Your EBIT is up around 254%. And Deepak Chemtech has approved a greenfield BPA project with a capacity of up to 240 kilotons, I think KTA, and with an investment of 2,500 crores. Sheela Foam is another one that you should be watching out for. Revenues are up around 25-26%. EBITDA margins, good amount of improvement there. And even in terms of your profitability, nearly 10 times. Lastly, Dredging Corp revenues down 25%. Your EBITDA margins have dipped as well. Profits are down 87%. So there is some bit of pressure that you could see in terms of Dredging Corp as well in today's session. Kush, on the charts, any of the three names where you're seeing any action?
So, as far as Deepak Nitrite goes, remember in the last 4 years, it's actually not gone anywhere. This is exactly at the level where it was in 2021 or thereabouts, right? So you know that this is not a positional play. If you do get any bump up, you're better off booking profits in this one. Sheela Foam, by the way, has had a good run. It's broken out of a falling channel, golden crossover on this one. So I would perhaps be a little more excited towards, Sheela Foam. I think resistance is on the way up. Positional ones, 900 and above. So yeah, if you have a position, continue to hold, keep stop losses at about 700 or thereabouts, but this one could perhaps have some uptick, even if there's a discount or even if there's a dip. As long as it holds 700, I think this is in a good state.
Okay, let's talk about BSE as well, because it posted numbers. Parag bhai, did you see the numbers, and if so, what do you think?
I have not seen in much detail. Sorry.
Okay, but let's so we'll bring that up for you in just a bit. But let's talk about the charts and how does it look right now? Would you suggest a fresh entry?
In fact, the primary trend for this one is very much intact. I know you've had a dip on this one in about 6, 7. Out of the last, or rather 6 out of the last 7 weekly closes have been negative on this one. But if you see the weekly setup, the stock has a tendency of rebounding from a 20-week average support level or perhaps even the 50-week average support level. Right now, you're seeing signs of recovery. From a positional trade perspective, I don't think this is a bad entry point. 33.50, that's your stop loss on the way up. You could have moved towards 4,000 and the recent swing of 4,300. So this is a good dip for you to nibble into BSE. It could perhaps have some sideways consolidation, but like I said, a good entry point.
Okay, all right. While we're speaking about BSE, let's head across to Sharad Dubey now. He's looked at the numbers very closely and he's here to tell you where they stack up. It looked like a pretty strong number, Sharad, but what is the fine print?
That's right, Alex. For the 12th straight quarter, the numbers have been pretty strong. And interestingly, if you look at the sequential numbers, this has beat the street estimates also. High volatility was there because of the Q1 index options. Average daily turnover, those levels went up. It was up almost 2%. The highest sequential staff and tech expense was actually offset by lower other expenses, and because of that, better operating leverage was there. That's why you're seeing the margins going up on a sequential basis. But however, the industry volumes have come down. They have declined due to the recent regulations which were there, and the cash average daily turnover, however, has improved for BSE, and slight market share gain is also there. But from the management expectations, two important things has come. The first is they're targeting a double-digit cash market share by early calendar year 2027, especially with the common contract note adoption, best price execution, and rising institutional and IPO participation. And also they're expecting the current 500 rack capacity to be sufficient at least for the next 1.5 years. So bullish commentary coming in from the management as well.
Okay, so that's with regards to BSE. I mean, interesting set of numbers. 2.5% is what pre-open is indicating. Parag, from what Sharad just mentioned, anything that you would want to add in terms of BSE?
No, so basically this is not the stock which I don't track. I find it a little bit expensive. So.
Okay. So valuations looking expensive. Kalyan Jewellers is what I want to pick up along. I mean, that stock in pre-open is indicating a downtick of around 10%. They have reported numbers as well. See, Infosystems is another one. A 5% downtick coming in there. HDFC Bank, 3%. Delivery, CAMS, a few of the other names on the upside. Triveni Engineering, 20% is what pre-open is indicating. Go Digit is looking good. Castrol India, Sundaram Fasteners, Nykaa, Deepak Nitrite, a few of the other names that are doing pretty well in trade. So a quick one, Kush. Triveni Engineering, Kalyan Jewellers.
Yeah, avoid Kalyan. run up too much too fast, and then you see sharp gashes on this one. Triveni Engineering, by the way, setting up beautifully right now. By the way, on my charts, it's a little distorted because of the kind of pre-opening rate that is being suggested. So I'd wait for about 9:15 or even 9:08 for that matter, just to give you a very clear view. But this was setting up actually rather beautifully for an uptrend.
Okay, so that's Triveni Engineering. Stay with us. Metro Brands, that's another one that we should be watching out for. If you can just pull up, 11% is what pre-open is indicating. However, your first quarter has seen a strong growth. It's the wedding season demand that has led this kind of growth. And the sentiment somewhere has improved from mid-June 2026 as well. To discuss about the earnings and what has worked, what has not worked, joining us is Nissan Joseph, CEO at Metro Brands. Mr. Joseph, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question to you is, overall profits, that's the only concerning area which has remained kind of flat. I mean, it's just a 4 to 5% downtick there. Margins, again, a mild dip coming in there. However, your revenue growth has been strong. It's the wedding season that has led to this growth. So what are the concerning areas which you anticipate that could continue in the coming quarters as well?
Hero, good morning, and thank you for having me. I wouldn't call it concern areas. Let me break it down for you. First of all, on one side of it, on the revenue side of it, our gross margins last quarter were the highest they've been in the last 5 quarters, coming in at 59.7% gross margins, maintained margin for the business. So I think that's a terrific run-up that we've had. The other thing is our sales per square foot has maintained at right at 443.50 for both quarters, this quarter, the last quarter, and a quarter year ago. Now, on the other side, when you look at our profit delta, it can be explained in four distinct buckets. One of them is we continue to invest in our marketing. We're over-investing in marketing. We continue to do that because we believe that creates long-term value for the business. Number two, there's a shift in treasury income. Last year, we had a great kickoff from the treasury income. This year wasn't as strong. And as you know, we carry quite a bit of treasury. So when you get earnings from that, it blips it up a little bit one way or the other. The other one is, of course, that we've invested heavily in talent. We believe we need leadership talent to run this business up to our aspiration. And last but not least, we definitely had 140 new stores that we opened last year. New stores don't come in at the same rate of performance and the same metrics that your existing mature stores do. So when you look at it from that standpoint, overall, I'm very pleased to see the quarter we had. And more importantly, as we look to the future, across our many brands, across the price points that we serve, we're seeing demand come through. And so we believe we can continue to hit this 15% growth rate and continue to deliver, the 15% margin, not to talk about the 30% EBITDA that we run on a consistent basis.
Very close to that number. Mr. Joseph, thanks so much for taking the time as always. Good morning to you. Just a point on the tailwinds that you benefited from on the GST side, right? One was assuming that would carry out for some time. Are you still witnessing some uplift on account of that advantage that you got?
Yeah, so we never saw a big advantage from tailwinds because a couple of reasons. One is we report net sales, right? So the sales take out the GST impact. And then the other thing is, where we had a GST benefit, we've turned around and passed it on to the consumer, right? So that was not the driver of the tailwind. I think that the drivers to the tailwind that we have is, one is our Clark's business is doing really well. It's come on very strong. We had, other headwinds that we actually countered last quarter, with namely, for example, monsoon was delayed. Last year it hit in May and June. This year it didn't come till late June and in July, which, as you know, monsoon is a big driver for our Crocs business, but that's rebounded in this quarter. So, it's tailwinds and headwinds that we see, Alex. It's just not one thing. But overall, I'm quite pleased to see the quarter come through. I'm quite pleased to see the demand across the multiple banners that we operate, across the different tiers of cities that we operate in.
I was actually referring less to the financial implications and more to the demand scenario and the fact that, and you've essentially laid that out. You said that you did see demand come through in most of the categories that you operate in. And I'm guessing more so in the places where you managed to pass on the benefit to your customers. So therefore, if you can give us a sense of how things look, not necessarily just in FY27, but if you were to project Mr. Joseph, ultimately, people love talking about footwear companies, right? Because that's the one thing you can be sure that people are going to be using even 10 years from now. So therefore, if you were to project heading into FY29, what are the kind of growth rates that you anticipate you'll be able to put together?
Yeah, I think when you look at the vectors that drive the footwear business, one is most of the footwear business, in 70% of it is unorganized, right? And we're going to see that shift go from unorganized to organized retail over a period of time, over those 2 years. And that's where the banners opening stores, the opportunity for them to open stores in multiple geographies across India continues to remain high despite having, have over 1,000 stores today. So that's number one. I think the growing aspirations of the Indian consumer is something that we can cater to, whether you're going from a value priced unorganized retailer to an organized retailer, we have our walkway brands there. If you want to go from that level to a different level, we definitely have the Metro and the Mochi brands there. If you want to go higher than that, in the athletic space, we have the Foot Lockers out there. So we're capturing the market across the different segments, across the different price points. And we really see a long runway for growth for all of our banners. And, we've guided to 15% because, in retail, you blip up, you blip down. Sometimes you're well ahead of that. Sometimes you're a little bit behind. For example, late this quarter, we might have a little bit of dampening because, Diwali shifted out by 2 weeks. That puts us key selling seasons into next quarter, but we'll rebound the next quarter. So overall, though, we're seeing very good demand.
Mr. Joseph, the question that I have is, double-digit revenue growth is what you're already talking about, and we've seen that in the past as well. The profits have not really kept pace. So if you have to look at FY27, do you think it's going to be a year of growth investments, or is it going to be a year of, say, earnings acceleration that you're looking at?
I think we are, first of all, Hiral, I do want to point out that, most of the quarters in the last year, if not all of them, we've outperformed our peers, right? So it's not, while one can take that number for granted from Metro Brands, it's not an easy number to hit. And, the fact that we outperform peers on a consistent basis, or at least on an aggregated basis, it is a reflection of the team and how hard they work. So that's number one. I think from a profit standpoint, if we weren't growing new stores, if we weren't trying to invest in multiple banners, then we would start working on our earnings. But while we have this runway for growth, it's important that we capitalize on that growth, though they don't come in at the same metrics as our existing mature stores. Whatever that might be, our mature stores might be Metro or Walkway. Our mature stores are always much more profitable than our new stores. But that doesn't stop us from investing in new stores. We just want to make sure that as we open stores, those stores are profitable as well.
Mr. Joseph, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time this morning. Well, viewers, joining in a bit late, but in time for the market open and in time for me to be updated that Parag Bhai has also said that the index could hit all-time highs this year itself. I think the tailwinds are set. We were talking about this yesterday, that fundamentally things are looking okay. As the pre-open rates have settled, just a quick check. Deepak Nitrite on expected lines is the top gainer, up 7.4%. Splendid numbers, and maybe we've discussed that already. But that, Sundaram Fasteners, Triveni Engineering, and I remember Kush saying that he would want to give a call on it post the pre-open rates have settled. And Airtel, 2.53% higher. Really strong show by all of those. Before I come to our guest, Sharad, a quick one from you, because you don't normally see Dr. Agarwal's come into focus on a brokerage radar. Why is it that Jefferies has picked this up?
Well, yes, Neeraj, this stock is generally not discussed amongst the brokerages, but Jefferies has upgraded it to buy from hold rating, and even the target price has been hiked from 510 to 600 rupees. They're bullish on the earnings which has come in, especially in the June quarter. The execution was strong. Expansion is continuing across all the regions, and they're expecting a mid-teens volume growth, as well as premiumization angle is also there in this thesis. The SSG growth continues to be robust going ahead, and this upgrade is happening on the faster ramp up of new facilities which are being driven by a strong volume led growth, and that is why Jefferies is bullish on Dr. Agarwal.
So that's Sharad. So interesting one. But I think the ones that deserve a conversation, and Ajit Mishra joining in as well, and we'll get to him too. But I just want to go to Parag Thakkar first. Parag bhai, we're talking about large caps and how well they are doing, because if the index has to do well, large caps have to perform. I have two names for you which you like. I would love to know if they are good to buy, because both of them are in event. Airtel, the event is behind it. The stock is up 2.5% today. Hindalco, 2 events ahead of it. Novelis today,
Novelis
Hindalco
7th,
Friday.
yeah.
Right? What do you do with both of these?
So I hold both of them in truckloads.
What would you do today? If you didn't have them, would you buy them this morning?
No, basically I'm not a momentum chaser, so I'll not buy it.
So you'll not buy Airtel?
I'll not buy Airtel at this price.
And you will not buy Hindalco also?
Because now it has gone up a lot. So just because of that, I'll...
so you would have bought 10% lower?
So that's what, yeah, it is.
The undercurrents into both the Kushbora
are
very
fantastic,
strong. How are they from a trade perspective?
Airtel, you might want to book profit if it's a momentum play. Hindalco, you could still buy. You're still having, these uptrends, key averages being taken out, volumes also very healthy. So yes, at these prices, you could buy for positional targets of 1,080 and about 1,130 as well. Supports at about 995, 985 zone. So Hindalco is a buy at these levels also. Bharti, not so much.
Got Ajit, I want to come to you on a couple of these stocks and the metal pack per se. What would you say about the trajectory of some of these?
Yeah, good morning, Alex. So, Alex, largely if you see that we are seeing rotational buying across sectors. Metal was sitting on the sidelines of late, and we have started seeing fresh traction across the board. So, it's not that one or two names. It's in fact, the majority of the stocks are participating in the move. We were just discussing Hindalco. So, basically that definitely bodes well, in terms of the price action. Means it has recently surpassed its swing high, and we anticipate this 1,060 being the immediate target area with stop at 995. And then we have said also, wherein we are seeing that the stock, after retesting its long-term averages, has formed a fresh buying pivot. It's in fact a negation of a negative candle of late also. So all these factors put together indicate that this recovery is likely to strengthen further. 185, 190 is what we are eyeing as an immediate target zone with stop at 165.
Okay. Top stock call this morning, Ajit?
Yeah, the first is Hindalco because after this consolidation phase, majority of the metal counters are participating and Hindalco is leading from the front. So 1,060 is what we are eyeing as a target zone with 995 as a stop loss. And then we have Siemens also, which has witnessed a sharp breakout after a tried consolidation range around the short-term moving averages. So buying pivot formation basically. So 4,300 means we can anticipate the stock to retest its record high. So with stop at 3,850, one can accumulate Siemens also.
Okay, Siemens and Hindalco, which is becoming a consensus call, will take in Kush's top call post-market open, Ajit's index call post-market open. Here's how the markets are starting off this morning. Policy day. Maybe the markets stay quiet until the policy and, well, what happens post that remains to be seen based on the commentary, but not a bad start. Remember, we continue to see, viewers, this dichotomy, if you will, between the Nifty and the Sensex for a few days until this whole cash session settles down. I think there's a lot of debate around it. I don't want to add more to it. But the index is, Nifty is flat. The breadth is very positive. 1497 to 327. That is extremely strong market breadth, really. Almost as if the index was up about 1% or more than that. The bank Nifty is flattish. IT index should come up on your screen for a moment. Just want to mark that and just want to see if the Nifty auto is still building on simply because the monthly numbers, sales numbers are so strong. Yes, indeed, 1/3%. Let's get the heat map up on the screen. Airtel would be one on the radar and see what that is doing. It is amongst the top three, but yes, on expected lines, Interglobe Aviation and Larsen & Toubro, top of the pile. Again, you could argue that geopolitics is the reason for it. For Indigo, it is crude price. For L&T, anything getting resolved in the Middle East is also a bit of a tailwind. Shriram Finance, Wipro, Bajaj Finance are amongst the others. This one too is not letting go, by the way. There are enough people who said that maybe it might be good to book profits here, but Bajaj Finance is smacking of some bit of institutional buying activity over the last 1 month. Even Stevenson gainers and losers. What is losing out? Apollo Hospitals 2%, Nestle about 1.5%. SBI Life comes off, and there is a fair degree of announcements on insurance, not on the life insurance but on general insurance. But be that as it may, SBI Life is down and TCS is negating what Wipro is trying to do on the IT pack. So that's the large cap space. Crude beneficiaries, Alex, essentially, or Middle East beneficiaries, if you will, and Airtel.
But you know what, Neeraj, I think we're going to have to get used to the fact that you will see different percentage change numbers for the benchmarks. And I think that's just something that we're going to have to live with for some time. Let's talk about the sectoral indices, right? And let's take a look at what's moving today. It's much more green on the screen than you saw yesterday. In fact, yesterday you had just about 3 or 4 indices that were in the green. It's a very different screen today. Realty, which was the bottommost index yesterday, is once again in ascendance. It's up about 1.6% or thereabouts. Small cap index is doing okay. You have the PSU banking pack that's once again at the forefront, but gains of about 0.6%. Metal, on account of some of the names that we've already mentioned, is likely up and about. And on the downside, you have FMCG. This is likely on the back of Nestle, which is down over 1% or so. It's the worst performer in the Nifty 50, and because of the weight that it has. But I'd be curious to find out what Marico is doing. We'll find out soon enough. In fact, let's jump straight into the earnings reactions, and a few of these stand out. So let's look at Castrol, for example, where you've had strong volume growth that has come through. It's up about 2.5% or so. Nykaa is something that we spoke about this morning as well. It's had its fashion segment GMV that has gone up as much as 53%. So let's pull up that stock. Let's talk about Nykaa. Let's talk about Marico. Interesting, very interesting that Marico is down about 2% or thereabouts. BSE also had a decent set of numbers, but it's still down about 0.2% or so. L&T, Beck, Avalon Tech, Uniparts India all had turnaround quarters. L&T, Beck seems to be the stock of the day so far, 20% up at this moment. Uniparts also doing well, up about 4% or thereabouts. Let's look at Ask Automotive, revenue uptick of as much as 52%, doing well. Deepak Nitrite also had a strong growth in especially its phenolics segment, and this is something that was on Neeraj's watch list and he told you about today. PTC India announces a 23 rupee dividend, which is quite substantial, 13% yield, but the weak numbers are something that you should pay attention to. Don't just focus on the dividend payout. In terms of underperformers, and there are a couple of them as well, Dredging Corporation of India is one, but Wellspun Enterprises is the one that is really taking it on the chin. It is a demand downtick that they have witnessed and had to bear with this quarter. So that's the earnings reactions. Hiral, I'm wondering whether any of the other corporate actions have evinced a reaction. I didn't see too many, but I'm guessing that there will be a few movers in the broader markets as well.
Absolutely. You know, I mean, what I want to point out towards is the insurance players, as Neeraj was alluding to. You have Go Digit General as well, which is up 8.5%. Let's pull up our ICICI Lombard as well. And this is entirely in terms of the Supreme Court verdict, where there are multiple positives that are coming in for motor insurance companies. And a couple of brokerages are also indicating that this will lead to higher investment leverage and float income, driving 2 to 5% higher PAT for Go Digit and ICICI Lombard. So both of these counters that are in focus, where Go Digit is going to be the larger beneficiary out of this. Apart from these names, what's really moving in the markets, you have, I mean, LIC seeming absolutely flat right now. Happiest Mind is seeing some good moves. PNB Housing is what is looking good as well. Oil India is down in trade. In fact, let's go across to Ajit Mishra as well. Ajit, with the way markets have opened right now, what would the key levels or your top picks be at this hour now?
So after this, recent move in the index, we believe that the consolidation that we were seeing from last, couple of months, that is over now. Means we are still not decisively, holding about 24,600 mark, but broadly, the way we are maintaining up the long-term averages, this indicates that the consolidation phase is over, and 25,200 is something that the market is heading towards too. So with stop at 24,400, one can continue with buy on dips approach when it comes to the index. Banking is also largely aligned, means barring FMCG, all these sectors are participating in the move. So for banking, it's 57,300, 400 zone where we see the support, and 58,800 is something that we are eyeing the target zone. So the risk reward is favorable for both the indices. Now coming to the overall structural positioning on the stock specific front, as you rightly mentioned that broader markets are doing relatively well. So we have Indian Hotel, which is trading in a very tight band, and indications are now in the favor that we could see a fresh up move. So here with small stop at 735, one can look for fresh long position in Indian Hotel, and 780.85 is what we are eyeing at the target area. And then we have Shriram Finance, which is currently hovering around its record high zone. So it's a retest of the record high. So consolidation might happen, but broadly the tone looks very positive. So accumulation in the range of 1,080 to 1,100 with stop at 1,040 and positional target of 1,200 plus.
We've done things in reverse, Ajit, this morning, but since now we've had the benchmark open for some few minutes now, what is the index strategy that you would suggest for the benchmark Nifty 50? And let me throw in also the Bank Nifty.
Yeah, so Alex, like what we have recommended, that the broader tone looks positive, means the pace of advance might not be the same, which we usually used to see, once we see a breakout, but broadly the tone looks positive. So 25,000 is what we are eyeing in next. So accumulation or buying on dips is something that you should continue with. 24,400 now being the base. So the risk reward is favorable when it comes to the index. Banking also largely trading in tandem with the trend. So 58,000 is definitely an immediate hurdle, but broadly indications are in the favor of 58,800 to be retested soon. So here with stop at 57,400, one can accumulate or go long in banking index as well.
Okay. Some interesting moves, as we said, and ignore the percentage moves on the Nifty and the Sensex. Look at the levels for the next few days until this whole cash system stabilizes. MCX is 3.5% lower. Marico is 3.5% lower, so keep that in mind. I think Alex pointed it out. And there's a bit of a cool off. I think the other trend that we're seeing is that stocks in which the market suspects that the results are seasonal are seeing a cool off from the highs. You saw that in G Shipping yesterday when the stock had started off very high and then came off. You're seeing that in Deepak Nitrite today, wherein the stock started off about 7 or 8% higher on a blistering set of numbers. It's come off a little bit, is now up about 4%. But it's a stock that's shown some trend. Not quite able to break 1800, maybe Kush Bora. Opening thoughts and a call on Deepak Nitrite.
Let's start with Deepak Nitrite. Like I said before, it opened. 4 साल से कुछ return नहीं बना है. I don't really like that kind of a move on a stock, right? So this is more of a momentum play from a very near-term perspective. And we said, positionally मत hold करो, profit book कर लेना. By the way, to add to your list, look at Bharti Airtel. The opening was at 30, 31, and then you're already seeing that dip. So I think you rightly identified that it's becoming a trend where the factoring happens, the result factoring happens early, before or as a lead up to the result itself. Now coming to the Nifty views, for the next few sessions until this settles, I think you should ignore the, as you rightly said, percentage move. In fact, I would suggest go a step ahead in your watch lists, add Nifty futures and Bank Nifty futures. Right now, they are a true indicator of what the Nifty level or Nifty gain is. Now, while Nifty is looking flat with a very modest gain of 9 points, Bank Nifty futures is actually showing you the true picture, which is actually 0.5% higher, 0.06% higher. If you combine that with what's happening in the broader markets, right, the breadth is very positive. That's the kind of true picture of what's really happening in the market. I could also suggest, tracking the synthetic futures on Nifty, but I think the Nifty futures way is the Nifty futures is an easier way to go about it. So just add Nifty futures and Bank Nifty futures to your watch list, and for the next few sessions, track that to get a true picture of how the Nifty is actually behaving or reacting. Just to reiterate the view, still positive. We've had a decent up move on the Nifty, but I think 24,800, 25,000 on the Nifty very much on the cards. And because the opening is not about those 200 points up, you could still go long. Place your stop loss not at about 24,400 now, bump it up. 24,500 is your stop loss. That's the support zone that you should look for on the Nifty.
Okay. Parag bhai, Airtel doesn't have an uptrend. It has come off from the eyes of the day. No, just kidding. But Parag bhai,
that's why I said I'll not buy at a higher price.
Yeah. Which is a great call there. Parag bhai, but some of these chemical names. And now one is that that almost all of these will be seasonal, etc. But the companies are utilizing cash flows for doing backward integration. We've seen that with 2 or 3 other firms. We're seeing that in an announcement of Deepak as well today, where they are moving into the backward integration of phenol. Because these stocks haven't done too much and the earnings and the gross blocks have moved up, is it a good time to look at the chemical sector?
Might be. I'm not too confident about chemical call because in some cases there are inventory gains also.
Agreed.
We have to actually see chemical by chemical that where China is dumping, where China is not dumping, and take the call that way, because it is like pharma, right? You have to do bottom up.
So it is not in this circle of competitiveness.
No, what I'm trying to say is, see, one should widen the circle of competence, right? So I'm trying to widen it. But the point is that in some of the results I saw, it was inventory gain. And that's why stocks also cooled off after showing very good results.
Right, in terms of, okay, so Deepak Nitrite is what you're talking about as well right now. But motor insurance reforms by the Supreme Court directions have come in, and they are mandating third-party insurance period extended for new vehicles, and this will be new cars that will be getting 4 years of third-party insurance up from current 3 years. New two-wheelers to get 6 years of third-party insurance up from 5 years as well. Now, the Supreme Court is proposing pilot project to link fuel purchases with valid motor insurance as well, and uninsured vehicles may be denied fuel under the pilot project. Now, basis this, you have two brokerages which have come out with their reports. Jefferies is saying that there are multiple positives for motor insurance from the Supreme Court verdict, and this will lead to higher investment leverage and float income, driving almost 2 to 5% higher PAT for Go Digit and ICICI Lombard. In fact, Go Digit being a larger beneficiary. Apart from that, what they are saying, you have a UBS as well, and they have a note on ICICI Lombard where they are saying that the Supreme Court ruling provides a positive sentiment catalyst, and it mandates longer motor third-party cover as well. So again, two positive notes coming in on both these names. Parag bhai, any view when it comes to these insurance names, specifically from a motor vehicle perspective?
Yeah, so it is a minor benefit, and Go Digit and ICICI Lombard are the beneficiaries. ICICI Lombard has fallen significantly after this result. So it might be a good tactical 10-15% play.
Okay, and specifically the challenge that is being posed by new digital players in the space, and the fact that they're circumventing the dealers that have traditionally sold motor insurance. It's a big challenge in motor insurance, more than any other insurance, right? Yes. So therefore, would you be wary of that?
So basically I'm not buying into this theme of general insurance. I'll stick to LIC right
Stick to LIC. All right.
What is LIC, by the way, today? It's flat. Still have the chance to buy.
Okay. Still have a chance to buy after the 8% downtick yesterday. Let's talk about Godrej Properties when we're talking about numbers, and let's bring in Mahima, who's joining in to tell you about what stood out with the numbers. And their stock is up and about. It's up as much as 4%. Mahima?
Right, so overall, if you take a look at how Q1 has panned out for Godrej Properties, all in all, it was a decent performance. But I think what's, making the stock run that 4% mark that we're seeing on the screen is largely on account of the operational metrics, which have done very well. Overall, even business development launches, remain very healthy, and collections have also risen. If we talk about the operational metrics, pre-sales has gone up by 22%. The FY27 guidance is at 39,000 crore. Collection has also gone up by around 18%, and the guidance here is of around 24,000 crore for the entire FY27. In terms of launches, they launched projects worth 10,500 crore GDV in just Q1. So all of that looking very healthy.
Okay. Thank you so much for that, Mahima, for setting the context up. And before we go to the management to discuss more, thank you, Parag bhai, thank you, Kush, and thank you, Ajit, as well, for joining in. I mean, it's always good to get the views. And the highlight today, as Kush would mention, is Parag bhai's nifty target of what he's actually watching out for. So that's with regards to where. A thank you goes to all our guests as well. But Godrej Properties, let's pull up that one on the screens. You know, why this one is interesting is because there is a huge divergence that we're seeing in terms of the sales collection versus the profitability as well, because at EBITDA level, they've still not broken even in a couple of the projects. Gaurav Pandey, MD and CEO at Godrej Properties, joins in. Gaurav, welcome to the show, and always a pleasure to speak to you. We've seen that divergence which has come in as well in terms of the way numbers have looked like. But let's start with your collections. 18% growth, which is healthy. You've entered the year with close to 1,500 crores in pending land payments, and this is for older deals. Given the EBITDA loss that you have in this quarter, is your current cash generation strong enough to actually fund your new land acquisitions without significantly spiking your net debt?
I think the two ways to fund land acquisition. One is through generating good cash flows and creating operating cash flows to fund acquisition. And second is the debt headroom that you may want to use to drive growth. I think we're strong on both the perspectives. We've given a guidance of 24,000 crores of collections, and give or take that will lead to close to 9,000 plus crores of operating cash flow within the year, if we of course ensure that the construction spends are happening on time and projects are completing well on time within the year in terms of different collectible milestones. So that's one bucket that will fuel growth. And the second is, we've set a upper limit of net debt ceiling of 10,000 crores, which would mean give or take net debt to equity of about 0.54 or 0.55. But still, we have a strong opportunity of almost using 3,500 crores if we want to fuel growth. But you basically look at growth as a lever only if you feel opportunities are as exciting for every return, for every money that you invest. So at the moment, there's no compulsion to drive acquisitions per se. But yeah, I mean, we do continue to see great opportunities and we buy, but within these guardrails that we set for ourselves.
Okay, so that's the guardrails that you've set for yourself. But if you're talking about a couple of the projects which have to beat recognition as well, when do you expect that recognition mix to actually turn EBITDA positive?
I think here you have to understand, like I was explaining some time back, on how the accounting process works. And in this year, we've also given our very strong indication of how the revenue recognition could look like. So to give you a sense, in FY25 and 26, the revenue recognition that happened on a P&L side was through a booking value of give or take 15,000 crores, where our economic interest in those booking value was about 74%. In this financial, which is FY26 and 27, the P&L will recognize a revenue of approximately 40,000 crores of revenue, which is where we have an economic interest in those projects in the range of 85 to 90%. So you can clearly estimate that the entire uplift of EBITDA to PAT is going to be quite explosive. And that is something we'll see in the next 15 to 24 months sort of a period, which we've entered now.
Okay. And if you have to talk about the success as well right now, or not only for Godrej, for other companies as well, high ticket premium luxury housing in regions like NCR is something which is really working. So are you seeing any signs of buyer fatigue or oversupply now in the luxury segment?
I think first of all, there is demand play across different cities that works with different, reasons why a demand flies up, and which is something like a product market fit. To give you a sense, the market is overall looking very strong, with the exception of Gurgaon. Most cities in Q1 have seen a total volume, talking about market aggregate level, at about sales as about 10 to 25% growth, which is one of the highest numbers that you can see from a market perspective. Gurgaon has seen a marginal slowdown in Q1 purely because the supply has come less, and Q2 we'll see a lot of supply, and I won't be surprised that Gurgaon will see a good comeback from a overall absorption perspective. And again, there are different degrees of performance. So markets like Bangalore and Noida and Hyderabad are clearly doing extraordinarily well, and certain micro markets of Mumbai like South Bombay, western suburbs, and Thane is doing very well. And then there are different markets and different maturity cycle, different stages of maturity which are behaving different ways. So again, it is very contextual, but yeah, I mean, fair to say that the market environment is slightly more positive as we enter this year than what it was, say, 12 to 24 months back. But yeah, I mean, one has to, of course, ensure that there's good product market fit. As far as the question of luxury goes, luxury is also a very widely and misused term. Luxury is also very relative in a particular geography. I would say there is demand across segments, from mid-market to premium to luxury. And I think there are developers who are focusing on different segments in different micro markets. So if you're doing something in Worli, like for us, we do have a real luxury project in Worli or Golf Course Road. But there are many micro markets where we are focused, and consciously mostly in premium plus particular category. So there is great demand in luxury, but there is probably stronger demand where the bulk of India's population wealth aggregation is happening, which is the premium and premium plus segment, as we linguistically call. But it is unfair to say that there is lack of demand in one particular segment over other. I think it's mostly a micro market specific question and a developer strategy about it.
Okay, so basically that's from a demand perspective. In terms of the impact of the West Asia crisis, the geopolitical concerns, which you've mentioned in the past as well, that you're watching it pretty closely, are you seeing any sentiment impact right now in terms of business, or are there concerns on the supply chain side as well?
I think when the conflict started, I would say last 2 weeks of March, there was a sentiment drop through Middle East-led NRI sales, as they call it. But that sort of got very normalized by April per se. And today, if you ask me, Middle East specific customers are structurally looking at very, very differently. I mean, the closest parallel I can think of is more like COVID, when people started buying houses more for psychological needs than financial investment product per se. I think it's very similar in Middle East that, say, a large section of NRIs were looking either for long-term stay for themselves when they retire or mostly investments. I think that thesis is now getting drifted more towards looking at coming back to India or not. I think there's a structural shift we might see in Middle East, but still very early to really sort of comment. On the supply side, there were, of course, disruptions, I would say, across sectors, but things started normalizing, say, about June and July. In fact, in prices for, say, products like steel have actually come down to February levels, and in fact reduced to February levels. But yet there's some products which saw supply shortages in tiles and marbles. But again, that supply side constraint has also got resolved between later part of June and July. It's been more or less normal. So I would say, yeah, I mean, there were some disruptions in April and May. And there is some amount of cost increase in certain products, but they have started seeing a reversal trend already, and supply side disruptions have minimized now.
Okay, so disruptions have minimized. Now, my other question to you is in terms of whatever disruptions that have come in on the supply side, I'm sure that's had a bearing in terms of pricing or in terms of costs. Are there any plans to take price hikes that could be on the annual, or do you think whatever increase that you've seen is something that is manageable?
I mean, price is very demand-led, and it is a good way to hedge the cost. I mean, to give you a rule of thumb, if theoretically, if the cost base were to be like this for the longest time and the conflict were not to resolve, I mean, we've done an assessment, it kind of eats away just 0.1% of profit margin per quarter. And I mean, even if it continues for maybe 6 or 8 quarters, it is not more than, in current context, not more than 1%, which easily can be managed. But of course, in some projects, you can do it because there is strong demand, and some projects you cannot do if it's very price sensitive product category. I think our pricing strategy is not just driven because of this constraint. I think wherever we see there are good opportunities to increase pricing, we've done that very consistently. But where we don't see, just because to manage a 0.1% margin potential risk, you don't take a knee-jerk reaction. You assess the demand environment and then take a call. So it's going to be a very project specific call, but I don't see this as a very material risk at the moment. But yes, if the crisis continues, it's all rates go to like $200, I mean, then we're talking a very different problem altogether, which I see hopefully happening right now.
Okay. So my last question then to you is, in terms of the targets that you have for regards to pre-sales, the ROEs, with the velocity of growth that you're seeing, does anything change?
I mean, not really. I mean, it's too early to make a projections of what can happen next 18-24 months. I think we'll take one step at a time to project for FY28. But I think for this year, for sure, we are very driven towards delivering upon what we've given as a guidance. There is some amount of upside risk, but I think we've just done Q1 with a 22% growth against what we would have given as a guidance for the year. But I would still like to see 1 quarter time, and hopefully we would. Our endeavor, of course, is to beat the guidance and over deliver. But I mean, it's too hasty to reassess whether we want to give a specific number. But yes, there is some upside risk.
All right, so there could be a potential upside risk, and that's the key that you should be watching out for. But thank you so much for joining in. Always a pleasure to speak to you, Gaurav, and looking forward for many such conversations going forward. The stock, Neeraj, at the day's highest levels, 4.5% up move coming in there. But we'll quickly, in fact, go to the next one, which is Castrol India. Let's pull up that one on the screens and see what a Castrol is doing in trade. 3.5% up move coming in there. Puneet joins us to tell us what has really worked for a Castrol India this time around. Puneet, what are you picking up?
Well, thank you for that. Well, it's a good quarter for the company. Revenue is up 21%, and just the margins maintained at that 26.4% versus 21.4% on a quarter-on-quarter basis. So despite the volatility, especially that we've seen on the crude oil side, margins continue to be maintained. They will also, of course, pay an interim dividend of 6.25, but it's important, and we'll be speaking to the management today at 11:15 to understand the volume growth picture of the company. Now, it's Priya Gulf Oil reported a 17% volume growth, so they will be letting us, they will of course mention about this in the conversation, but important to get in that perspective, as well as what to expect on margins, because in a quarter where there has been a lot of volatility, despite that, if the margins are continued to be through, could this be replicated over the next couple of quarters will be something to watch. But a very good quarter for the company. It'll be important to mention the volume growth number, and that'll be something that we'll be watching out for.
Okay, so that's with regards to where Castrol India goes. But moving on, Cummins India is another one that you should be watching out for in trade today. They will be reporting their numbers as well. The stock is at the day's highest levels ahead of the numbers. Now, what you should be looking out for? First up, Q4, it is a hyperscaler delivery that is unlikely to recover what we saw. I mean, what we saw in the first quarter is unlikely to be delivered in the first quarter of FY27. The power generation demand is what has been driven by data centers. Railways mining recovery is going to be boosting industrial demand as well. The commodity inflation could potentially weigh in on the margins, and West Asia disruptions could hurt export growth. The revenue number is seen at around 3,200 odd crores, EBITDA at around 674 odd crores, which is up around 8%. Margins are at 21% as well. But before we continue with this one, those are live visuals that are picking up. But the RBI governor is just walking in right now, and we're just probably 15 to 20 minutes away from this speech. I think the key, Neeraj and Alex, is going to be yes, earnings is important, but the commentary when it comes to the monetary policy is what we're watching out for. The status quo is what the majority is saying.
I would guess that's the safest assumption to do. Let's see if there is any surprise out there or no. But the key question will be that whether that surprise comes with a surprise commentary, or is it, how do I say, status quo with maybe a surprise in the commentary. I think that those are possibly the two outcomes that you talk about, if you will. Okay, what we're getting ready for the policy, what we do is take a break, come back, full tilt towards the MPC decision and the commentary. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Welcome to the policy coverage on NDTV Profit, and the next 45 minutes we'll preempt what the meaning of some of the moves could be, get you the policy statement and the governor's speech, of course, and then, of course, dissect the policy for the subsequent 30 minutes. Remember that the pre-policy poll, almost everybody said that the MPC is likely to hold the repo rate steady at about 5.25% and may continue with the neutral stance as well. And guys, while there is this West Asia conflict uncertainty, so on and so forth, it shouldn't surprise too many people if that is indeed the stance, because globally as well, you're not seeing too much of a strong reaction, if you will, to the conflict-related developments that have happened. So this is probably par for the course.
It is, and very interesting to note, Neeraj and Hiral, that in the recent past, you've seen treasury yields in the US come off from those elevated levels as well. And I think we spoke about it a couple of weeks back, where that 4.7% mark and that 5.2% mark for the 30-year in the US is something to watch very closely. And the easing out of geopolitical tension, the fall in crude oil prices, all of those have meant that yields across the board have cooled off, and from India's perspective as well, there's certainly something to bear in mind. Remember that the RBI is projecting for the full year FY27 crude oil at $95 to the barrel, and so it'll be interesting to find out whether they've adjusted that at all. It's unlikely that they will. There could, of course, be a change in their inflation projection in the full year based on what you saw in the first quarter, because it came in slightly lower than expected. Jayesh Mehta, Vice Chairman and Chief Executive Officer, bless you, Neeraj, of DSP Finance, and Upasana Chachra, Chief India Economist at Morgan Stanley, joining us just ahead of the policy. Good morning to the both of you. Upasana, I'll come to you first. I'm guessing you're assuming, or your base assumption is that there will be a status quo. But beyond that, is there anything else that you will look for in the commentary that will give you a sense of what to expect in the rest of FY27?
Yeah, thanks. Good morning. So yes, our view, I think, as is with the consensus, is for a status quo on rates and pretty much status quo across the board in terms of stance. And I think also in terms of growth inflation numbers, I don't really think they will be tweaking it this time around. Though incoming data on growth has been actually pretty solid, and if anything, then growth has to be revised upwards. And on inflation also, tracking numbers are below where RBI was tracking, say, for the past quarter. So again, if anything, there is a downward bias towards inflation. But given at the margin the uncertainties that still prevail from both the Iran conflict and the uncertainty from the ongoing monsoon season, I think it's probably likely that RBI maintains these numbers. I think from a forward outlook perspective, of course, policy guidance will be important. And I think in this, we will be watching out for the tone of the policy. How neutral is the pause, or is there any bias towards indicating a change in stance or policy rates moving up higher over the course of the year? And how does RBI view the incoming data in terms of, the strength of the economy? Does that, in their view, sustain or not? And also from an inflation perspective, how, where are the bias towards the risk? Is it still towards the upside? Because I think these are the finer nuances that will be important to assess which way policy rate trajectory can be in the next couple of meetings. And apart from this, I think any mention around liquidity management, especially given the inflows on the capital flows side that we are seeing from the RBI measures and the windows that it has opened up, I think that, again, I don't think there will be a decisive roadmap right now that will be laid out, but yes, watching out for any commentary on liquidity management.
Thank you, Upasana, for that. Let me get in Jayesh Mehta as well. Jayesh, good morning. Taking cues from what Upasana is indicating right now, what's the bigger risk today if you had to look at it? Would it be inflation forcing the RBI's hands, or would you look at growth slowing because the policy stays tight for pretty long?
So I think both inflation definitely looks downward trajectory, but even if you, as Upasana said, maybe they will not change it right now at this juncture. They will maintain the same inflation roadmap which they had mentioned last time. And from that perspective, I think, of course, very clearly status quo this policy, and in fact, I would say the whole of FY27. In terms of growth, yes, the growth has been better than expected, but second quarter is kind of, people are expecting some lower down. So maybe not this policy, but they may revise it up if required in the next policy if the things does not get global things does not get worsened from here. But at this juncture, it looks pretty good. But that is, as I said, like this juncture, and like the way the geopoliticals are moving, I think every day is a new change. But yeah, as of today, even if there was some mildly, even if we were in last week where it was slightly different scenario, I would not expect RBI to hike rate. And in past also we have seen, whenever it is something to do with global kind of situation, we don't really make the rate changes here. So from that perspective, I do expect status quo. In terms of, I think most of the indication would be the same. Maybe I would love to see, I don't know whether they would, or maybe post press conference, something on the FX side. With there's so much of inflow coming in, more than expected inflow coming in before September, and maybe we'll end up maybe at 70, 80, 90, $100 billion. Currency still not appreciating. That's a little bit challenging.
Jayesh, in fact, that is exactly what I want to ask you about. To say that, and there was one view that was expressed that I saw from a prominent voice in the mutual fund space that had to do about exactly what you mentioned, to say that $80-90 billion based on the trajectory we've seen seems to be par for the course. So could there be a step in by the Reserve Bank to say that we'll close the window earlier than anticipated? Because ultimately if you get too much also, it's a problem that you'll have to face down the road. So do you anticipate that, one? And two, liquidity management, because with these flows you're going to have a significant surplus durable liquidity through the year, so they'll have to manage it. How do you expect them to do that?
So I think in terms of liquidity, looking at where the bond yields are, they won't really check out liquidity. Maybe that is the situation. They may do in between also. If you look at it, when we had too much of surplus security, as we are talking about long-term repos, and I think they will manage it through long-term repos. When the bond yields are so much away from the repo rate, there is no point RBI doing a OMO sale, right? It would actually spoof the bond yield and the market. So from that perspective, I think it's manageable. Like if you do long-term repo, it is manageable. They may suck it out for some time. In terms of closing window, I don't really see. I think maybe that 70-80 was anyway expected. That may become 100 billion. It does not really matter if we, at this juncture, our currency has suffered a lot. So to that extent, if we get a respite for 3 years, that would be well managed.
Okay. Upasana, your initial mentions had 2 points which stood out for me. One, of course, is this growth revision upwards. And we know that at least on the earnings side, when we look at the markets and the kind of results that Q1 has shown, it does seem that earnings are holding out well. Is per se high frequency indicators indicating that growth overall, even in the unlisted space or otherwise, is also looking strong?
Yes, so I think the whole theme since the Iran conflict broke out has been that each month high frequency data has actually been coming up better than anticipated. And I think, and that's pretty much across the board. So I think each month starting April, May, June, we've been writing that data is actually better than anticipated. And if you look at the breadth of the indicators, it is improving or has been holding up on its strength across a number of indicators. So one is the obvious auto sales, where you have again strength across PVs, two-wheelers, tractors. Second is GST collections, like the last data point is double-digit 14-15% growth. And even if you deflate it by the deflator, you will still end up with high single-digit growth, and even 2-year CAGR numbers are double-digit. So there is pretty solid strength there. If you look at bank credit, that's again going up, and I know it's 17-18%, but that's nominal. But again, the same logic, if you were to do it deflated by the GDP deflator or look at it on a 2-year CAGR basis, there is still an accelerating trend across both these indicators, and pretty solid trend. The mix of credit growth is also good in my view this time, because it's not just lopsided towards retail. You are seeing pickup in corporate credit as well. And again, corporate credit across large, medium and MSME industries. And lastly, I think which has been another surprise is the strength in the goods export data point. So again, goods export, and not just headline exports, but even non-oil exports or non-oil, non-electronic exports have been accelerating in the last 3 months against the specter of, this Middle East tensions and overall concern on how external demand will hold up. So I think GDP growth, like for the June quarter, I think will be tracking around 7% in our view. That's higher than what we were anticipating, and therefore for our numbers for fiscal 27 at 6.7, I think we still see some modest upside risk, notwithstanding these concerns from either the monsoon or uncertainty from oil prices.
So, Upasana, that's with regards to growth that you're looking at. How are you looking at liquidity management as well? Do you think that as a point of focus is becoming more important versus what the RBI does in terms of rates? And what signals should investors actually watch out for when you talk about the liquidity conditions, bond deals, and the credit growth that you're talking about as well after this policy?
Yeah, sure. So I think on liquidity, I think as Jayesh mentioned as well, I think RBI should probably use, or the first line of defense should be using sort of temporary measures, right, like longer term repo. So I think I'll concur with him on that. We will see a in sort of bloating of liquidity surplus for starting August, September, and probably up to the year end. But this will even out as we probably see for up to fiscal 27, because there will be normal or usual drains on liquidity. The country is running a current account deficit. So overall, we need to see how high is the overall balance of payment surplus to assess the liquidity that may still sustain in the system. So I think as a first line of defense, looking at more temporary measures like longer term VRRs, which should help RBI manage liquidity between the September to December sort of window and time period. Having said that, I think because there is excess liquidity which will be there in the system for this quarter, financial conditions in my view will ease. So if you think from a market yields, market rates perspective, there will be some amount of downward bias, at least for from here to up to the year end. Not hopefully having any other external risks coming into the picture, but just from a capital flow perspective, I think this easing financial conditions will probably be another theme at the margin that could play out. And I think given where growth inflation is, RBI should be comfortable, given its neutral stance, to have a little bit of a surplus liquidity and manage it with VRRs and have minor easing in financial conditions.
Yeah, it's an important point. And by the way, what you were just seeing on your screen, the 10-year benchmark government bond as things stand, the yields are just a tad bit off yesterday's close at 6.78% or thereabouts. You'll have to watch that very closely, because money market reactions could be something that could come through on the basis of the commentary. And the USD INR, the Indian rupee, is appreciating just a tad bit. In fact, more than a tad bit, 40 paise or thereabouts at this moment, and above the 95 mark.
Morning.
Let's listen in.
And Namaskar. The West Asia conflict continues to challenge the global economy by disrupting key trade routes and supply chains, amplifying market volatility, and repressing business sentiments. Trade uncertainty lingers as US imposed fresh tariffs. The global economic environment has become increasingly unstable. Global growth is projected to soften, while inflation forecast is higher for 2026 vis-a-vis the previous year 2025. Some central banks have tightened policy, others remain vigilant. Crude oil prices, currencies, and financial markets remain volatile, fluctuating in line with the changing intensity and the uncertainties of the West Asia conflict. In this backdrop, the Monetary Policy Committee met for its third bi-monthly meeting of this financial year on 3rd, 4th and 5th, that is today, to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic and financial developments, as well as the outlook, the MPC decided unanimously to keep the policy repo rate unchanged at 5.25%. Consequently, the SDF rate shall remain unchanged at 5% and the MSF rate and the bank rate at 5.5%. The MPC also decided to continue with the neutral stance. I shall now briefly set out the rationale for these decisions. The MPC noted that headline inflation has edged up above target as expected. The realized inflation for Q1, however, remained marginally lower than projections, reflecting limited pass-through of cost pressures. The higher inflation is mostly on account of fuel and food, with little signs of generalization of price pressures so far. Core inflation, excluding precious metals, continues to be benign. As projected earlier, headline inflation is expected to rise further in the near term. It is expected to peak in Q3 of this year, primarily again due to food and fuel, and thereafter moderate. The underlying inflation reflected by core inflation excluding precious metals, which has been benign for some time, is set to align with core inflation towards the end of the financial year. Growth continues to be supported by the resilient domestic demand, sustained expansion in manufacturing and services activity, and robust exports. It reaffirms India's position as the world's fastest growing major economy. To sum up, the MPC noted that even though headline inflation is projected to increase, it is primarily on account of supply side pressures caused by food and fuel. It is not getting broad-based. Core inflation continues to remain moderate, and it is expected to decline after peaking in Q3. Growth, albeit resilient, is expected to be lower in this financial year. The outlook, however, is hazy because of the uncertainties regarding southwest monsoon, El Nino, geopolitics, and global trade policy. There is a need for greater clarity to emerge, especially regarding inflation, its path and composition, before taking any policy action. Any such action would also have to consider the need for recalibration of policy rates in line with the evolving growth inflation dynamics, especially the normalization of the underlying inflation from its benign levels seen hitherto. Considering all these factors, the MPC voted to keep the policy repo rate unchanged. The MPC also decided to retain the neutral stance to respond appropriately to macroeconomic developments. The MPC underscored that it will maintain a close vigil and remain resolute in its commitment to align inflation with the target. I will now come to our assessment of growth and inflation. Let me first of all talk about growth. The supply side pressures caused by the West Asia conflict have eased somewhat since June 2026, leading to withdrawal of temporary measures undertaken by the government and normalization of key input supplies. However, the re-escalation of the conflict since the first week of July has amplified volatility in energy prices and renewed uncertainty about supply chains. Amidst persistent global uncertainty, domestic economic activity has exhibited resilience as reflected by the high-frequency indicators available for Q1. Early results of corporates for Q1 indicate healthy performance in the manufacturing sector. This is also corroborated by an expansionary PMI. Services activity too maintained its momentum in the wake of strong domestic demand. Private consumption continued to be driven by buoyant discretionary spending. Investment activity remains steady on the back of robust government spending on infrastructure and construction. Merchandise exports rebounded with double-digit growth. Services exports growth sustained its momentum. Overall, the Indian economy performed better than expected in Q1. Looking ahead, the prospects for agriculture are clouded by deficient and uneven southwest monsoons amidst El Nino conditions. The reservoir levels, which remain close to normal, bode well. The government's initiatives for crop diversification, including short duration as well as climate resilient crops, and water harvesting and conservation inter alia are expected to mitigate the impact of deficient rainfall. Although manufacturing sector may face cost pressures, the growing diversification of global supply chains should help mitigate the impact. Services sector is expected to maintain its buoyancy on the back of strong domestic demand. On the demand side, impact of weak monsoon on rural consumption may be partly offset by supportive allied sector activities and various government schemes. Buoyancy in services sector and steady employment conditions should support urban consumption. Strong capacity utilization, robust credit flow, and the government's continued thrust on infrastructure are expected to sustain investment activity. Net external demand is expected to derive strength from bilateral trade agreements, many of which have been recently concluded, and some of which are now being operationalized, as well as the market diversification efforts of our manufacturers. Renewed tensions in West Asia, which are disruptive of global supply chains, volatility in international financial markets, and weather-related shocks, however, pose downside risks to growth. Taking all these factors into consideration, real GDP growth for this year is now projected at 6.7%. This is 10 basis points higher than our previous projections. Q1 at 7%, Q2 at 6.4%, Q3 at 6.5%, and Q4 at 6.8%. The risks are evenly divided. Let me now talk about inflation. While CPI inflation increased to 4.4% in June after remaining below target for 16 consecutive months, it turned out to be lower by 30 basis points than what was our earlier projections. The increase in June was primarily due to higher food, fuel, and fuel-induced inflation in select categories such as restaurant services. Notwithstanding the pressure from higher input costs, core inflation, which excludes food and fuel, remain unchanged at 3.9% in May and June. Core inflation, excluding precious metals, was even lower, 2.3 to 2.5% during this period. Going forward, El Nino impact on temporal and spatial rainfall distribution continues to remain a major risk, although proactive supply management and adequate stock of food grains should provide comfort. Global oil prices have remained highly volatile, with sharp two-way movements triggered by geopolitical developments. This blurs the near-term outlook. Although generalized inflation pressures continue to remain modest so far, the risks of second-round impact of higher food, fuel, and other input prices translating to broad-based inflation persist. After considering all factors, CPI inflation for this year is now projected to be 5%, 10 basis lower than our earlier projections, with Q2 at 4.7, Q3 at 5.9, and Q4 at 5.5%. Inflation for Q1 is projected at 5.3%, with risks being evenly balanced. Core inflation is projected at 4.3% for this financial year. Core inflation, excluding precious metals, is projected to be lower than core, although it is likely to align with core inflation towards the end of the financial year. Let me now talk about liquidity and financial market conditions. System liquidity, as measured by the net position under the LAF, the Liquidity Adjustment Facility, stood at an average daily surplus of 1 lakh crore rupees since the last MPC meeting. Going ahead, the usual return of currency during the monsoon season, drawdown of government cash balances, and our special measures to attract capital inflows are expected to aid banking system liquidity in the near term. Since the June meeting, the Walker weighted average call rate traded within the policy corridor. It averaged 5.31%. Short-term money market rates, especially rates of commercial papers and certificates of deposit, moderated in July. GSEC yields, buoyed by measures undertaken by the government and the Reserve Bank to attract foreign capital into Indian debt markets, eased across maturities during June and July. Transmission in the credit market, however, moderated slightly during May and June, with hardening of deposit and lending rates. Nevertheless, credit growth continues to remain robust and broad-based across various sectors. Through its conduct of two-way operations, the Reserve Bank will proactively ensure sufficient liquidity in the banking system, guided by the objective of aligning the Walker to the policy repo rate. I will now speak about financial stability. As mentioned earlier, the system-level financial parameters relating to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain healthy. There is, however, some moderation in NIM as compared to last year. Similarly, the system-level parameters of NBFCs too are sound, with adequate capital position, improved gross NPAs, and higher profitability. Let me now turn to the external sector. Despite the challenging and turbulent global macroeconomic environment, India's current account deficit last year remained modest, much below the levels considered to be sustainable for emerging markets. During April to May this year, the current account recorded a surplus of $2.8 billion US, primarily led by services trade and strong remittance receipts. In Q1, India's merchandise trade deficit widened to about $86 billion from about $69 billion in Q1 of last year. This is mainly driven by imports of crude oil, electronic goods, and gold. Going forward, moderation in global trade growth, surge in energy prices, and persistent trade policy uncertainties pose upside risks to India's current account deficit. On the other hand, implementation of the India-UK trade deal, along with many other recent agreements with major trading partners, healthy services exports, and buoyant inward remittances are expected to mitigate these risks. On the external financing side, gross FDI inflows were buoyant at $30.7 billion in the first quarter of this year. They are higher than $26.7 billion in the same period last year. This underscores the continued interest of global investors in India. Net FDI inflows also mainly driven by higher gross inflows and a slowdown in growth of outward FDI increased during the period. Moreover, FPI to India has seen a turnaround in June and July this year with net inflows of $7.1 billion US. This is, of course, primarily driven by the debt segment and after registering net outflows during April and May of this year. Going forward, capital flow measures undertaken in June will support inflows. As a result, the balance of payments is expected to register a healthy surplus. India's foreign exchange reserves continue to be adequate in terms of the standard metrics of reserve adequacy, with import cover of over 10 months and external debt cover of almost 91%. As for the exchange rate, as mentioned earlier, we will continue with our policy of it being determined by market forces, while at the same time curbing excessive volatility, checking speculative behavior, and preventing disorderly movements so as to ensure that it is not out of sync with the fundamentals or it is not disruptive of economic activity. For this purpose, we have a very broad range of effective regulatory and market-based instruments. Now, before I conclude, as has been the practice, I have a few additional measures also to announce. I have two measures to further strengthen the cooperative sector. One, on the basis of the feedback received on the discussion paper on licensing of UCBs, which we had done some time ago, we are now issuing draft guidelines for resuming licensing of the urban cooperative banks. Two, in light of the experience gained and the developments since 2008, when the credit monitoring arrangement for rural cooperative banks was last revised, we are issuing draft directions after undertaking a comprehensive review of this arrangement. There is one measure for interest rate on advances in order to enhance transparency in lending rates and further strengthen consumer protection. It is proposed to harmonize and standardize the regulatory framework on interest rates on advances for all regulated entities. To conclude, global economic conditions and sentiments continue to remain hostage to the rapidly oscillating developments, both in scale and intensity, of the West Asia conflict. While these have impacted the domestic growth inflation outlook adversely, the stronger macroeconomic fundamentals of the Indian economy are helping navigate this global shock resolutely. As alluded to in my last statement, this presents an opportunity to accelerate measures to enhance our resilience to withstand such shocks. We shall continue to implement policies that further fortify our economy, whether it is facilitating sustainable growth or promoting consumer protection, whether it is preserving stability of prices, the financial system, or the currency. We will do whatever it takes to ensure the same. Thank you, Namaskar, and Jai Hind.
All right. Well, that's a word coming in from the RBI governor. And it could be said that this was along expected lines. Let's pull up the markets and see what's happening while we're at it. Some key factors for you to bear in mind if you're just tuning in. The policy rate has been kept unchanged. This was broadly expected. The MPC voted unanimously to do so. The other thing that's kept unchanged is the stance, and that has been retained at neutral. The few changes, if at all, are marginal changes to the projections for growth and inflation. The GDP growth forecast for FY27 is 10 basis points higher at this juncture at 6.7%, and the governor has pointed to the risks being evenly balanced. Inflation, CPI inflation in FY27 seen at 5%. This is 10 basis points lower than earlier forecast, and this is on account of the first quarter coming in lower than expected. It's expected to pick up in the third quarter, in fact peak in the third quarter. This is both headline inflation as well as core inflation at 5.5%, or actually 5.9% in the third quarter, and subsequently it's expected to come down to 5.5% in the fourth quarter and then 5.3% in the first quarter of the next financial year. Core inflation for the full year FY27 is seen at 4.3%. We've got former Deputy Governor of the Reserve Bank of India, R. Gandhi, joining us right now. I'm sure that Mr. Gandhi has listened to the speech as avidly as we have. Good morning to you, sir, and thanks so much for taking the time. Give us a sense of what you think the deliberations might have been like, as somebody who has been in that room with the kind of uncertainty that we're currently facing on the external front. The choice has been to maintain status quo. What do you have to say about that?
Thank you. Good morning, everybody. Yes, the announcement by the MPC is as expected, widely expected. Nobody, or rather very few, really expected any change in this, both in the repo rate and even on the funds. And the projections that has come forward now, that is presented by the governor, there are some changes between what has been projected in the last MPC meeting and today what has been projected. So obviously the discussion would have been around the changes which caused these changes in the projection. And in my opinion, the MPC would have noted that the core mandate of the Reserve Bank, that is relating to maintaining the inflation at the accepted level, that is where the entire discussion would have been around. The projected inflation compared to the previous one, actually it is less by 10 basis points, and projected growth is also higher by 10 basis points. And the core inflation is expected to hold across. So that is what might have influenced their entire decision for keeping the rates at the current rate and also not changing the terms.
Yeah, but I wonder what you made of on the growth commentary that the RBI has given, because one would have anticipated, and some people were estimating, that there will be fairly strong commentary on growth given the high frequency indicators and Q1 earnings as they've shaped up. That didn't quite shape up as the way the expectations were.
Of course, the high frequency indicators relate to the immediate prospects of growth, whereas growth projections relate to 1 year ahead. So there they have to factor in the current uncertainties in the scenario, both in the geopolitical and on the tariff and other fronts. That's why they have been cautious in terms of not making too many changes with reference to the projected growth rate. So growth is, as mentioned, the government mentioned also in the high speed, high frequency indicators that indicate the current scenario or the next
a bit of an issue with that line. Sir, we'll come back to you once the line is patched, but while we wait for that to happen, let's go across to our colleague Piyush, who is joining us from the RBI headquarters. Piyush, we've heard the statements. What else are you picking up?
Yeah, so broadly in line with our poll as well, the RBI has continued maintaining the repo at 5.25%, maintaining the neutral stance. We had also reported that there could be a tweak both on GDP and inflation front, and that is exactly what has happened. The RBI has hiked the FY27 GDP forecast by 10 odd basis point. Now it projects FY27 GDP to be at 6.7%. Inflation forecast has been trimmed by 10 basis point again to 5%. 5%, which is 10 bips lower than the earlier expectation. Now, West Asia conflict and its spillover effects on India's economy continues to be the major consideration that the MPC members gave in this particular meeting. Apart from that, on the liquidity front too, the governor said that durable liquidity will be provided. In fact, since last policy, the banking system liquidity has been in surplus of over 1 lakh crore rupees. He mentioned how the call rate has hovered around the repo rate. The short-term yields have gone down, and both the government bond yields have gone down. Other regulatory measures, as we reported earlier, the RBI will now issue licenses to urban cooperative bank. This is a move we have not seen over the last 2 decades, and it will also standardize the interest rate on advances. So all these are, these are the things that we are picking up now, and of course we will come back to you with updates when the governor, holds a press conference at 12 noon today.
Okay, thanks Piyush for that, and of course we'll wait for your questions at the press conference as well. Dr. Ashima Goel, ex-member of the MPC and RBI, joins in right now on the show as well. Dr. Goel, thank you so much for joining in. What did you make of the policy statement, because the actions were nearly in line with almost what anybody else predicted too? The statements might have a different opinion though.
Yes, I think it was very good to see an emphasis on headline approaching core towards the end of the year. That volatile commodity inflation need not persistently affect core inflation. And therefore, the hold is premised on inflation continuing to remain near the target in the long run. Also, I think the governor made it very clear that India's resilience and outperformance, that we need to, I think all of us should introspect on what it is that keeps the economy performing more than the general expectation. The third thing which I liked was the emphasis on doing whatever it takes to maintain financial stability, to prevent excess volatility of the exchange rate. And I think that should also indicate, and also the mention of acting against against deviation, large deviation from fundamental values, because I think the rupee is really largely extremely devalued at present compared to fundamentals.
Dr. Goel, good morning. This is Hiral here. My question to you is, if you have to look at the fine print as well, I mean, from what I'm reading into it, not really seeing too much concern when it comes to growth as well. However, the tonality in terms of inflation, that probably could potentially become the bigger challenge from here on, and that appears more cautious in terms of inflation versus your previous policy statements as well. Would you read into it in that fashion?
So I think as the MPC, whose primary objective is, or first objective is inflation, they have to emphasize that they are committed towards keeping inflation near the target within the tolerance band. And since I've written about this, that in the current situation where you have large commodity shocks still playing out and all kinds of global uncertainties, for the widespread consensus was really hold. But that hold has to be accompanied by strong language that we are committed to keeping inflation low, because that has a role in anchoring inflation expectations. It reassures markets that in case inflation rises persistently, the RBI will act as necessary. And that helps anchor inflation expectations. So
Right.
I think the tilt in language is very welcome.
Yeah.
We saw that in the Fed policy, there was no mention of how higher inflation would be tackled, and that led
Yes.
to bond yields rising.
Yeah.
In India, I think they're softening.
Yeah, it is.
So
It
it
is
shows
indeed.
the success of the confrontation.
Yeah, we're also joined this morning by Tanvi Gupta Jain, Chief India Economist of UBS Securities, and Nilesh Shah, Managing Director of Kotak Mahindra AMC, who's kindly accepted a call in the middle of his commute to work, I see. But Tanvi, I'll come to you. What do you think of the wording and of the tonality of the message of the RBI governor and the projections on both GDP as well as inflation?
To be very frank, last policy I thought they were quite cautious. It was a hawkish pause. This policy, I think they were quite balanced. I mean, 10 basis point higher GDP, 10 basis point lower inflation. I mean, there was not an urgent need to do it in this policy. I could have waited, looked at how the monsoons are, how the oil prices movement is, and could have waited for the October policy to make that change. But I think they wanted to signal that the demand in the economy is still strong, and that's why GDP growth going up from 6.6 to 6.7%. It was more a signaling that the demand, despite the external shock, despite the geopolitical conditions, and despite the stronger El Nino concerns, things are okay on the ground. And I think that signaling was a very important step. So I would find this policy more that wait and watch, very balanced. If you look at our forecast at UBS, we actually don't have a rate hike in our forecast for FY27. That is not to say that a 50 basis point rate hike is not possible, but right now, at least for the August and October policy, we are seeing rates on hold. But I would say I would take today's policy as a very balanced policy. Definitely didn't feel like very hawkish. GDP growth 6.7, exactly in line with UBS estimate. However, on the inflation front, even though the core inflation was in line with my estimate, but I have a headline CPI inflation of 4.8. RBI is now at 5. And we'll see how the food inflation shock is going to behave, because so far the crop sowing, decline, which was 21% the first week of July, has narrowed to 3%. So things are looking on the ground much better, despite the geopolitical and the weather-related disruptions.
Yeah. Nilesh bhai, thanks again for joining us while your commute, and Tanvi made a very important point, of course. Belated birthday wishes to you, Nilesh bhai. And I wonder if the statements that have come in around growth and around inflation per se are in line with what you would have thought, and what Tanvi said, that things on ground are looking a lot better than what the West Asia conflict might lead us to believe.
So Neeraj bhai, we are in a situation where past is looking very perfect. IIP numbers, inflation numbers, growth numbers, corporate earning, everything is coming ahead of expectation on a positive side. But the future continues to look little bit of tense because of monsoon, because of Middle Eastern situation. And RBI on inflation was ahead of market estimate. Now it has narrowed down the gap. And on growth side, I think market is still below RBI's estimate, but we'll have to see how situation shapes up in the monsoon season. So net, a very balanced policy. Past is perfect. Future is little bit tense.
Okay, so Nilesh bhai, good morning, Hiral here. So what is that single biggest message that markets should actually take away from today's policy, if you have to look from the equity side of it or even from the debt market side of it?
So for equity market, earnings growth have been supportive. The geopolitical challenge continues to remain. But most important thing is the IPO supply. The pipeline is huge side. For the debt market, I think it's a status quo policy. A lot will depend upon how government provides for 8th pay commission recommendation. It is effective 1st Jan 26. Will they provide in FY27? That's about 4 lakh.
No, so that's an important point. Look, so I think most of the point was made by Nilesh bhai about the liquidity situation, right? But let me ask Mr. R. Gandhi, who's back with us, about that very fact, which is that the governor has spoken about two-way operations being used, and this is the exact words that he used in his statement, to manage that liquidity situation, to ensure that there is sufficient liquidity. Mr. Gandhi, at this point, it's not a problem of sufficient, it's actually a problem of plenty. And so how is this going to be managed in your opinion?
Yeah, that's right. That's earlier also in our discussion, Jayesh did mention about that. When 80 billion or $100 billion come, and that would pump in further liquidity into the system, that would mean that Reserve Bank will have to absorb quite a bit of temporary liquidity from the system. So there will have to be measures. Obviously, they will. That's what he said, that in both ways we'll be operating, while supporting the rupee to curtail the volatility and keep the exchange rate stable. And along with that, that would mean that both it may have to pump in dollars and it may have to purchase dollars also from the market when it comes through. And when the liquidity is very surplus beyond the requirement, then obviously Reserve Bank will have to absorb that through various means, because it has got various tools under its kitty to apply that. And we also have to remember that this year the deposit growth has been lagging behind the credit growth. Credit growth has been very robust, and the banks would need liquidity also to, because come October and onwards, the credit offtake usually will be much higher. That means that banks will need liquidity. So that way, it will be possible for Reserve Bank to manage the liquidity requirements, both for to support the credit growth and also to support the to maintain foreign exchange rates at a stable level. So it will have to be operative on both the markets, on both the sides as.
Yeah, absolutely. Nilesh Shah is back with us. Nilesh bhai, patchy line perhaps, so I'm going to try and ask you to complete your point that you were making. I believe you were speaking about the liquidity.
So on the debt market side, the point I was trying to make was that a lot will depend upon what is the government's borrowing program and how will they manage 8th pay commission recommendation. In FY, it's effective 1st Jan 26. So part should have been provided in FY 26 budget. Part should come in FY 27 budget. Now, will government provide in FY 27 revised budget estimate? That's about 4 lakh crore funding. Or will they take it all the way up to FY 28 budget? So market will be closely watching what government does with the 8th pay commission recommendation.
Yeah, it's a fair point. Nilesh bhai, thanks so much for joining us this morning, and Mr. Gandhi as well. Thank you so much for taking the time and for speaking to us. Ms. Goyal as well as Tanvi, do stay with us. And I want to come to you, Ms. Goyal, on specifically that core inflation print that we were speaking about earlier. For the full year FY27 at 4.3%, it's pretty benign. And based on what the governor said, and if you adjust for precious metals within that, it's even lower in FY27. So from that perspective, we should be sanguine, shouldn't we? And we should maybe be looking at the growth levers that need to be pushed. I wonder what you think about that.
Yes, I think as the governor said, for 16 months, they've been over forecasting inflation. So currently, if inflation does rise somewhere, inflation has been very, very low. Core inflation has been low for many, many months now, which shows that overall there's no excess demand in the economy. So this is why you expect headline, though it's driven up by transient commodity shocks, will approach headline. And the RBI can take the end period expected inflation, which is at target, in order to keep rates on hold. That means real rates do come down somewhat as headline inflation rises, and that will be a stimulus for the economy. It's very important to stimulate or support the economy at this juncture, because policy now has the weight and the capability to counter external shocks. It does not have to tighten in response to those. And also, we are seeing a revival, a broad-based revival in private investment, in corporate investment after a long time. They've been waiting for this. I think corporates have some reassurance, A, that inflation is anchored at 4%. They don't have to raise prices in response to temporary commodity shocks because inflation will come down in a few months and consumers are sensitive to prices. In fact, some research shows that the past commodity shocks has halved in the inflation targeting period from corporates. So, and given the current juncture where the prediction is that core inflation will come down, that headline inflation will come down to 4%, I think they will not pass on as much of the commodity shocks, so which will help core inflation stay benign. I just wanted to make one point about liquidity, the discussion earlier, that earlier markets used to really worry because there were periods when durable liquidity would really tighten sharply. But if you see over the past 2 years, that's not the case. Liquidity has remained in surplus. I think the policy stance now is that to support growth and financial conditions, you need durable liquidity to be in surplus. And I agree with Dr. Gandhi that they have many instruments available in order to sustain this. I think markets should be confident that durable liquidity will be kept adequately in surplus, not excess, because they also have these derivative instruments such as buy-sell swaps. If there are excess dollars, they will buy them now and sell them forward. Yeah. So, and that does not affect liquidity. That doesn't affect liquidity today. They have alternative instruments to the BRRs, etc., to affect temporary liquidity. So there are many instruments available. I think markets can be confident.
Well noted, ma'am. Appreciate your time, Dr. Goel. Thanks so much for being with us today and giving us your thoughts. We are also being joined by Mr. Ravi Ranjan, MD of SBI. But Mr. Ranjan, I just urge you to stay on because I have to take one final question with Tanvi Gupta Jain of UBS. And Tanvi, in some sense, is there anything within this policy statement, because the action wasn't a surprise, anything within the policy statement that was a surprise to you? We've kind of now getting used to the governor springing one small surprise every statement. This time around, that was missing. Maybe it's par for the course, but did anything catch you by surprise?
Not really. I think the signaling was really good because they are kind of ensuring the market participants that the growth is strong, inflation is sliding down, and plus, the change in the core inflation forecast. I think that was very interesting. 4.7, you're bringing it down to 4.3. Despite over the last since the last policy, oil prices have been volatile. We have seen oil even going as high as 100. Today it is trading below 80. So I think that signaling device is something which I don't see market was pricing in. 10 basis point bringing down the headline inflation is something I can be okay. 5.1 going down to 5, but core inflation going down from 4.7 to 4.3 is definitely a very positive signaling. So I think we also have to see, because market has been pricing in 75 basis point of rate hike over the next 1 year, 50 basis point of rate hike in FY27 before this policy. Whether that is going to change going forward. And the last thing I think where I didn't see too much of a stress by the RBI governor is that global financial conditions are tightening. And that is something, he did mention that some central banks have started increasing rates, some central banks are keeping on hold, but that is also something could be a key market mover beyond monsoons and beyond oil that India has to take into account over the coming second half.
Important point. Ms. Jain, always a pleasure speaking with you. Thank you so much for taking the time, and speak to you soon. Okay, I want to go to Mr. Ravi Ranjan, who's a Managing Director of State Bank of India. Mr. Ranjan, thanks so much for taking the time, and good morning to you. First, your initial thoughts on a no-surprise policy, if we can call it that, and the specific comment that I think relates to the banking system, which the Reserve Bank of India made, which he often does, and he's speaking about the transmission, and he speaks about the fact that it moderated in the months of May and June. So what needs to be done in your opinion? Of course, it's a factor of the deposit growth that you could see. So your initial thoughts about this?
First of all, this policy gives a lot of comfort in the sense that the growth is sustained. In fact, it has slightly gone up. Inflation is contained. That is also a good news. And system liquidity is quite okay. So the broad picture is quite good. There is no change in the rate. So the uncertainty from the policy part, the banking system is very happy that there's nothing in that. While macro uncertainty, particularly the Middle East and some of the El Nino related agri problems remain for some more time. But what is good is that we remain resilient. Q1 was also quite good. And we can see from the result of the public sector and private sector banks that have been released so far, quite comforting. Since liquidity is good, so going forward, this credit growth may also likely to continue. Right now, there is some gap in the system at the system level between deposit and advances. Almost 5% gap is there. But that will convert with almost now $40 billion coming through the FCNB and ECB window so far. And the way we are going, August and September should be pretty good also. So system liquidity problems should not be there. And the convergence between deposits and advances should also be coming in the next 2 quarters.
Mr. Ranjan, good morning. Hiral here. You mentioned briefly in terms of the credit growth as well, but with rates on hold right now, how are you expecting credit growth to shape up over the next coming quarters? And from a borrower's profile perspective, is there more caution from that side, or does the demand remain absolutely resilient despite the higher for longer rates?
The good part is that the system level credit growth that we are seeing, it is happening in all areas. The RAM portfolio, the corporate loans. Within RAM also, agri, SME, retail, everything is growing around 15%. So that's quite comforting. And when the participation is from all across, so and at the same time, it's not too high also that it is creating bubble. So broadly, it is demand driven. The rate of interest is also quite stable for borrowers also to plan their requirements. There is slight moderation in the home loans, I would say, almost instead of 15% overall retail growing, the home loans is growing around 12 to 13%. But that is also considering the high base that the banks have. That is also quite healthy. And the best part is that asset quality has held on. In Q1 also, all the banks, no bank has reported any worse GNP ratio. So overall, I think we should look towards Q2 and Q3 with much optimism.
That's certainly good to hear, Mr. Ranjan. I do want to ask about your view on FCNRB, because that's not something that was in the RBI monetary policy statement, but one assumes that this will be spoken about when the press conference takes place, because you've seen inflows in the swap window of over $40 billion. And as the largest bank, you've obviously mopped up quite a good portion of that. And the anticipation, I think, a commentary from State Bank of India itself, is that September you anticipate even more flows to come through. So what are the pros and cons, in your opinion, of overshooting even the initial optimistic numbers for the system as a whole, when now we're talking about $90 billion on the top of flows that could come through?
The good part is that why I talked earlier about the gap between deposit and advances of 5%.
Yeah.
So if the FCNB liquidity continues or accelerates in the next 2 months, this will further help us in this maintaining LCR, maintaining a better CD ratio. So all these things will be pretty good. And mind you, this deposit is coming without any requirement of CRR also. So the net cost of funds, that will also go down for a lot of banks, particularly who are dependent on differential interest rate for bulk deposits. So the NIM, it is a NIM accretive for most of the banks. It is good for the CD ratio, and it's good for overall quality of banking system in the country.
Yeah. Mr. Ranjan, just a follow-up there. Good morning, Neeraj here. While there have been conversations in the first couple of months about what's the quantum of funds that will come in, I think the recent data seems solid. You guys are amongst the leading players out there too. Do you reckon that come August, September, the numbers could well surprise? Part one of my question is that. Part two, will the RBI, post this September limit getting over, will there be something in terms of a move or in terms of parking the funds in a way that when the redemptions eventually come about does not disrupt in any fashion? Will some moves need to be taken for that?
As far as I remember, neither the RBI or not any of the banks have given any target. By initial estimates from different agencies have been between 60 to $100 billion. So what I am expecting is the way it has is panned out in the first 2 months. Probably we may end up at the higher end of this bracket. So close to $90-100 billion, and that will be quite good. Now whether this will impact the good part is that this will be good for the CD ratio and the credit growth. How RBI plans to use this fund for requirement 3 year or 5 year down the line, that is still not clear, at least at our level. RBI must have planned. They have to look at short term, medium term, and long term requirements also. But the good part is that even the USD INR, it has stabilized. It is stabilizing around 95, 96. So the pressure on rupee that was there, that has also come down. So overall, I think of course it is still 2 months to go before this window closes, and after that probably the banks and central banks may sit together and come to a definite strategy how to use these funds.
That's on FCNRB and what everyone's looking at. The other question, Mr. Ranjan, I have is with regards to our inflation course. I know we spoke about it, but now the governor is expecting inflation to peak in the third quarter of FY27. Do you think inflation risk could actually probably impact the consumer borrowing behavior, number one, and eventually impact the repayment capacity as well, specifically in certain retail as well as MSME segments? How are you looking at that chain of treatment?
Probably if you would ask me this question 2 months back, the response would have been more in what you are asking. But the things have changed for the better in the last 2 months. Inflation at overall number as well as trajectory both look within the in fact much below expectation, and we should be able to manage this around 4 to 5% for the rest of this financial year. So this will if it remains below 5%, I don't think it will impact the consumer behavior, because this is what everybody's expectation is. And that's why we are seeing that while the demand is also good, the credit quality has also been resilient. There is not much pressure either in terms of gross NPA or even in SMA area. So banking system is quite stable that way.
Indeed. Mr. Ranjan, as always, an absolute pleasure speaking with you. Thank you so much for taking the time today.
Thank you.
All right. By the way, take a look at the markets and don't pay too much attention to the percentage change. Take a look at the level, as Neeraj was saying earlier today, for the benchmark in particular, right? 24,615 being held. The Sensex up about 0.4%. The Bank Nifty at 57,800 plus. All of those are pointing to pretty decent signs for the Indian equity markets, and the breadth has continued to look reasonably good. So just pull up the advanced decline ratio and see if it's closed just at all. In the morning, at least it was strong. It continues to be pretty decent at this point, and that strength in the broader market is visible as things stand right now. But all told, I think it was a good start today.
Yeah, I mean, there is a little bit of resilience that we are seeing as well, not only from an economy perspective, and I think likewise being reflected in the markets right now.
Yeah, follow crude. Crude is lower. We'll be higher.
That's a fulcrum.
For now, that's the fulcrum. For now, though, now from the fulcrum on this table, which has been presenting this show for the last nearly 3 hours, it's a wrap. On a note that the markets are looking okay. Thank you so much for tuning in. Of course, stay tuned though. Ask Profit is up next, and get ready with all your queries.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality.
Welcome back. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me, as always, is Puneet Zaveri. And this is a show, of course, that gets all your stock-related queries answered. Of course, today we have a curtailed version because we had the monetary policy. Just to give you a quick roundup of that, the repo rate has been unchanged. This was expected. Status quo was expected. 5.25 is the rate at which the repo rate has been maintained. Inflation remains the key watch point. Of course, we've talked about this as to how June inflation picked up versus May as well, and the important commentary was that the government expects this to peak by Q3 FY27 and moderate thereafter. I think the other important factor was also GDP forecast being raised by 10 basis points to 6.7%, and the message from RBI remains at the wait, watch and assess situation. Lastly, CPI inflation is expected at 5% versus that of 5.7%. So these are some of the key takeaways that you must know about from the monetary policy. But let's take a quick look as to how the markets are doing and then jump to your questions quickly. The Nifty 50 right now is trading around the 24,600 levels with an uptick of just 0.18%. The Bank Nifty almost flat as we speak around the 57,800 levels. Let's try to pull up the Nifty 50 heat map and see as to where the action is exactly. You have something like Larsen Trubro, which is topping the charts up 1.8%. Shriram Finance, yet another day of strong gains coming in for this one. Grasim yesterday saw profit taking coming in. In fact, it was not profit taking, but the correction of cash settlement happening. But today is back in the green, up by about 1.8%. There's also M&M, Interglobe Aviation, HDFC Life Insurance, Bajaj Auto, all doing very well. Auto names continue to do well, in fact. On the flip side, you have ITC, which is taking a knock. Polo Hospitals, SBI Life, Coal India, TCS, Nestle, some of the names that continue to be under pressure. Let's try to pull up the mid cap 150 and the small cap 250 as well and see as to where it is at right now. In fact, today the small cap 250 after almost 600 days has touched an all-time high, but the mid cap 150 seeing gains about 0.4% and the small cap 250 up by about 0.8%. Quickly the BSE 500 as well to see as to what are the counters specifically buzzing in trade and take a look at those names as well. You have something like La Opala, PNB Housing, Motherson Wiring, Bosch, Happiest Minds on the positive side. Restaurant brands yet another 5% gains. Yesterday it was locked in upper circuit and now 5% gains today as well. On the flip side, you have Nykaa, though the numbers were in line with expectation, but I think it's seeing profit taking coming in, and Ajanta Pharma, Balrampur Chini is where there's pressure coming in as well. So sugar stocks seeing some profit taking as well. But let's get in all your stock related questions now, and to answer them we're now joined by Girish Sodani, co-founder of Ensure Capital, and we'll soon be joined by Kush Bora, founder of kushbora.com as well. Girish, very good morning to you, and thank you so much for joining us at such short notice. I'll take the first question, which is coming in on JSW Cement. This is from our viewer Pramod, who's writing us from Bengaluru. He says that he wants to know whether from a long-term perspective, can he continue to hold this counter or not? What is your view like?
So again, the cement sectors looks very attractive. The cement sectors, JSW Cement sitting at the level of 132 approximately, with the market cap strongly build ups. The quarter numbers are strongly build ups with the revenue grow by 11% year-on-year basis. Overall structures was very strong, so the can be hold for the at least 1.5 year to 2 year time on. The expansion plans is still there, so the reflections will be coming for the next 2 to 3 quarters.
Okay, all right. The next one that we have is coming in on Dabur. Harsha from Vijayawada is holding 220 odd shares at the levels of 444 and wants to know whether to continue to hold or sell this one. Girish, yesterday, of course, with the development of FSI issuing notice to Dabur for claiming 100% purity or 100% wherever they put that label, the stock did take a knock today. Let's try to pull up as to what it's doing right now. But overall, from a fundamental point of view, what would you recommend our viewer right now, Harsha, about Dabur?
So again, if we talk about the FMCG, I think the FMCG facing a little bit pressures because of the prices going to be appraised. Apart from that, the differentiations between the supplies from the geographical tensions. So if we talk about the Dabur, yes, the Dabur looks very strong in the means of fundamental terms, but the view is completely based on the 2.5 years down the line, because I think this reflection is going to be reflected by the next 3 to 4 quarters itself. So I think the FMCG is completely packed going to be faced these type of pressures into it. So if you want to hold for this particular time duration, the Dabur is a good bet.
Well, let's take the next query. And before we do that, Girish, I'm being told that it's your birthday today. Is that true? And if so, wish you a very happy birthday as well, Girish. And thank you so much for joining in today. I'm sure our viewers will also wish you, and we'll let you know for that. But thank you for joining us today.
Thank you. Thanks a lot.
Well, and let me go across and take the next query also from Subrata Mukherjee. She wants to know about Jubilant Pharma, Girish. If it's a good time to buy this particular counter, what would be your opinion?
So Jubilant Pharma, I think this is the right time, but if you're having the visions of at least 1.5 year, I think these are 2 times bets. We can say that you can just invest into the 2 installment basis. That is the current level what we're looking out. Apart from that, if you are getting a chance to enter at the level of 850 to 855, this is a very good proposition where you can invest for the longer period of time. All the farmers looks very interesting. Apart from that, the performers as well as the complete group Jubilant revenues was up by approximately 25 to 28%. The PAT was also going to be increases very speedily. So you can invest in this particular.
Okay, so that's the view coming on Jubilant Pharma. And Girish, a very, very happy birthday to you. I did not know it's your birthday. And thank you so much, in fact, for taking out the time on your birthday and joining us here. So really appreciate it. And I'll ask our viewers also to keep wishing you. But we've got our next question. In fact, Kush has also joined us now. The next question is coming on Balaji Amines. Our viewer, Bhavisha, is holding 7 shares at the levels of 2,112 and wants to know the short-term targets on this one. And Kush, you're right on time because we started getting technical queries. Balaji Mines has seen significant pressure in the last couple of days. What do you make of charts right now for this one? Hi Kush, can you hear me?
Hi, Mr. Paperi, good morning. The line's a little patchy, I'm afraid. So you'll have to.
Okay, I think we have some technical glitch. We'll try to fix that. By the time we get that fixed, I think I'll take the next question, which is coming in on this on KC International. Ramesh from Coimbatore has 1,000 odd shares, bought at the levels of 485. Wants to know if this is a good counter to continue to hold from a long-term perspective. Girish, what do you make of KC International?
KC International, right? Yes, KC International. Okay, so the operations profits was little bit disturbance because of the completely restructuring going on in the terms of overall revenues as well as the margins books. But if you're having a perspective of around 2 to 3 years down the line, I think this is a good bet for the KC International.
But let's go across to our next caller from Agra. Gary is joining in for a stock-related query. Gary, very good morning. What's your query?
Good morning. I got the Indomim shares allotted to me in the recent IPO allotment. I got 30 shares at the rate of 485 rupees. And at the moment it is trading about 780 rupees. So shall I hold or shall I book my profit? What should I do?
Well, firstly, Gary, many congratulations. Your luck is running wild because there were a couple of other IPOs on that day too. But most certainly you got the most preferred one. But Girish, I don't know if you have coverage. I know the company is yet to report results, but very strong interest before the IPO as well. Operates in a niche space. What would be your opinion? Should he continue to hold on or take some money off the table?
No, can hold this particular counters. The strong buildups in the metal injection moldings, basically, they are just having the 15 global manufacturing facilities overall. And in the term means we are looking out that their numbers should be there in a good propositions in the next 3 to 4 quarters itself. Obviously, there should be a pressure related to the geographical tensions. But I think the overall scenario was very interesting. If you're getting a chance to just get enter at the level of 650, if the stocks come down, then just do an average and add more quantities for that particular level.
Right, so that's the view coming on Indo MIM. The next one that we have is on AU Small Finance Bank. Murli from Hyderabad wants to know if this is the right time to enter from a one-year perspective. And by the way, Girish is also wishing you a very happy birthday. Your view on AU Small Finance Bank?
So, AU Finance Banks, I'm looking out little bit worried about their margins pressures right now. Obviously, the proposition, we can say that the expansions at the Tier 2 or Tier 3 cities are going to be very interesting. But I think if you are having a view for the fresh allocations, I think you have to wait for some time. Let's see how their next quarter results are going to be there. If the margins are continually increasable in the expansions mode already, then they will be the good bet.
Yeah, got it. Well, the next question, and this one's coming from Senorita. She wants to know about Exide Industries. Bought this counter at 563 a couple of years ago, and in 2024, of course, you had that peak of a lot of mid-cap stocks. Since then, stocks not recovered to that level. She wants to know if she should still continue to hold on. Girish, we saw good results actually come through for Q1. Would you expect her and largely, recommend her to continue holding, and if she should average down as well? Is this the time?
No, I think average is not advisable as of now at this particular level. But I think you can the client can hold this particular counter at the levels where he can just, he or she can just bought that particular stock. But fresh allocation is not advisable.
Okay, all right. And what move on the stock, right? From its low point in March, it's just gone one way upward. So very interesting. Today also it's up 3.6%. Moving on to the next one, which is coming in from Osama, who's writing us from Dubai, asking about NHPC. 1,062 shares is what our viewer has. And bought at the levels of 96 rupees. Wants to know whether to continue to hold this one or not. Girish, I'll stick with you for this one as well. What do you make of NHPC? And also, Osama is also wishing you a very happy birthday.
So for the NHPC, I think this particular counter can be at the right level where the investor can basically do an averaging on particular level. That the level should be 776 and 77 should be there. Obviously, the massive expansion pipelines are there. They're targeting the boost the installation capacity also by 59%. So I think this particular going to be impact in the next 2 to 3 quarters itself, and the reflections will be in the financial year 27-28. So overall the structure was strong as of now, but can do an average at the level of 75-76.
Well, let's go across to Hyderabad now for our next caller query. Murli is joining in from Hyderabad now. Murli, very good morning to you. Thank you for joining in. What's your query?
Yeah, good morning to everybody. Happy birthday to Girish, sir. My question is, if I have to bet on Chennai Petro or AU Small Finance Bank, which would be the better one to enter at current market price?
This might be the first time, Murli, where we've taken someone's query on WhatsApp, also answered his call too. So I'll take Chennai Petro because we just took AU Small Finance Bank with Girish. But Girish, on Chennai Petro, is there a right time to enter for Murli?
Yes, for the longer period of perspectives, yes, the money can be invested in this particular level itself. So overall, the structure was very, very strong. Let's talk about the revenue. The revenues goes approximately 80% year-on-year basis. Profit PAT also going to be increasable, as well as they are just do all their restructuring processes already completed, and that reflected in the margin numbers also. So I think the for the longer period, obviously the Chennai Petro is a good bet.
Girish's birthday, but Murli has gotten gifts today because both his queries were answered. Anyways, moving on to the next one. It's coming on BSE. Bhaskar from Bengaluru has got 50 odd shares at the levels of 3,700. Saying that despite of good earnings, the stock is taking a knock today. But from a slightly long-term perspective, what should he do going forward? Girish, what would you recommend for BSE?
So can hold this particular counters, good stock, good numbers. We can say that the keep already expansion is already there. 43 new stock additions as well as the mutual fund distributions are going to be increases in the overall BSE market index. So the numbers was good. Can hold this particular.
Well, the next question coming through, and this one's on Ashok Leyland. Our viewer Khurshid has bought this at 160 odd. Wants to know if if he should still continue to hold this, and if there's more upside here. Girish, a quick view.
So the stock fundamentals was good, but if we talk about the Ashok Leyland, the movings was little bit slow. That's a slow moving stock we are already discussed in the previous shows also. The financial numbers, quarter numbers was good in the terms of overall the EV segments and the expansions strongly built up in the switch mobilities itself, almost double their numbers in the overall expansion modes. But if you hold this particular counter for the 3 to 4 years, it's a very good stock for your portfolios. But if you want early earnings, then I think you have to switch this counter with another one.
Let's pull up Castrol as well. Company came out with good set of numbers. You saw a good reaction today as well. But we spoke to Saugata Basure, who's the managing director of Castrol India, to understand a little bit of where that growth came from and how are the margins going forward. Can the street expect, because it was the highest that they've done. Let's listen into what he has to say. What you've seen in this quarter, 21% growth in revenues, EBITDA is up also 50%. How much of that has been driven by volume growth for you?
Good morning, and thank you for having me on the show. It has been a resilient performance in a very volatile environment, and you've correctly said that the revenues are up, EBITDA is up. Our volumes continue to grow ahead of the market growth rate. In this quarter, we saw broad-based growth in volume across our industrial, consumer, institutional sales businesses. We did take prices up early in the quarter. There was a significant volatility in raw material prices and availability, and we leveraged our supply chain network to maintain supplies of our product. And we took prices up to offset some of the raw material price increase. Having said that, I see the raw material price increase to also flow through into this quarter, which is the July to September quarter. And we are also watchful of demand in the second quarter on account of an uneven monsoon and also inflation pressure building on in the supply chain. So that's our response to the pricing response has been taken, and we'll remain watchful in case more needs to be done in the second half.
Saugata, could you quantify what was the volume growth in this quarter? Your peer has done almost 17%. Was yours also in a similar range?
So we benchmark ourselves to the market growth rate, and our market is expected or is projected to grow in the range of about 4%. We are ahead of that. And that has been our trend for the last couple of years. And therefore, we are positioned to participate in the growth that is coming through in India, and at the same time grow our market share. And this is something we are seeing across our industrial business as well as our consumer automotive business. The consumer automotive business is being driven, the growth has been driven in our case by a big build-up of infrastructure into rural India. Again, something that we've been talking about for the last 2 years. We now cover about 45,000 outlets in rural India. We have a network of about 950 rural service express. That part of our business, again, continues to grow at double digit in terms of volume over the last couple of years now.
Got it. And you mentioned also that you have taken some price hikes in this quarter. Could you mention how much were they? And as we go across, because we've seen the first month go through for quarter two, we've seen those the volatility come back yet again and then recede a little bit. Have you taken any price hikes in the month of July as well?
So look, we have taken low double-digit price increase in the previous quarter. For us, April to June is the second quarter. We follow Jan December financial year. We anticipated that the volatility will remain in quarter three this year, and we are taking a long-term view. Our pricing action will be determined by two factors. One is to keep the business within an EBITDA range of 21 to 24%, and the second is to balance the price actions in the short term against our desire to continue momentum on volume growth and market share. If the volatility in quarter three sustains and flows into the next quarter and it requires us to take pricing action, we will do that.
Got it. Also, just one quick question, because your margins at almost 26.4% on a quarter-on-quarter basis have also seen more than 500 basis point increase. Now, you mentioned that you've taken a low double-digit price increase, so your point well understood. But could you guide us of how we should look at margins for the next 2 to 3 quarters? Because you also had the raw material prices at elevated levels. They have been volatile. Despite that, the margin growth has come through substantially. So while we understand that quite a few of that has come through from the price increases, do you expect that this margin growth between a range you mentioned should continue, or this 26% is slightly more higher, led by multiple factors, and could be the ceiling at least for this year?
Well, what I can say is we will maintain our guidance of 21 to 24, and that is the long-term guidance. Given the supply chain volatility is of a very high order, it's very, very unusual. We've taken various actions. Pricing is one part of it. We have also been very conscious in terms of looking at our cost lines. So we are trying to manage the business within that 21 to 24, right? Depending on how long the volatility sustains in the environment, you might see some volatility in the EBITDA margin range, but in the long term, we will remain in the 21 to 24% guidance that we have given.
Well, that was the management of Castrol India. Very strong margins, but as the management mentioned, a lot to watch out for in the next few quarters as well. But let me take the next query, and this one's coming in on BSC. Stocks up almost. Stock is up today on the back of results, and then cooled down at. We've taken this query. Okay, we've taken this query. Let me take the next one then. This one is on Manipal Health, the company that got listed today on the exchanges. Vishwanatha Reddy has gotten allotment and wants to know about his 25 shares, what he should do with this counter now. Girish, yet again, very, very early on in its listing journey. But how do you look at this counter now in terms of comparison with its valuations, also with its peers?
So I think Manipal Health, I don't have as such of high-end data as of now, so not able to do any explanations into it. But overall, the decent numbers, I think IPO is already listed in this stock. So let's see how the reflection would be there for the next 1.5 quarter. But for as of now, if we talk about any health, these type of companies we are talking about for the hospital industries. So I think you can book the profit as of now, and let's see how the stock will be performed for the next 1.5 quarters for 2 quarters for the long term perspective, obviously.
Okay, all right. The next one that we have is from Sanjay, who's writing us from Bengaluru, asking about an auto anch name that could do well in the next 3 to 6 odd months. Kush, I'll come to you on this one. You know, auto as a pack has been doing very well, but anything specifically from the auto anch space that you think could do well in the next 3 to 6 odd months?
Yeah, I hope my connection's a little better than the previous occasion.
Much better.
But yeah. Oh, great. I'll give two names, Lumax Auto and Sansera. Sansera's already ran up quite a bit, so you might want to buy on declines. But if you want to buy a fresh, buy a Lumax Auto. The rally is just starting at this one. 1600 or just under is very deep. That's stop loss. On the way up, 1770 and about 1900 are your targets. So Lumax Auto from the auto space.
Just a follow-up also, Kush, on SPR Auto also, it's something that you've spoken about in the past. There was a correction there. Would you buy into this one as well as, why haven't you wished Girish yet? It's his birthday today.
Hey, my bad. I entirely missed that conversation. Girish, happy birthday. So good to share the screen with you. Hopefully we'll meet in person also very soon. So many, great birthday wishes to you as well. So, you actually asked me the right question. Shriram or SPR Auto, as now it's called, has been one of my top picks, continues to remain so. This is also something you can consider. I suggest buying this on every decline. So, yes, you can consider SPR Auto as well.
All right, okay. So that's the view coming on SPR Auto. But time now for the rapid fire round. Kush and Girish, you both know the drill. Try to keep your answers as short as possible. The first one that we have is coming in, and this is on small cap names that you can watch out for the next 1 to 3 months. Sunita from Delhi wants to know if at all anything you have on your watch list, Kush.
Something that we recommended today, by the way, Artemis Med Services. 325 was the second target that has been hit. And I remain super constructive on this one. So you can consider this even.
Next one's on Hindustan Zinc. Bindu from Hyderabad, his body share at 668. Girish wants to know the long-term picture for this one.
Sorry, can you repeat this stock?
The Hindustan Zinc.
Can hold this particular counter for the longer period.
Okay, the next one that we have is on Shriram Finance. 140 shares bought at the levels of 983. GS7 from Hyderabad wants to know if you can continue to hold this from a long-term perspective. Girish, what would you recommend?
Can hold this particular counter, but averages is not advisable. Avoid the averaging.
Okay.
Pramod has bought into Dr. Reddy's at 1350. Girish, the earnings have been very disappointing now for the last few quarters. Should he continue to hold or switch out?
No, switch out this particular counter.
Okay, the next one that we have is on Amara Raja. Sriram from Visakhapatnam has bought it at the levels of 935. Continue to hold, sell, Kush.
Decent entry point. The momentum starting to pick up. You should hold. Stop loss at 910.
Next one's on Nykaa, Kush. Neelam from Jaipur has bought these shares at 241, so holding for a while. What's a 3-month view is the question.
No, you can continue to hold. I think the dip today, along with other things, is also profit booking. My suggestion: you should continue to hold. Deepish stop loss at about 310, 305.
Okay, Wipro is the other one that Rajesh from Hyderabad wants to know about. From a long-term perspective, can he continue to hold the 75 shares that he's bought at the levels of 205? So elevated levels. Girish, what would you recommend him?
So can hold this particular counter. IT Packs looks into the restructurings, but the view is obviously a long term, but the perspective would be at least 1.5 year to 2 year.
Okay.
Next one, Girish, is on Castrol. We actually just spoke to the management. Satyan is holding for the last 2 years at 215. So at elevated levels, should he continue to hold, Girish?
Yes, obviously the Castrol's numbers was very fantastic. Obviously the expansions mode is still going on. The restructuring already done by the management, and the margin should be reflected by the next 2 to 3 quarters itself. So hold this counter for at least 1.5.
Okay, the next one that we have is on Glenmark Pharma. Our viewers bought 40 shares at the levels of 2235. Continue to hold. Average, again a long-term query. So Girish, your view?
So for the Glenmark Pharma, obviously hold this particular counter, but the average is advisable for the 2011. That is the better levels for the range of averagings.
Okay.
Kush, the screen can't hold your smile in when we talk about Glenmark. So that opinion also from you, as well as on MTAR Tech, we have to ask you this question. Shiv Prasna actually bought it at 5480. Stocks, locked in upper circuit now, but would you recommend her to exit at the next rise?
Yeah, my smile was because of the averaging, and you already know the answer. Don't average, continue to hold Glenmark. MTARC, it's now starting to see rebounds. I wouldn't suggest an exit if you've seen the pain on the way down. Might as well see the gain on the way up. But yes, trailing stop loss advisable, close to 6,061.50 levels.
Okay, the next one is on Suzlon. Our viewer Rajesh from Hyderabad has bought 1,000 shares at the levels of 70 rupees. Continue to hold, sell, Kush?
No, I think you can continue to hold for some more time. Keep a strict stop loss at 44.
Next one's from Ashwini from Chennai on Dr. Agarwal's Healthcare Limited. I think there was a big brokerage call on the same also, Girish, today. But what's your opinion on the stock?
Counter as of now.
Okay, the next one is on Landmark Cars. Avinash from Bengaluru has bought it at an average price of 494. Continue to hold, sell. Kush, any view on the charts?
Yeah, you can continue to hold, but I would suggest partial profit booking once it crosses 575 and then hold the rest with trailing stop losses at about 525, 520 levels.
Okay.
Sriram from Chennai is holding on to signed DLM, but at 373. So attractive levels. Wants to know a long-term view, Girish. What's your view on signed DLM now?
So signed DLM stocks fundamentals looks good. Obviously, the quarter numbers are going to be reflected in the next 2 to 3 quarters itself. But I think at least 25% booking should be advisable, and the remaining can be hold discounted.
Okay, the next one is from Vijay. He's been holding Balrampur Chini at the levels of 565. Can he continue to hold this one, Kush?
Partial profit book now. Hold the rest with a stop loss at about 610.
And the next question is on Grow. Raju from Bengaluru wants to know the 9 to 12 month view, Kush. What do you see on the charts now?
Could consolidate, already had a good run. So it's consolidating. I wouldn't really advise buying into this entire sector right now.
Got it. Well, that was the last question for the Rapid Fire as well as this edition of the show. Kush as well as Girish, thanks so much for joining in. Girish, have a wonderful evening, and we'll see you, of course, later this week. But thank you so much for joining in. A truncated session, but we got a lot of queries today. Stay tuned though, viewers. A lot more action on the other side. And we'll see you there on 2 p.m. For the rest of the queries. But for now, it's a goodbye.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire? What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies and also at times very chill companies as well. Why I'm talking about chill company? It's very interesting and maybe this will be the first time you can guess the company in the first hint in KYC. And of course, there is no guessing. It's India's largest beer manufacturing company. I know the good times are there, but there are some more hints to it as well. It's the part of Heineken company right now. Also, two more hints to you, but largely I'm sure you must have guessed it by now. Strong Q1 from their premium segment, and also I'd like to point out the stock has reacted positively from the May lows as well. It's up 12%. Already I'm sure you know the company's name, but nevertheless, it's the good times. So the company in focus is United Breweries. Interesting, right? We have got in a decent size, you could say mid-cap, large-cap company in KYC, and at times change is necessary. But why are we getting this company right now? What's the main focus like? And yes, earnings season is going on, but the company has come up with something really good, especially on the volume growth segment, despite inventory reduction. How did that happen? That's the big question. Also, other key questions we'll be asking the management will be the improvement in the free cash flows, how they have been able to do that. Remember, larger companies have better balance sheets and cash flow strategies, and that's what's playing out. Margin recovery guidance, is there a stress right now in inflation and supply chain? That's the big question to be asked. And apart from this, the Karnataka policy and the UK FTA impact, is there any more positive leg of growth for them? Or is beer outside this FTA impact? Apart from this, why FY26 borrowings has spiked, especially in the short-term segment? We'll try to understand the entire methodology, especially looking at the balance sheet and of course the capacity addition plans. Is the company planning something big in Karnataka? We'll try to get that answer for you. And the premiumization trend. This is something which is going on for the last 4 to 5 years and expected to go much more. So industry specific questions coming in as well. But let's understand what the company does. I'm sure a lot of consumers know it, a lot of stakeholders know it, but let's do a revision. What does the company do? It's India's largest beer manufacturer. Also, let's point out what are the other key numbers. It's a part of the Heineken company right now. This is the logo. I'm sure a lot of you follow Champions League, and this is the logo which we generally see. Portfolio now includes, of course, the Kingfisher Ultra, Kingfisher Ultra Max, and Amstel Grand as well. Also, they are into the non-alcoholic segment also. That's where Gen Z is also focusing on. And this is called Heineken 0.0. Interesting, because the alcohol content is 0, but maybe the taste would be on the alcoholic side. 18 owned breweries they have, 28 products in the portfolio. There is of course a mix of owned as well as in-house manufacturing. The Q1 revenue was strong, especially by the volumes, price hikes was there, and change in geographic mix was also recorded. But let's understand the war-related cost pressures were partly mitigated, driving a EBITDA beat as well. Understanding other key factors on Q1, the overall sell-in volume was at 9% and sell-out volume growth stood at 13%. The premium volumes turned margin accretive for the first time. That's where a 7% year-on-year basis growth was also recorded. There are key strategic updates also for the division. Recently, they commissioned their canning line at Telangana. Second important reason and the strategic update coming in for United Breweries is the progress on the capital investments, especially in Maharashtra and Uttar Pradesh. That's where the expansion is happening. Strategic manufacturing tie-up with ABB in Punjab post the closure of Ludhiana Brewery. So a little bit of reorganization is also there at play for United Breweries. But India's growth drivers, the first is the evolving consumption culture. People want more options going ahead, and things are of course moving towards the soft beer category as well. Rising affluence, not just tier 1, it's tier 2, tier 3, tier 4, all across the story is playing out, and the shift towards premium choices as well. So a lot of trends are moving, be it Gen Z, millennials, the way the consumption is happening, it's changing in India, and of course the digital and channel modernization as well. That's also very much important. So these are the growth drivers for this industry. But let's try to understand other key factors, especially what may work for the company. The volume growth remains strong. Second important reason I would like to point out is the inventory level. That is reducing, but despite that, the company is doing well. So the working capital churn is improving as well. That's of course, you could say one of the key reasons. And premiumization, this is a mega trend if you catch it, and the company is diversifying. Let's talk about another reason what may work for the company. That's the progressive policy reforms which are happening in the states, be it Jharkhand or even Tamil Nadu, Karnataka. So a proper re-rating is happening, and a disciplined working capital management is there, and that is why we saw the free cash flows also going up. But what may not work for the company, this is largely industry specific risks. Mixed views coming in from the analysts, and just hang on with me, I'm going to explain you how much buy, sell, hold is there. Valuations still remain fairly expensive. This is largely for the entire, you could say, alcohol pack. The inflationary pressures is not over yet. There might be some issues, but this is something which is industry specific and an uncertain macro environment. Are the cans going expensive? Is the bottling cost becoming expensive? Supply chain issues. So these are the sectoral overhang for the company. But I've given you the enough picture for United Breweries, but let's try to understand the KYC ratings of where things stand. And of course, we have the usual income statement, balance sheet and cash flow. But interestingly, I have added the volume growth here. When you are actually judging a company, the return ratios, if you're expecting, it's largely very inline and flattish, so it doesn't make sense to analyze that. Shareholding street cred is important over a period of time, how things have changed. I've got you important valuations, peer analysis with 3 more companies in this space. And lastly, the analyst take, where there are mixed views coming in. But what are the total numbers and the 12-month target price? You need to be with us, and I'm going to give you that number. Let's understand income statement, what's happening here. That's the first rating. Largely, you could say single digit growth coming in the revenue and EBITDA. PAT numbers are improving. Q1 was a positive surprise. If you remove the margins front, there has been a largely, you could say, a decent set of numbers coming in despite what's happening in the industry. So there was a positive surprise. So I'm going to give this a neutral rating in my analysis when it comes to United Breweries income statement. Balance sheet, very much important to track, and largely we have seen that the borrowing levels, that has spiked up. So we'll try to understand from the management why, but it's decently managed. It's of course an MNC. Properly it is managed, and the cash levels are also pretty strong, and they're expanding as per the key ratios. So it's a neutral rating from my side as well. Cash flows has been the big surprise in my analysis. Look at the jump, the free cash flow numbers. This is not only in Q1 but in FY26 also. This is the number to talk about. A really good working capital management coming in from the company, and the operational to EBITDA conversion, that's at 51%. This is also positive. So overall, the cash flow for United Breweries remains strong. Now let's talk about volume growth, and volume growth has been pretty decent. It is around that 7 to 10% mark over the last 3 to 4 quarters, but then the momentum coming up, and this quarter itself it's at 11%. So definitely there is a positive momentum. Of course, there are some adjustments to it also, but nevertheless this is a strong performance despite the headwinds coming in the industry. So I'm going to give this a thumbs up as well. Let's talk about shareholding, and largely it's neutral. Promoters hasn't moved an inch. It's at 71%. One side FIs are there, slight decrease coming in, but the other side the DIs are lapping from 16%, that's coming into at 18%, and FIs largely there has been a decrease from 7% to 5%. So net, it's a neutral rating for the shareholding segment. But let's talk about street cred, how much money actually the stock has made, and at times seems like there has been a patience testing, especially if you're a long-term investor. Last 5 years, no return has come. It's been flat. Congratulations if you are a trader, you have made money in bits and pieces, and that is why from May lows the stock is up 12%. But definitely there is a correction in 1 year and 2025 highs as well. To balance things out, I have given this a neutral rating in my analysis. But valuations, do you think despite the stock not performing in the long term, are the valuations quite cheap? Well, the answer is no. The valuations of the entire industry is on the expensive side. Just remove Global Spirits, that's on a 12-month forward P of just 13 times. But the other bigger names, the main three companies which we are actually targeting, UBL, United Spirits and Radico Khaitan, all of them having the valuations between 54 to almost 70 times the forward P ratio. So yes, the valuations are expensive, but this is something which is very generic in the industry, and I'm sure most of the viewers who are tracking this company would know and justify this. So let's keep this a neutral rating here when it comes to the valuation picture. But let's understand the analyst take, what's happening here. There are almost 22 analysts tracking the stock. 12-month target price is 1442. This is the number which you should note down, and there is a concern. One side the analysts are bullish, 36% of them, while hold is 18%. That means majority is still in the buy and hold category, but the sell category is also not small. 46% of analysts have a sell rating as well. So there is a divergence in analyst community also for this counter. So I'm going to keep things balanced and I'm going to give this a neutral rating as well. But let's try to understand the KYC ratings for United Breweries, how things stand as the moment. And of course, things change a lot in future as well. Income statement, balance sheet is neutral, but company has done well in the cash flow and the volume growth front. So I've given this a thumbs up. Let's pull in the street cred and shareholding, and largely that has been quite neutral. Valuations, this industry is fairly expensive, but analysts take divergent, buy or sell. So a little bit of concern, but the total KYC ratings for United Breweries overall comes at 5 out of it, largely in line to positive numbers. And remember, this is the numbers on the past data as well. Things change in the future also, so do keep that in mind. But let's try to understand from the management, and we will be joined in by Vivek Gupta, MD and CEO at United Breweries. But this entire conversation will continue just after the break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है, बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद में।
Welcome back to Know Your Company, and now we are joined in by Vivek Gupta. He's the CEO and MD of United Spirits. Sir, of course, a good set of numbers, especially with, you could say, a challenging quarter. The cash flow from operations has improved significantly. Do you think this momentum will continue?
Yes, I think we are overall very excited with the quarter results, especially around category growth. This is the second quarter in a row where category grew more than double digit. and we grew almost 13% in our sell-through volumes and 9% in the sell-in volume. You're absolutely right. We reduced almost 20% inventories for two reasons. One is we wanted to make sure that the beer remains fresh, especially when we come out of the season and during the monsoon period. At the second time, cash is extremely important in a scenario where the cost has got significantly increased behind the Middle East war. So the discipline in the organization to manage cash flow has really helped us to accelerate our growth as well.
And sir, the Q1 volumes grew 13% despite inventory reduction. Is this demand sustainable?
The 13%, let me correct, is our sell-through volumes. Our sell-in volumes are 9% because of the inventory reduction. We do expect category to grow, the category growth to be high single digit to double digit over the next few quarters because some of it is very structural. As I mentioned in my note yesterday, I think it's a time where there is a revolution happening on beer, especially led by Karnataka, where they brought a revolutionary policy to have taxation based on ABV, and we are seeing a significant jump in the beer category. Last year, Maharashtra did some reforms on taxation, which meant that category is growing more than 20% there. We have seen category growth in Jharkhand behind privatization of retail. So some of these numbers are coming behind structural policy reforms, which were long overdue. And some of it is also happening behind strong summer season. But I do expect that the structural reforms will continue and which will continue to make sure that the category will grow. And at the same time, as UBL, our role is to be the category maker. And we continue to invest in brands and invest in programs which lead to the category growth. So I am quite positive that the category momentum should continue in the coming quarters.
Right. Sir, the Q1 EBITDA margins declined this quarter. When do you expect this margin to recover? Of course, the impact was because of supply chain disruption and input cost inflation.
No, thank you for sharing. As I mentioned in the last quarter's call, our industry and specifically our company has been significantly hit by the war impact on the cost. We estimated it is anywhere close to 400 to 500 crore impact on our profits for this year. Despite a 300 bips impact on our gross margin, the team did an excellent job in recovering almost 150 bips out of initiative through better mix, through our own internal cost initiative. I don't think we are out of woods. We are still pleading and requesting states like Telangana, Andhra, and Tamil Nadu to reconsider the pricing because we sell to the government corporations in these states. And viability of business is extremely important because if our raw material cost is going up, our packaging cost is going up, there is no way we can recover that cost unless we get higher EBPs or higher price from the corporation. So we are in consistent conversation through BAI and directly with the government to reconsider the pricing. So unless that changes, the pressure on margins will continue to be there. But at the same time, we continue to work our internal programs to save cash, save cost, and make choices. So we continue to invest behind the brands and consumers.
And Vivek sir, you're mentioning about the states, a lot of factors are moving positively as well as some kind of stress, but Karnataka policy, that seemed to be positive. What kind of impact we can expect?
See, it's early days. We are into the third month of the Karnataka policy. What we are seeing is a category growth upward of 40 to 50% in the first 2 months. As I said, it's fueled by summer as well as the policy change. But we feel very positive that this change is the right change for the category and for the consumer because with the youth population and especially almost 23 million people coming to legal drinking age, I think going towards moderation, having more socially responsible drinks like beer, and having taxation based on alcohol content is the right thing to do. So I really want to applaud what Karnataka government has done here. So I think first it's the right thing to do, and we believe this momentum will continue, and the early signs are extremely positive behind this policy.
Interesting. And Vivek sir, how much headroom do you see for premiumization playing out over the next 3 to 5 years?
See, as I mentioned, we expect premiumization to continue to happen in India and accelerate in this, in this category as well. In 2024, we actually grew premium business by almost 34%. Last year, we grew by almost 23%. And I do expect a similar growth rate to continue in the coming years and years to come. And for us, our brands like Heineken Silver, they are already growing at 28%. Our Ultra is growing at 12 to 14%. And more importantly, we have also got a structural profitability right now, where premium is going to be margin accretive for us going forward, which means that there is more incentive for everyone to invest behind premium brands. So there is a lot of headroom. I think at the same time, we need to really make sure that we manage the affordability at the mainstream and the economy end, and we continue to drive our superior execution at the premium end.
And Vivek sir, how much capacity addition is planned, especially over the next 2 to 3 years?
See, recently we actually announced the commissioning of our can line in Telangana, which actually the first cans were produced last week and also sold to the consumer. Our can line in Maharashtra is on track. We should be able to get our first can from that line in a couple of months. Our greenfield project, which we already announced in UP, is on track, where by end of next year, we will have significant capacity enhancement. We also are working with our partners across India. We work through 17 contract manufacturing partners where we are utilizing capacity. We also are planning to make a mega investment in state of Karnataka in the coming days to enhance the capacities as well. So there's a lot of work happening on capacity.
Right. Speaking of capacities, what will be the long-term mix between the owned manufacturing setup and, say, a contract manufacturing setup? How do you see things moving ahead?
I think, for us, it will be a balance. We do expect to be 60-40 kind of a mix, where, long-term 40% could be contract manufacturing in certain states, because in some states there is excess capacity and it is not right for the industry to create more capacity when the existing capacity is not utilized. So for the overall value chain, we do expect contract manufacturers playing a big role in our growth plan.
And Vivek sir, is there any impact, be it positive or neutral, for the UK FTA which has been completed?
Actually, beer is not part of UK FTA, unfortunately, so we don't see any impact on beer.
Right. Apart from this, also let's try to understand, the FY26 borrowings. Is it all short term, but it has spiked? What's the reason for it? By when we can see the normalization of these short term debt?
I think some of the borrowing is because we continue to make capex investment behind the capacity expansion and new breweries you asked. But some of the borrowing is because we still have significant outstandings in one of these states. So it's a combination of that. So I think we will need to have a good ratio of debt and equity as we continue to invest behind the category growth in India.
Vivek sir, you mentioned a huge number of youth actually coming in the drinking age. So what are the consumption trends looking like in the beer segment, be it Gen Z, be it millennials?
See, I think, as I said, this is a revolutionary time for beer in India, and we have seen what a policy intervention can do. See, 23 million youth are coming to the legal drinking age. All our surveys are suggesting that 70 to 72% of them wants to try a drink. And it is for us to orchestrate towards more socially responsible, moderate drink, which actually builds connection and socialization, which is beer. So I think a lot depends on how the policy interventions are coming, and beer needs affordability, availability, and awareness. We are very positive on what we are seeing in states like Karnataka, states like Andhra, and states like, Jharkhand, where, either the retail environment is improving or affordability is improving. and youth are preferring beer, and Kingfisher is actually still the most preferred brand when it comes to trying a new beer. So we believe that future in India of beer is very strong. If you look at other countries, the big markets for beer are Brazil, Russia, China, all of these emerging markets. And as we go towards 5 trillion economy, beer will play a big role in us. We also did an economic impact study which showed that we contribute to almost 43,000 crore in countries' GDP, which is 0.1% of GDP, and there is a lot of scope for the industry and the category to grow in India.
All right, Vivek sir, it's always a pleasure to have you, and you've given us the entire picture of the company, the growth prospects and industry, and how Gen Z and millennials habits are shaping up in the beer industry. It's always a pleasure to have you with us at NDTV Profit, and best of luck. So that's the management of United Breweries, interesting company, and also the stories, especially on the youth consumption trends, what Gen Z and millennials are thinking, and the company's expansion plan augurs well as well. But the question is, are the valuations attractive for this company or this industry? But for those interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire? What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush.
Hi, thanks so much for joining in to our ongoing coverage of the Reserve Bank of India's Monetary Policy Committee's review
of the monetary policy that has been discussed, of course, since this morning. The outcome of that meeting took place, and some of the headlines that you need to pay attention to. First and foremost, the Monetary Policy Committee as a whole voted unanimously to keep the policy rate unchanged. They've also decided to keep the stance neutral. What you're seeing on the screen is live visuals from Reserve Bank of India headquarters on Mint Street, where you're soon, in the next couple of minutes or less, going to listen to the Reserve Bank of India governor speak about the policy and take questions from reporters, including NDTV Profit's Piyush Shukla, who's at the event right now at the press conference. And I'm sure there's going to be conversations about
press conference, third for the financial year 2026-27. We have with us Governor, Reserve Bank of India, Shri Sanjay Malhotra, along with Deputy Governors, Shri Swaminathan J, Dr. Poonam Gupta, Shri Shirish Chandra Murmu, and Shri Rohit Jain. We also have with us Executive Directors, Shri Sanjay Kumar Hansda, Shri Indranil Bhattacharya, and for the first time, Shri Ravi Shankar. I also welcome my other colleagues from the Reserve Bank. Sir, there are 26 participants from the media. And before we begin, we have two housekeeping announcements. First, I request the media participants to please stick to only one question. I repeat, only one question, so that everyone gets a chance. And second, request everyone to please switch on the mic while speaking, so that those watching the live telecast are able to hear clearly. And once you have finished speaking, please switch off the mic. So with your permission, I will now call out the names.
Yeah, please do so. Even I want to emphasize that, please ask only one question. And in case you ask two questions, then I have the option to answer which question I will answer. So please be very sure which question you want to ask. And in case there are questions left, which I doubt there will be, we can come back. So don't think that your question will go unanswered, provided it's a different question which has not been asked by any of the 26 participants who are here. So kindly, let's follow this rule and keep it brief. So first question, as usual, is by Lata. And then, right?
Yeah.
So you are changing the sequence?
No sequence, sir. Yeah.
Okay.
Yeah. Thank you, sir. I'll request Ms. Lata Venkatesh from CNBC TV 18 to please ask the first question. Lata, please.
Thank you very much, Mr. Brijraj, Governor, and everybody. Sir, the market found your policy statement more dovish than expected. And their reasoning was, if you look at your inflation forecasts, it is above 5% for almost 1 year. That means well above your target by 100 basis points, well above the given target. As well, the real rate, therefore, becomes negative for a better part of the next 6 months or so. So is it that you are going to concentrate on core inflation, and when you deduct, you're looking at T-bill? If you take the T-bill 1 year ahead and deduct the 1 year ahead core, only then you come somewhere near a real rate of 1.4. I mean, are you going to be reconciled to a negative real rate or a very, very low real rate?
So let me first of all say, I mean, we are neither, dovish nor are we hawkish. We feel that this is the right policy rate for the given growth inflation dynamics that we are in today, and the outlook that we have projected ourselves. There is a lot of uncertainty, which will, of course, play out. The framework is very clear. I don't think there should be any confusion about the framework. Our target is headline. It's not core or core excluding pressure. It is the headline inflation, which is the target which has been given to us, and we'll continue to be guided by the headline inflation. And it will be our commitment, it is our endeavor to bring the headline inflation in line with the target over the medium term, as was mentioned even earlier. Now, why we look at core and core is because we need to know as to what the underlying inflation is and where headline or underlying inflation is going to converge going forward, because headline inflation because of food and now because of fuel, because of the external shocks, can be very volatile. And so, as I mentioned even in the earlier press conference, that this volatility is not something that we would like to bring in even in our policy repo rate. So it's in the medium term that we target our policy, medium term target our headline inflation. And accordingly, we will take action as may be required, given the outlook and how the growth inflation dynamics play out.
Thank you, sir. We'll take some more questions from our left side before we come to this side. I'll now request Manojit Saha from Business Standard to ask his question. Manojit, please.
Thank you, sir. Thank you. My question is on FCNRB scheme. Is there an option for you to close the scheme prematurely before the deadline in case a certain amount of inflows coming? You may have a target in your mind. So, because I'm asking this because there is a cost to this scheme because RBI is subsidizing it, and there is a view that the situation is now not as bad as 2013, where India was considered a fragile five. Forex reserves were only 275 billion as compared to 700 billion around. So that concern is there. So is there an option to close it prematurely once you get the amount of deposits which you may have in your mind?
We have got robust flows, as you have mentioned, and we do hope to get good, healthy flows going forward. As of now, there is no proposal under consideration to close the scheme prematurely. We will keep you posted on this.
Thank you, sir. I'll now request Anup Roy from Bloomberg to ask his question. Anup, please.
Thank you, sir. Sir, we have seen $40 billion being mobilized by the FCNRB scheme, and yet the rupee has not appreciated much. I'm just trying to understand what is happening there. Is it because you are squaring off your forward position and the dollar is not coming into the market? Can you please let us know what is happening there?
I think the underlying fundamentals of our Indian economy are very strong, as I have earlier mentioned. There can be an argument, as some people have made, that it is perhaps, on nominal or real effective exchange rate terms, it may be undervalued. There is a lot of uncertainty. It is quite possible going forward as the tensions and the conflict de-escalates, it is quite possible that the rupee may further strengthen. It has strengthened over the last 1 month or so. It has strengthened from 97 levels now to about 95 levels. So it has strengthened. And our policy has always been that the markets determine the prices level and the band. We don't pursue. We only we only intervene in case there is an excessive volatility, there are speculative pressures that are getting built in, and it will be our endeavor that the trajectory for rupee remains orderly and there is no disruptive movement, or there is no expectation, self-fulfilling expectations getting built into the exchange rate.
Yes, thank you.
Thank you, sir. I'll request Hamsini Karthik from Money Control to ask her question. Hamsini, please.
Thank you, sir. Good afternoon. My question is also pertaining to FCNRB. I would like to understand if you could please help us with the geographical split of where this deposit flow has really come from, and whether the deposit flow has ticked all the boxes in terms of BOP management, liquidity, and forex from an RBI standpoint.
Yes, as of now, it has ticked all the boxes. You asked two questions, but they are related, so it's okay.
Thank you.
And your second question is geographies we don't have. We don't collect geographies. But the flows, as I said, have been robust. We had, even before these measures, a very strong and a comfortable external position. This further fortifies our external position, including the BOP.
Thank you, sir.
Thank you, sir. I'll request Ekta Suri from Z Business to ask her question. Ekta, please.
आज आपने अपनी पॉलिसी में एक स्टेटमेंट से बताया कि मार्जिन्स जो हैं बैंक्स के अब उतने शायद ल्यूक्रेटिव या उतने अच्छे नहीं हैं। आपने ऑफ कोर्स इंग्लिश में बोला था, लेकिन उतने बेटर नहीं है जितने पहले होते थे। तो सर, क्या सर आरबीआई ने इसे अकाउंट में लिया और इसी वजह से जो आपने बल्क डिपॉजिट्स पर डिफरेंशियल रेट्स का पेपर निकाला, क्या उसकी एक वजह ये भी है? और क्या अब आरबीआई इसको ट्रैक करेगा कि बल्क डिपॉजिट्स पे बैंक्स जो हैं जो किसी और तरीके से मार्केटिंग एक्सपेंस या किसी और तरीके से ज्यादा पार्टीज को फेवर कर रहे थे या उनको एक्स्ट्रा पैसे दे रहे थे डिपॉजिट्स के नाम पर, सर उसको क्या आरबीआई ट्रैक करेगा? और ऐसे ही बैंक्स जो हैं अपनी जब रिजल्ट्स आते हैं तो सर उसमें टेम्पररी फिक्स डिपॉजिट्स लेकर अपने कासा को इन्फ्लेटेड तरीके से दिखाते हैं, तो इसको आरबीआई किस तरह से लेगा सर? सर सब कुछ डिपॉजिट से ही रिलेटेड है।
3 क्वेश्चन आपने पूछ लिए एक में।
सर अंडर वन अम्ब्रेला ऑफ डिपॉजिट्स।
वो एफसीएनआरबी में भी उन्होंने 2 पूछ लिए। बल्क जो हमने इंटरेस्ट रेट के गाइडलाइंस जो आज निकाले हैं या पहले जो निकाले थे, आपने पहले वाले के लिए जिक्र किया, वो निम की वजह से, निम में जो कमी हुई उसकी वजह से नहीं थे। वो जो अंडरलाइंग कॉस्ट है डिपॉजिट की, जो भिन्न जो डिपॉजिट जमा करता है उनके लिए भिन्न हो सकती है, क्योंकि हमारे जो दिशा निर्देश हैं विशेष करके एलसीआर के लिए वो अलग हैं। तो उस चीज़ को ध्यान में रखते हुए हमने वो गाइडलाइंस निकाले थे।
So the other two parts
अगर नहीं आएगा वो क्वेश्चन, अगर कोई नहीं पूछ लेगा तो ठीक है, नहीं पूछेगा तो आई विल कम बैक, तो वापस आपके पास आएंगे।
थैंक यू।
अगर कोई पूछ लेगा तो ठीक है, नहीं पूछेगा तो फिर वापस आपके पास आएंगे।
थैंक यू सर।
सभी प्रश्नों का जवाब जरूर दिया जाएगा, बशर्ते समय की सीमा में रहे।
धन्यवाद सर।
Yes, Suraj.
I'll now request Anurag Shah from ET Now Swadesh to ask his question. Anurag, please.
नमस्ते सर। सर, जिस तरह से आज एक बड़ा ऐलान किया गया है आपके द्वारा लोन इंटरेस्ट रेट कैलकुलेशन का, तो सर ये क्या उसी तरह का बड़ा ऐलान है जिस तरह आपने अभी मिस सेलिंग से जुड़ा हुआ एक ऐलान किया था, जो 1 जनवरी से नियम लागू हो रहे हैं, जिसकी काफी सराहना भी हुई, बाकी रेगुलेटर के द्वारा भी सराहना की गई। तो लोन इंटरेस्ट रेट कैलकुलेशन के नियमों से सर आम जो करोड़ों लोन लेने वाले लोग हैं उनको क्या राहत मिलेगी, कब तक इसके नियम लागू होंगे और किस तरह से आरबीआई एक दिशा निर्देश देगा जिससे लोगों को राहत मिलेगी?
ये जो इंटरेस्ट रेट के नियम हैं, इसका प्रमुख जो कारण है वो ये है कि विभिन्न जो हमारे रेगुलेटेड एंटिटीज हैं उनके लिए भिन्न भिन्न निर्देश दिए हुए थे। तो उसको युक्ति युक्त करने के लिए और स्टैंडर्डाइज करने के लिए हमने ये नियम निकाले हैं। और इससे ट्रांसपेरेंसी, पारदर्शिता वो भी बढ़ेगी, क्योंकि लोगों को सबको मालूम रहेगा कि जो ब्याज दरें हैं वो क्या हैं, किस प्रकार से सेट की जाती हैं। तो मुख्यतः ये एक रैशनलाइजेशन एक्सरसाइज है जो कि कंज्यूमर प्रोटेक्शन को और अधिक बढ़ाएगी।
तो लोगों को ये नहीं समझना चाहिए कि ईएमआई बदल जाएगी, ईएमआई तो उतनी रहेगी, लेकिन आपको
जी हाँ जी बिल्कुल
सही पारदर्शिता तरीके से अपना ब्याज और प्रिंसिपल समझ में आएगा।
Sir, can you please repeat in English, because that was to be my second question also. The market is very confused. What do you mean by all regulated entities? Will NBFCs have to declare EBLR? All those confusions
Will
are there.
NBFCs have to have external benchmark?
देखिए वो all those details will be there in the draft guidelines that we are coming out with. So please wait for those guidelines. All the details are over there. It is not a major change, as I have mentioned to you. The same, there is no requirement. There is no major change in requirement as you are referring to with regard to NBFCs and bringing them onto EBLR, etc. There is no major change. There is only a rationalization. Perhaps DG Shirish can further clarify.
No, you are right, sir. You have to wait for the circular to come out. Only thing I can tell you is no major change, and emphasis is on transparency and basically conduct related. So don't look at the substantive part, but nevertheless, wait for the circular. It will come out soon. Thank you.
Okay.
Yeah, thank you, sirs. Sir, we'll now take a few questions from the right side. I'll request Sangeeta Mehta from Economic Times to ask her question. Sangeeta, please.
Thank you. So this, your policy statement, you have said that transmission of policy rates have moderated. And now with the swap window being opened, we expect liquidity to surge, and it has surged and it might surge further. But do you expect banks to pass on the benefits of liquidity to the customers, because banks are already talking about improving NIMs and things like that. So it's kind of wanted to understand that.
Liquidity will obviously help everyone. It was required, but let me mention that the liquidity may be in surplus only, for the very short term. It may peak, around in Q2, around September or so. And going forward, it should get absorbed because of our normal needs of the economy through increase in currency in circulation, higher requirement for reserves because of deposit growth. We also have some forwards which are getting matured. So overall, of course, it will help, but it is not something that is extraordinarily high liquidity.
Doesn't answer that. Would you expect banks to still have some?
As I mentioned, it is not substantial. So it will only help, at the very margins. It's not extraordinary or substantial over a very short period of time. And this is the kind of liquidity that we, even otherwise every year, through OMOs and other means, through swaps, we provide this kind of a liquidity. Now, a lot of it, of course, will depend on the amount of FCNRB deposits that we will get, but it should, more or less, it should get absorbed in the medium term.
Thank you, sir. I'll request Jasprit Kalra from Thomson Reuters to ask his question. Jasprit, please.
Thank you, sir. Governor, my question relates to succession planning at banks. There have been instances where banks have taken longer than a 6-month renewal cycle for the top leadership. Some other places, CEOs have left within one term. Given the ambition for India to have larger banks that can have a global reach, analysts have also pointed out that the tight grip on compensation, etc., for top talent at banks can have a limiting impact on the sort of talent banks themselves can draw. Do you see room to sort of review some of these rules that are in place and maybe relax some of them going forward?
There is no proposal as of now.
But do you not see a need as well, given the ambition to have larger banks?
We obviously have a need. We all obviously, would like and aspire to have more and more banks. But whether it is coming in the way or not, as I mentioned, has not been examined by us, and there is no proposal in this regard which is pending.
Thank you.
Yeah, thank you, sir. I'll request Piyush Shukla from NDTV Profit to ask his question. Piyush, please.
Good afternoon, Governor, DGs. Thank you, Brit sir. Sir, yesterday the government has made some amendments to the Payments Act. Now there is chatter that there could be, government may levy MDR on certain transaction, whether above 2,000 rupees, or it could use that on large retailers. You have earlier mentioned how somebody has to bear a cost for this public infrastructure utility. I want to understand from RBI, will we look at transaction size? Will we target certain retailers? What is the strategy going ahead? If you can share some views on this front, sir. And last time, sir, you had said that the upper layer list of NBFCs will come out very soon. So how soon will it come, sir?
So, your first question I will answer is that it is very premature. Right now, the government is still carrying out the amendment. The costs have to be paid by someone. I mean, it's a public, we all want, that this public infrastructure should continue to strengthen, maybe become more efficient, etc. We continue to do that. That's our primary focus as of now. Let's wait and watch for further developments on this. I don't have anything more to add.
Will the user get charged, sir? Because if you're levying a fee on a merchant, eventually it passes on to customer. So the goal is to have 800 million transactions a day or so. So imposing a fee.
Let's wait. It's premature right now. But please keep in mind also that ultimately it is the consumer in some way or the other who's paying it already. So it may not be the same consumer, it may be, the general economy, and you don't get to see it directly, but already it's, to answer partly, your question, whether it gets passed on, and somehow, it's already getting passed on. It may not be directly on to the user pays principle, but someone is paying the cost. This is what I meant. Someone will have to pay the cost. I said this earlier, and even now I'm saying. So what is important is that we continue to invest and we continue to find the means, whether it is through MDR or other things. I think those are matters of detail. Let's wait and see how the situation evolves going forward.
Yeah. Thank you, sir. I'll request Ankur Mishra from ET Now to ask his question. Ankur, please.
Thank you, Brit sir, and good afternoon, Governor. First of all, I just wanted to get what is the assumption on crude and rupee? Please don't consider it as question. To ask on, I want to understand your sense more on GDP front. In last policy, of course, the FY27 forecast was 6.9%, then it came to 6.6%, and now we are at 6.7%. Given in the first quarter itself, you are saying 7% growth is possible. Is there a scope of overall 7% growth for FY27 which is possible, considering the fact that the data which has come in the past also has been better than what was forecasted?
The 6.7% growth that we have estimate, the outlook that we have given is an estimate. And we have also mentioned that the risks are evenly balanced on both sides. We also give a fan chart to give, the relative probability distribution. So if you look at the fan chart, it will suggest that there is a possibility that the growth, to answer your question, there is a possibility that the growth may be 7 or more.
Yeah. Thank you, sir. I'll request
assumption, if you can
answer only one question. And this is not something, that I think we answer. This is internal to us. And these are market sensitive information, which we would not like to give.
I'll request Shayan Ghosh from Mint to ask his question. Shayan, please.
Governor, I wanted to understand. So in April, RBI had asked banks to submit a board-approved policy on AI-related cyber security resilience to RBI. And within a couple of months, we have seen a large bank facing a cyber incident where a lot of customer data was put on the public domain. Will there be a cost to such incidents in the banking sector when banks fail to adhere to these guidelines, or they are not prepared enough to counter these attacks?
The IT systems of our major banks and big regulated entities are quite strong, robust. They have put in place checks and balances to ensure that they are secure. We have not only guidelines and regulations, we also have a supervision which is done very regularly. Any shortfalls or vulnerabilities are pointed out, measures to be taken to further strengthen the systems are suggested. They are followed up they are monitored, they are followed up to ensure that the systems continuously, while new threats and vulnerabilities keep coming up with new developments in the IT sector, at the same time, our banks and regulated entities also keep preparing and making themselves more secure and more resilient.
Thank you, sir. I'll request media persons to please ask only one question, as was informed earlier. I'll request K. Ramkumar from Hindu Business Line to ask his question. Ramkumar, please.
So there has been a divergence in the credit and deposit growth.
Divergence between the credit and deposit growth, with credit growth outpacing the deposit growth actually by a huge number. So just wanted to understand, will this not create a situation where lending rates will go up, deposit rates will go up? And my second question is about whether the transmission is complete, monetary policy transmission.
So I answer your second question. Monetary policy transmission is about 80 basis points. It has moderated. It was about 90 basis points on the lending side. And so I would say, that it is more or less complete.
Thank you, sir. We'll now take the remaining questions from the left side. I'll request Madam Falakna Sayed from Deccan Chronicle to ask her question. Falaknas, please.
Sir, according to reports, Paytm Payments Bank had around 800 crore of funds that are locked. Of that...
Okay, all right. So that's the word coming in from the press conference of the Reserve Bank of India to talk about monetary policy and, in fact, banking system regulations as well. We'll get you all of the highlights over the course of the day. For now, this is the wrap on the policy coverage for this moment. Lots more coming up after the break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? 6 तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Hiral Datia and Sharad Dubey, who's standing at the profit pit. Sharad, an extremely volatile day of trade, though the MPC, the RBI policy kind of has been a non-event.
Exactly, you're right, Viral. It's largely a non-event when you talk about RBI, MPC, and market has moved on. But a little bit of sell-off is coming, and look at that. We're at the end of, you could say, the day's low level. Also, Nifty Bank, that's where the sell-off has actually intensified, especially on the private names. That's also down almost 270 points. A little bit of gyrations were happening during the RBI MPC meet, but nevertheless, it's largely factored in, and there wasn't much surprise as well. But let's look at the key factors, what you should be watching out for, and the traders are suggesting a consolidation can be there going ahead, but you never know what happens in the closing session. RBI MPC has kept its rates unchanged. Of course, concern might come in, especially on the minutes when we start reading that. Nifty Bank is very volatile also. We can see up moves also, down moves also, both sides it's happening, but it's in a range. Also, let's look at the other key factors, and this is of course strong buying in the realty segment. This is a divergence, especially because it is interest rate sensitive. Auto also on the other hand is seeing a good buying. The global risk of sentiment is reducing, and small caps, interestingly, look at that, that's doing really well. So value based buying is definitely there on the cards, especially on the earnings where the reactions are happening. And speaking of earnings, 3 important earnings, Power Grid, Oro Pharma and Biocon are expected to come out with the results. We'll be tracking them. And also other group of earnings are also there, which are the larger ones, PB Fintech, Navin Fluorine, Cummins, which we'll be focusing on. So this is the entire picture for the day. But there's a very important impact of cash, that's which has been actually hunting or actually hurting the entire market ecosystem over the last 2 trading sessions. And today itself also we might expect some kind of stress. But to understand more, is this stress going to other players? We are joined in by Nimit. Nimit, please come. Nimit, is there a little bit of panic coming in amongst the broking community or the ecosystem right now?
Well, I don't think it's panic, because the sources that we speak to, especially the regulatory sources, they say that actually the problem here is not about the volatility, it's about the participation. Right. And once the pool becomes deeper, right, and we see more meaningful investor participation here in this SAS period, then there's going to be no volatility, and this volatility will reduce over time. In fact, they say that there are no plans to modify the current SAS framework that's been set out, and the sources within the regulatory framework say that the design and the technical architecture here is robust and it matches international standards as well. The simple message here is that over time, as we see more participation and widening participation, the volatility is naturally expected to just settle down.
Fair enough. Thanks a lot for that. And of course, the main thing is give it some more time. Some teething issues are coming in, and once the volumes picks up, then maybe the pricing, we won't see so much of that move. Over to you, Hiral.
Thank you so much for that. It's going to be interesting how this pans out, because this closing price becomes absolutely important from an F&O settlement index calculation, mutual fund NAV, as well as ETF rebalancing aspects as well. And that's the reason why, you have the regulator who's coming out and saying that higher amount of participation is what is needed when it comes to cash, for cash to settle and not see these kind of gyrations which are coming in as well. So that's where, in fact, we will be constantly giving you updates in terms of how cash is panning out for the Indian markets right now going forward. But moving on, time for earnings. Alembic Pharma, that stock is buzzing in trade, and this is on the back of a good set of numbers that have been reported, mainly driven by US and the API business. The stock seeing gains of little over 2%. To understand the quarter gone by and what's lined up going ahead, We are joined by G. Krishnan, Chief Financial Officer at Alembic Pharmaceuticals. Mr. Krishnan, welcome to the show and always a pleasure to speak to you. My first question coming to you is overall a decent set of numbers wherein a 25% revenue growth, profits have seen an uptick of around 12%. So there has been broad-based growth across businesses as well, or across segments, I would say. How are you looking at the quarter? Has it met your internal expectations?
Yes, thanks for having me here. And yeah, it's been a good start for FY27, and we had reported about 26% consolidated revenue growth, and this growth is supported. It's broad-based growth coming across the businesses. India branded business grew at about 7%. International generics came in at about 37%, and API grew at about 33%. And more specifically, US also witnessed a growth of about 49%. And this growth is actually, coming from not only from new launches. So we have had some pretty good new launches in the last quarter. In addition to that, the volume growth also has supported in US, and this volume growth is coming from the products that we launched in the last 12 months, and also from the existing products that we've got. So pretty much it is broad-based growth. And in addition, while the profit growth also is good, and it remained resilient. Even after considering the investments that we have made in R&D and the US branded platform that we are building. So we reported a EBITDA growth of about 21% and a profit after tax growth of about 12%. So overall, the quarter has given us good visibility on growth momentum, and particularly in US generics, while we have continued to maintain our investment priorities, which remain unchanged.
That's interesting. Now, Mr. Krishnan, the question that I have for you is then a 26% revenue growth, a 49% jump in terms of US sales. So would you describe this as a beginning of a new growth phase for Alembic, or is FY27 likely to be the peak of the current cycle?
Yeah, so Q1 had some good contribution from new launches, and the broader point is that then execution is improving across the platform, and especially when you look at US generics, API, and animal health. So it's broad-based execution that has supported the growth, and more specifically in US, when you look at the contribution from new launches, in addition to that, we have seen volume growth as well, right? So this gives us confidence that the momentum is more execution-led rather than purely any one-off, right? And we also have a good pipeline of new launches coming up in the rest of this financial year, and which is about some 15 odd products that we intend to launch. And overall, we have got about close to 289 ANDA filings that we have had in US, and about 185 product launches that we have already done. So it's more of a platform effect and the impact of R&D investments that we have done over the last few years. So we believe that this growth is sustainable, and also, that gives us the confidence that, we have upgraded our guidance for US from low double digit to mid teens. Now we are confident of doing mid to high teens growth for FY27.
Sir, one thing on the margins front, on a year-on-year basis, there has been a compression of almost 100 basis points. This is on a calculated basis. Do you think this margin pressure could be there going ahead in the couple of quarters, or is that bottoming out?
So I would like to split the margin impact into margin performance into two aspects. One is the core operating performance, which has continued to deliver good leverage driven by volume-led growth. We have seen good improvement in capacity utilization across the facilities. So the underlying margins have improved over the last year. And what has happened is the investments that we have done in R&D. R&D investments have grown about 29% year on year. and also we have invested in US branded platform, right? So which is more of a soft launch that we did in the last quarter, and we see that scaling up over the next few quarters. So the investments that is strategic planned it's we are in the investment phase, which is what has marginally impacted the reported EBITDA margins. So the underlying EBITDA margins are really robust, and there we are seeing operating leverage expanding as we go forward.
And Krishnan sir, the animal healthcare segment has done well. This is a very growing segment. How do you see this panning out? Any kind of expansion or any kind of investment plans are there for this segment?
So the animal health it's part of the India branded portfolio that we have got. So close to 20 to 23% of the revenue within the India branded business is coming from animal health, and consistently we have delivered growth of about 20% plus in animal health in the last year, as well as we have continued to maintain the growth trajectory in the first quarter. We believe there is opportunity existing both in farm animals, poultry, and also we have begun our journey in the companion animals, and there is good opportunity that we believe we can unlock as we go forward. Our focus will be on expanding the product portfolio, building the momentum with the existing field force, and also strengthening the on-field execution, which we believe, I think there is good momentum that we would like to continue to maintain on animal health.
Okay. My other question coming to you is now, everyone's watching out for the margin recovery story as well. With the way the first quarter has panned out, do you think that the operational leverage will finally start showing up meaningfully in FY27 itself, or do you think there is a potential of it moving to the first half of FY28, where material benefits will be shown?
Yes, operating leverage is already playing out in the first quarter itself. And if you look at the R&D pre-R&D EBITDA growth, that is much better than the reported EBITDA growth. And the reported EBITDA also absorbs a good amount of the ramp up in US branded platform that we are building, right? So that costs is already absorbed today, and the margin expansion is helping us absorb that incremental investment that is going into building the platform, as well as the additional incremental R&D spend that we are seeing. So the operating leverage is already happening as we speak, and we believe that the overall margin profile for the current financial year will continue to improve as we see the US branded platform scale up, ramp up in terms of operations, and then start contributing to the profit.
Okay, so lots to watch out for, but an interesting quarter. Thank you so much, Mr. Krishnan, for joining, and always a pleasure to speak to you on NDTV Profit as well. The stock's in gains of a little over 2% as we speak. But moving on, Motherson Sumi Wiring. Let's pull up that one on the screens. A strong 37% jump in revenues is what we've seen. However, soaring copper prices and wage hikes is what has dented margins, keeping profitability growth largely flat. That stock seeing gains of 3.5% has cooled off from the day's highest levels as well. But let's discuss the quarter gone by with Gulshan Pahuja, CFO, and Anurag Gehlot, COO at Motherson Sumi Wiring India Limited. Welcome to the show, gentlemen. Always a pleasure to speak to both of you as well. Overall, strong revenue and volume growth. However, as we mentioned, margins have remained under pressure. And yes, it's copper prices, wage hikes. The greenfield project ramp-up costs also, if I'm assuming correctly, are the ones which have dented margins. Do you think this is the trajectory that you are looking at in terms of FY27 as a whole, or do you think this is just a one-off and things will improve from here on?
I think good afternoon. First of all, thank you very much for taking us on NDTV Profit. As you rightly said, it's a strong performance in terms of revenue as well as in EBITDA. Obviously, we have done 3,407 crores with around 37% growth year on year, and where the market has grown by only 17%. So we are outperforming the market. obviously coming on the margin side, where we are seeing that the commodity prices, which is copper in our case, has gone around 53% year on year, and on sequential basis also, on quarterly basis also, they have increased. Obviously, that impact is there, and the abnormal manpower cost, which has increased because of the minimum wage impact in the NCR region, which has given a little impact on these. But as commodity prices are on the lag of major customer with the 3 months and rest of them for the small customers for the 6 months basis. So I think that recovery will happen over a lag of a quarter or a 6 months period. As far as manpower costs are concerned, obviously we have to do a lot of upskilling and to improve on the shop floor, because these cost increases in the past years also. But exceptional high, we always go back to the customer, and we have seen in the past as well that customer has understand this pain, and they have discussed this with us on to giving the claims and giving us other sort of alternate businesses to at least to nullify these impacts. But as Motherson Sumi Wiring is always a ROS focused company, you must have seen in the previous years also, we are performing more than 40% ROS. And for this year also, we are keeping a very good focus onto that. And if this year continues with the plan, what customer has given, the forecast given to us, I think we should be doing at the end of the year.
Okay. So everything said and done, will you be able to pass on the increase in costs to protect your margins in the coming quarters?
As I advise that copper, the commodity prices, they are as per the terms with the customer. So that is a lag of a quarter or a 6 months as per the agreements with the customer. And for the manpower cost, which are exceptional high, as I suggested that in the past also we have gone to the customer and they appreciated our pain. So this year also we'll be discussing with our customer on these areas, and we'll see how customer are going to help us in this scenario.
Gulshan, from your side as well, what's the outlook looking like in terms of business, if you have to look at the different segments, and where are you seeing heightened demand? Because the sales numbers, if you have to look at that aspect, pretty strong even in the month of July. And obviously that trickles down to the OEMs as well to some extent. But in the next 3 to 4 months, if you have to look at how the demand is panning out from OEMs, what are you picking up and what is that telling you for FY27?
Definitely, it's going to be a good. I think July went well, as you have mentioned, in terms of the automotive industry also. And as far as our growth is concerned, the growth is phenomenal in this quarter. I mean, it's a very historic in the company history as well, outperforming the industry by, significantly. Where the industry grew by 16%, 17%, we have grown by 37%. Even if you take out the copper inflation, we still have a 30% growth on our side. And July also went well. I mean, you have seen the industry numbers also, and as far as our performance is concerned, July also went well. So we are quite hopeful that the momentum which was built in the later half of last year was continued to be seen in this quarter going by. So we are hopeful that we are entering into an era in the industry automotive era where the growth is not going to be, at least not going to be a degrowth. It would be sustained at the same levels, if not seen any multiple factors. So I'm very hopeful by this year, and we would be at a very good stage in terms of, obviously, target is to outperform the industry in all aspects.
And in terms of FY27, I'm coming back to the question, Gulshan, in terms of revenue growth versus profitability as well. Barely positive, right? At what point does growth start translating into meaningful earnings growth if an investor has to look at it? And two, there is confidence that you will probably outpace what the industry is doing, like the way you've delivered in terms of the first quarter. So should investors brace for good margin recovery towards the end of the year, or do you think it'll remain where it is?
I think The last year I can understand because when the greenfields were going in operations, but we maintained in the last quarter that now they have reached a stage where they have start contributing us, right? So from this quarter onwards, directionally we are going in that direction only. But we need to understand one thing very importantly, that we are going in a very cost challenging environment right now. In the beginning of the fiscal year, nobody has anticipated that this much increase would happen in the minimum wages. So we have been impacted by very significantly in this quarters. Of course, we have our discussions on with our customers. So some pass through would be there in the coming, and you will see in the coming quarters as the discussions concluded. But I would say if you just see at the normalized margins, I think we have already improved so much year on year basis also and quarter on quarter. So directionally, I think we already tread on a path where we need to look at the profitability which were there in earlier years. Second aspect, which is very important to note, that despite we had greenfields, we were able to deliver, the more than 40% growth in the past year, right? And in fact, since the beginning of the this company in that way.
Okay, I think we'll have to reconnect as well. I think the audio is giving us some bit of glitch, but an interesting quarter that the company has posted so far, and lots to watch out for. Thank you so much, gentlemen, for joining in. So that's the management of Motherson Sumi Wiring as well, seeing gains of 3.5% as we speak. But the next set of numbers, Glenmark, the earnings have beat estimates, and this is mainly powered by the India business. However, the stock not really doing too much, down 0.2%. My colleague Mahima caught up with the management to discuss the quarter gone by. Let's listen into that conversation.
Hello and welcome. You're watching NDTV Profit. I am Mahima Vajrajani. In Glenmark, Pharma is in focus on the back of its Q1 numbers, and overall, it was a strong a strong showing, in fact, from the India and US business. Margin guidance also largely maintained. To understand as to how things have shaped up, how they're going to look like going forward, we're now joined by Anurag Mantri, who's the Executive Director and Global Chief Financial Officer of Glenmark Pharmaceuticals, joining us now. Thank you so much for taking out the time, Anurag. I'll start by asking about the US business, because that has delivered a sharp recovery this quarter, excluding, of course, the license income. But how should investors think about the underlying growth trajectory for this one, for the next few quarters especially?
Overall, let me first talk to overall business this quarter. If you see, we have the revenue growth of 23%, and even if I remove the IGI income-wise, that revenue growth has been almost around 18% plus. So it's a very strong quarter for us. And even, but if you see, EBITDA has grown up more than the revenue, which shows that our quality of earning is also improving. So, and this growth is also very broad-based this quarter. So we have seen across, like India continues to grow very strongly. US has grown very strongly. Entire emerging market, especially Latin, MEA, and Russia, CIS have contributed double-digit. All contributed double-digit. And Europe can also continue to grow. So across all the geographies, we continue to do well. So, as I mentioned, that the EBITDA is growing faster than the revenue, so which is showing that the quality of earning is improving considerably. So in terms of our mix, in terms of withstanding the global pressures on the cost, which includes like, if you see the quarterly, this quarter, like across the thing, API cost is increasing, packing material cost is increasing, logistic cost is increasing, but despite that, we have been able to hold on to our margins of around 20%. So overall, this quarter has been good. But specifically in US, if you see that we had a good respiratory launch. We had launched fluticasone 44 mcg last quarter, and this is going very well. This was the exclusivity period, and which continued to do very well. And then also we have we are relaunched the Ryaltris with our own commercial franchisee. So that is also doing will also contribute to this year. And besides that, Monroe also has been restarted. We relaunched the Fulvestrant from Monroe. So that's the first commercial launch from Monroe, and it will start contributing meaningfully from FY28 onwards. So Monroe facility in US will also start contributing to that. And this year, H2, we are actually again launching the two we are expecting the two new approvals, which is one was fluticasone 110 and ipratropium. So which will should also contribute well into our overall revenue mix. So we expect a very strong year for US, India, Latin, across the thing, and also Europe will continue to do do also well for us.
All right, but Anurag, from the prospect of guidance, just for the sake, if you have any internal guidance that you have in terms of growth targets for the US business.
So US business, we are expecting this year to be a $430 million plus of the revenue in this year, which is a very significant number as compared to the previous year. And we'll continue that momentum because US, we are seeing multiple launches, respiratory, injectables across that. So we are seeing a good growth profile in US this year.
Got it. You talked about multiple respiratory approvals in the second half of FY27. Just want to get more sense which product that you've planned to launch will have the biggest commercial opportunity. What is the TAM looking like, and how important are these launches going to be for FY28 earning targets?
So if in US particularly, if you see fluticasone 44 mcg, which we launched last quarter, it's continue to do well for us. Ryaltris relaunch is also actually getting on track. So I think the Ryaltris is this year, because we were not doing much in Ryaltris last year because through the partner one. Now we have taken that relaunch. We have relaunched the product with our own internal things. So I think that will continue to do well for us in US. And the next half, we are expecting two more new approval. One is fluticasone 110 as well as the epratopium. And so that also will continue to do well. So all these products will have a good contribution overall this year in our this year of US revenue.
Okay, so that's with regards to Glenmark Pharma. No major moves coming in on the stock. However, markets continue to remain volatile, and we're nearly at the day's lows in terms of Nifty 50 and a lot of counters that are dragging markets lower today. But completely out of time, a thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit from the NDTV Profit Suzlon studio. We'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message.
The RBI has kept the repo rate unchanged at 5.25% while retaining its neutral policy stance. The MPC's decision was unanimous, with the key liquidity rates also left unchanged. Meanwhile, the RBI has also raised its FY27 GDP growth forecast to 6.7%, citing a resilient domestic economy. The central bank also upgraded its first half growth estimates, signaling confidence in sustained economic momentum. Meanwhile, Nifty and Sensex slumped to the day's lowest points despite subdued crude prices. Realty, auto remained resilient. FMCG and bank, meanwhile, on the back foot. And oil prices extend their losses for a third straight session as hopes grow for a deal to reopen the Strait of Hormuz. Positive signals from the US, Iran and Qatar ease supply concerns, also adding some pressure on prices. And Castrol India shares move higher after the company reports a strong June quarter performance. Net profit surges more than 42% on a year-on-year basis, boosting investor sentiment and keeping the stock in focus. PTC India reports a sharp drop in June quarter profit, with net earnings falling nearly 50% on a year-on-year basis. Despite the weak performance, the company surprises investors by declaring a robust interim dividend of 23 rupees per share, which reflects a 13% yield. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets first things first. And you know, when you talk about the markets, right now you're looking at the Nifty as well as the Sensex very close to the day's lowest points as well. Whether you talk about that 98 odd point downtick coming in for the Nifty or the Sensex, which is about 30 odd points lower as well. Even when you talk about the small cap and mid cap indices, slightly a better picture that you're looking at. So just about slight outperformance coming in for the small cap index, which is up about 100 odd points, and mid cap also just about 50 odd points higher in the green right now. When you talk about the entire sectoral picture, that's quite mixed right now, but still very much in favor of red as well, because you do have Nifty bank, FMCG, media, financial services, pharma, energy, defense, as well as IT. Also on the back foot just a little bit. What's doing quite resiliently for itself is Realty, Auto and PSU Bank in terms of some of those segments that are doing decently for themselves. So when you talk about some of the top losers from within the broader universe, something like a CE Infosystem or a Kalyan Jewelers reacting to its numbers with that 3.5% downtick also coming in. Let's also talk about some of the Nifty 50 losers and gainers as well. So no surprises there in terms of some of your IT names also making it to the top of that list in terms of losers at least. So really 1.7% loss coming in for something like an HCL Tech, TCS, Apollo Hospital. Some of your financial services counters, the likes of Jio Financial Services or ICICI Bank, Axis Bank, HDFC Bank for that matter, also on the back foot. So across the board, there's some pain when you talk about select few sectors, and just about a few sectors that we've mentioned earlier, just holding on to a bit of resilience as we speak. Speaking of resilience, let's also talk about Nifty 50 gainers as well in terms of the stocks that are doing quite well for themselves. So it's actually something like Grasim Industries with that 2% uptick coming in. L&T also 1.5% uptick also. And you know, when you talk about something like a PTC India as well, that particular stock is doing quite smartly for itself. And you're looking at the dividend, which is about 23 rupees per share as well, 7.5% there about uptick coming in for that particular counter, largely on the account of that dividend surprise, because the profit has actually slumped about nearly 50% on a year-on-year basis. It's actually something like a Castrol India also moving higher. after the strong first quarter as well. But let's also move on and talk about the dry bulk shipping index as well, and that's where you're seeing some action really happening in terms of milestones as well. Global shipping costs continued to climb, with the Baltic Dry Index also hitting a 3-week high. The rates were largely driven by a sharp jump in Cape-size vessel costs as Typhoon Dolphin really disrupted some of those shipping areas near China as well. So freight rates, of course, have also been supported this year by continued disruptions linked to the Middle East conflict. So it's actually a culmination in terms of both of those things as well, and that's something that you're looking at. But let's also shift our focus to the key talking point this afternoon, and it's of course the Monetary Policy Committee of the RBI, which left its policy repo rate unchanged at 5.25% for the fourth straight instance. In fact, this status quo largely, of course, being penciled in also, but follows the central bank pausing on making any moves when it comes to rates on February, April and June this year. In fact, Piyush is joining in with all of those very important key takeaways as well from the meet.
RBI Governor Sanjay Malhotra has concluded his MPC statement, and here are the top 5 key takeaways from his statement. First, the repo rate remains unchanged at 5.25% and the stance remains unchanged as well at neutral. The key consideration behind the decision was the ongoing West Asia conflict and its spillover effects on India's economy. Number 2, the RBI has revised its forecast on GDP growth. The RBI has revised upwards the GDP growth forecast by around 10 basis points and now expects the FY27 GDP growth to be 6.7%. Number 3, the RBI has tweaked slightly downwards its forecast on inflation by 10 basis points, and now the RBI expects CPI to stay at around 5% level in FY27. This is of course because the crude oil prices have cooled down in recent period. Number 4, the RBI's liquidity measure, governor said that the RBI will continue providing durable liquidity in the banking system. In fact, since the last Monetary Policy Committee meeting, the banking system liquidity has stayed in over 1 lakh crore, that sort of a range, and the call rate have remained anchored near the repo rate. Short-term yields and government bond yields have also eased after the government's measures and the combined measures that the RBI and government has taken over the last couple of months. And finally, RBI has also said that it will, introduce fresh licensing for urban cooperative banks. This measure, we have not seen the RBI granting fresh licenses over the last 2-decade period. So this is a substantial development, and NDTV Profit had earlier also exclusively reported how the RBI is willing to now open the, licensing framework for UCBs.
All right, then thank you so much, Piyush, for joining us with that. Let's also recap in terms of the conversation that Piyush had with the RBI governor as well in terms of charges on UPI transactions. Let's also go across and listen in to a snippet of that as well.
Sir, yesterday the government has made some amendments to the Payments Act. Now there is chatter that there could be, government may levy MDR on certain a transaction, whether above 2,000 rupees, or it could use that on large retailers. You have earlier mentioned how somebody has to bear a cost for this public infrastructure utility. I want to understand from RBI, will we look at transaction size? Will we target certain retailers? What is the strategy going ahead? If you can share some views on this front, sir. And last time, sir, you had said that the upper layer list of NBFCs will come out very soon. So how soon will it come, sir?
So, your first question I will answer is that it is very premature. Right now, the government is still carrying out the amendment. The costs have to be paid by someone. I mean, it's a public, we all want, that this public infrastructure should continue to strengthen, become more efficient, etc. We continue to do that. That's our primary focus as of now. Let's wait and watch for further developments on this. I don't have anything more to add.
User get charged, sir, because if you're levying a fee on a merchant, eventually it passes on to customer. So the goal is to have 800 million transactions a day or so. So imposing a fee.
Let's wait. It's premature right now.
Then there you go. So that's really a snippet coming in terms of that conversation as well. Premature to talk about some of those, UPI transactions as well. That's the word coming in here. Let's also move on and talk about oil extending some of those losses. And you do have Brent slipping below that $79 a barrel level as well. Let's also pull up the oil prices and see what they're up to just at the moment as well. But when you talk about the broader trend, the losses seem to be deepening amid the diplomatic progress. As you can see on your screens, Brent very much below that $80 a barrel level. When you talk about WTI as well, below $76 a barrel at the moment as well. And lots of factors to really watch out for, and we'll get to that in just a bit. Before we do that, let's also quickly take a look at gold prices as well. Bullion also climbing above $4,130 an ounce as well. And silver also rallying over 2% on optimism. So really a lot to discuss when it comes to this conversation. Kunal Shah, Head Commodities Research, Nirmal Bang joins us on the show right now. Mr. Shah, a very good afternoon to you. First things first, just wanted to try and understand what you think about what's been happening with oil prices. It's really just been breaching some of those key support levels as well. What are the next levels that you're keeping an eye out on?
I think for WTI, the next level to watch out is $70 per barrel. And looking at the way the things are placed, right now, it seems that the likelihood of peace deal taking place between the US and Iran is high. Considering whenever we have seen the bond yield shooting up, generally Trump's always try to make a deal. So, and that is what has happened lately also. I think it's US is the one who wants deal more badly than the other counterparty. And looking at the scenario, because of this narrative, we are going to see some more fall. MCX crude oil can decline and test levels of 6,900. But we are not very bearish, and we are expecting, $70 will be again good levels to rebuild your inventory. So I think maximum downside is still $70, and overall it looks definitely slightly bearish in a shorter term.
Absolutely, and US President Trump really losing face as well with the war going on right now. And if you've been tracking gasoline prices very closely as well, that should also, perhaps indicate as to why that is really happening. Speaking of his commentary as well, just quickly wanted to highlight one of the factors that is very important for crude prices, right? You do have him suggesting that a breakthrough might really happen within the next 48 hours. So if that does happen, and that de-escalation, and a very big one at that, really does happen, what kind of price levels are you then penciling in as well?
I think, like I said, maximum is $70 downside, because what will happen is that the kind of inventory drawdown what we have seen from US, China, and Japan, these three countries will definitely try to make up for the inventory losses what they have witnessed in last 3.5 months, 4 months. So I think $70, and they will again, start buying crude oil, fill up their reserves. Because if this escalates again, then also it is a problem. So whenever you see a dip towards 70, I think these are the countries which will be buying oil. So strong floor at $70 to $69. I don't foresee that prices will not sustain below those levels.
Right. Taken there, yes. Absolutely, point taken there. Just very quickly wanted to highlight in terms of gold and silver as well. You've been seeing quite a bit of rally, especially when you talk about silver. From a fresh buy standpoint, what are you looking at and what are you penciling in terms of the trajectory of prices here?
I think the trajectory is definitely on the upside. The rising US debt, US will hit in some time $40 trillion debt, rising debt. Second, with whatever is happening with the bond market, okay, it is indicative that whenever there is a sharp surge in bond yield, they have to print money and bring down those yields. So this is also positive for gold. Third, another round of monetary debasement is on the cards. US is likely to, print with different label going forward, liquidity management, or they will use word yield curve control, something like that, and they'll print more. From the 1st of Jan till now, the US Fed's balance sheet have expanded by more than $240 billion. So that shows, that whatever downside, in gold, what we are witnessing is a buying opportunity.
Absolutely, and thank you so much for taking time out and joining us this afternoon. About $2 trillion per year is the kind of rate that, very staggering rate at which US is really adding debt as well. And that's the entire backdrop that you have had in terms of gold prices going forward. Let's also move on and talk about RD Industries as well. That's very much in focus on the back of raising 127,000 crore from anchor investors. Let's also get in some bit of perspective from the management. Nikunj Agarwal, whole-time director, RD Industries, joins us on the show right now. First things first, Mr. Agarwal, thank you so much for taking time out and joining us on the show. First things first, just wanted to try and understand, in terms of Amara Raja, right? It contributes over 40% of your revenue. How do you then plan to reduce some of that customer concentration over the next 2 to 3 years then?
Hi, good afternoon, first of all, and thanks a lot for inviting me on the show. I am Nikunj Agarwal, whole-time director of RD Industries. We've been growing at 58% CAGR year on year. We've added a lot of new customers in the past few years. As on date, it stands at around 50 plus customers that we have. And we feel that the customer concentration has down from 70% to 40%. Still, in the coming years also, we feel that it's an inherent part of this industry that there are few large customers, being a commodity business. So we always focus on having key anchor clients and then followed by multiple other customers, basically. It's kind of a strategy that the industry sort of follows.
Absolutely, and point taken there. Just also wanted to get a little more color when it comes to your raw materials as well. You do have somewhere close to 87% of raw materials currently imported, right? So do you see scope to really increase domestic sourcing as well? Is that something that you're looking at? And what could that really mean for the margins then?
So broadly, we're pretty, even though import is our focus, we've still been trying to increase our domestic procurement of batteries, and with the government's tailwinds for the EPR rules and the BWMR rules, we really feel strongly going forward on the domestic sourcing that will pick up when those rules are properly implemented. Already to a large extent, they've started being implemented, and we are seeing good traction in the domestic markets where battery manufacturers are also approaching us for recycling the batteries or for EPR credits against the batteries that we've recycled from the domestic market. So we're pretty strong on the domestic market also going forward.
No, absolutely, and just about the EBITDA margins as well, they've improved from 6.1% to 12.6%, and that's just in a span of about 2 years. How much further headroom are you then foreseeing, and what do you think are the key drivers except for the ones that you've mentioned?
So we've been ramping up ourselves, from FY24, where we made only 32,000 tons of production, and now FY26 we closed at around 70,000 tons of production. So production has doubled for us. We've increased our capacities from 54,000 to 156,000 tons now as of May 2026. So we feel it's like a combined effort of multiple things, from scaling of the capacities. Our portfolio has had a healthy contribution from value-added alloys like lead antimony alloys, lead calcium alloys, and it's a strong portfolio that we're building, and it takes time for OEMs to approve these alloys. So we feel strongly that we'll sort of be able to sustain these margins.
And right before we let you go, just wanted to get some more color in terms of exports as well. They've grown significantly over the last 2 years. Which geographies or markets are you then, likely to drive the next phase of export growth in? Could you just chalk up that entire list for us?
So our key focus remains Southeast Asia when we're exporting. As of last year, we exported around 40% of our revenue was coming from exports. That's roughly about 465 crores of top line. You're right, we're growing a lot in the export side. I'll also highlight how RD Industries brand RD-led 9997 is now LME brand approved as of December end last year. So which has given us a major edge going forward, as well as it's one of the very few companies in India to have this registration, along with the already existing MCX approval that we have. And countries like Korea, Japan, and Singapore are countries where they really value long-term relationships and these LME approvals, which puts us on the global quality standards, basically.
Yes, no, absolutely. And thank you so much for taking time out and joining us this afternoon, Mr. Agarwal. So there you go. That's the entire expansion plan that you're looking at, the roadmap going forward after this particular fundraise as well. So you do have about 127 odd crores that they have raised from anchor investors ahead of the IPO, out of which 220 crores is going to be used for, in terms of the IPO, it's the 220 crores that's going to be used for the working capital alone and 20 crore rupees to be utilized for the debt payment as well. But let's also move on and talk about yet another counter coming in from the primary market. Molbio Diagnostics IPO is also set to open on August 10th for subscription. You do have Puneet who caught up with the management of the company in terms of their expectations from the IPO. Let's go across and listen in.
I'm now being joined by Sriram Natarajan. He's the Executive Director and Chief Executive Officer of the company. Also being joined by Indranil Borkakoti, President Corporate Strategy as well as M&A and Investor Relations at the company. Gentlemen, both of you, thanks so much for joining in today. My first question largely being that despite having diagnostics in your name, you're nothing but a traditional diagnostic company. You do, of course, a lot of point of care. You have a platform which will help essentially in tests. You sell test kits. So just for the benefit of our viewers, if you can give us some perspective of the company and what it's all about.
Yes, Puneet, thank you very much. So just to introduce the company, so Molbio Diagnostics is a completely innovation-driven medical products company where we design, develop and manufacture high-ended, high-quality in vitro diagnostic platforms which can be decentralized and taken to the lowest levels of the healthcare chain. Why I'm saying decentralized is because traditionally most diagnostics are very highly centralized, and so the access to diagnostics to people is very limited. So we are trying to ensure that we're able to reach diagnostics to all the levels of the chain, including the remotest and primary level. This we are doing through a flagship product currently called TrueNat, which is a multi-disease platform where we can test for 30 different diseases on the same machine once it is introduced in the healthcare chain. And as you know, we are focusing on infectious diseases. And infectious diseases, are mostly curable if they are diagnosed early. But still, millions of people globally are dying because of these, just because they don't get diagnosed in time. So that is the problem we are trying to solve. And one example I'll give you is in the area of tuberculosis, where about 1 million people every year die of tuberculosis globally. In India, about 300,000 people plus are dying of tuberculosis, which means almost one person is dying every minute of tuberculosis in India. That's the kind of impact that we are trying to create, to see that these people can get diagnosed early, they can be put on treatment, so that we can first of all cure them effectively. At the same time, ensure that they don't spread TB to more people. And that's the only way you can go towards elimination programs where you can eliminate these kinds of diseases completely. So that is the strength that we have, and our technology is completely patented globally in about 110 countries. We have close to about 200 patents already. We have a very strong R&D team. So the R&D is housed in a company called Big Tech Laboratories, which is a fully owned subsidiary of Molbio. And apart from TrueNat, this R&D team is working on many more technologies that will come up as we go along. And so innovation and trying to bridge the gap in the healthcare system and try to offer solutions that can impact the global population is the mission of the company, and that's what we will continue to keep doing.
Thank you, Puneet, for having us here. And also just to add to what Mr. Sriram said and to your question about the IPO, given that we are an innovation-led company, R&D is the heart and soul of our business. So of the 200 crores that we're raising, about 105 crores is going to be invested in R&D, where we'll be setting up our own center in Bangalore, since we operate out of a leased premises currently. 72 crores will go towards automation. We have our plants which manufacture the reagents or the consumable kits, test kits out of Goa. We will be spending about 72 crores at those plants there to bring about further automation and efficiency in the system, so that we can also work on more cost effectiveness in terms of our manufacturing process.
Got it.
The
So
balance, as you know, is an offer for sale.
right. I saw that roughly you did about 1,400 crores in revenue in the last year, and that has seen a very good 40% growth from the previous year. Revenue from sale of devices as well as test kits, those are the two key main revenue drivers for you. But if you can give us some perspective of who are your essential clients, because you mentioned in your RHP that 56% of your revenue comes from central government, 23% from the state. So are these government-backed hospitals that you sell these test kits and devices to at this point of time?
So let me come here to say that we cater to both the private sector and the public health space. In the private sector, we cater to the laboratory segment, so all the pathology laboratories, right down to the tier 3 laboratories are able to use our machines. But the bigger opportunity for us comes in the public health space, because many of these diseases are huge public health problems, and the major volumes are driven by the public health programs. In the case of tuberculosis, we have a program called the National Tuberculosis Elimination Program, and this drives the entire TB testing program all over the country. And in this program for tuberculosis, we already have about 9,000 centers using our machine as the frontline test for testing for TB, because as a molecular test, this is a close to 100% kind of reliability factor for early diagnosis. Similarly, there are other programs coming up. So one is the hepatitis program, where we are looking at the hepatitis B and hepatitis C testing, also to be scaled up as a public health initiative, and also to be followed by a program for HPV testing. HPV stands for human papilloma virus, which is the cause of cervical cancer in women. So there is a huge drive to screen women for HPV so that they can be diagnosed early again and put on treatment. So these are all driven by public health programs, not only in India, but globally. And so that's why you will see that the public health contribution to our revenues will be much higher. But then these are all program driven.
Well, and with that, that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933, बरसों से सरसों।
कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है, बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Hello and welcome back to NDTV Profit. You're watching Small Cap Buzzers. My name is Puneet Zaveri, and over the next half an hour or so, we'll focus on those key stocks. Also, get you an exclusive coverage of quarterly results of Marico in just a bit. We also have another management lined up post that, so it's an exciting show. But very quickly of how the markets are shaping up. We spoke about the benchmarks this morning. It has been yet again a day we are seeing some pressure coming through yet again. 24,530 odd is where we are at. The heat map also shows you that perspective at this point of time on a bunch of key stocks for the Nifty 50. So pull up the heat map though. Let's pull up the stocks which are buzzing in trade today as well. And you've seen those signature moves come through on Grasim, L&T as well as Shriram Finance. But you've seen the tech space seeing some sell-off. So TCS as well as HCL Tech are down. Apollo Hospital, ICICI Bank are also down in trade today. But when you look at the other key aspects about sectoral heat map though, also pull those up very quickly because you have seen that within those sectors there's not been any kind of sharp runway move. While the Nifty Auto is up 1%, so is the Nifty Realty. They've had some correction and now just getting back. So awaiting the next direction essentially in this week for the markets. also pull up what you have seen in terms of the advanced decline ratio. That is the other key factor as well, because you've seen, the broader markets in this week be very neck and neck. Today also is a day where you're seeing the advances slightly inch up, but from the start of the day they have gone down a bit, and we'll focus on the broader markets as well. But Marico is the other company. Let's pull those up. So a good set of numbers from the company, but you saw the stock not reacting too much. They had almost a very strong growth in this year. Robust India volume growth as well as the premium portfolio traction have been one of the key aspects to watch. You also had indications from the management about a growth sustainers as well, but my colleague Mahima Vachharajani spoke to Saugata Gupta, who is the managing director and CEO. Let's listen to what he has to say.
Hello and welcome. You're watching NDTV Profit. I am Mahima Vachharajani, and Marico is in focus on the back of its Q1 numbers. It was definitely a strong set of numbers with India volume growth of 11%. And to try to understand as to how things are going to look like, because management has given a good guidance going forward as well. They remain constructive in terms of execution, and fewer and bigger, bolder bets is where they've indicated it towards too. To understand as to how things have shaped up, how things are going to look like, we're now joined by Saugata Gupta, who is the MD and CEO of Marico, joining us now. Mr. Gupta, thank you so much for taking out the time. Always a pleasure speaking with you. I think my first question to you is going to be about the FY27 targets that you've mentioned. I know we've talked about this earlier as well, and I'm trying to be a little greedy here because you've said in your con call that 15,000 crores ke upar you'll be able to do, right? So just want to get a sense, if you can give us some quantification in terms of how much more can you do beyond that 15,000 crore for FY27?
I think it's very early to give a number, but I think we are extremely confident of delivering double-digit growth to hit 15,000. And I think what's heartening is we crossed the 10,000 mark 2 years ago. So therefore, in 2 years we would have moved from 10,000 plus to 15,000 plus, which is, I think, one of the fastest in the industry. It all depends on how we are going to play out. But as I said, that what is important is continuing to deliver high single-digit growth, and we are lapping high. Last year also we had 8% plus volume growth. So therefore, what is most important is to continue to deliver that high single-digit growth, and maybe just like this quarter, attempt another one, or at least one more quarter, if not more, double-digit growth in a quarter.
Got it. When you say 20,000 crores by FY30, wanted to get more perspective here, because overall there has been a geopolitical situation which has impacted in terms of inflation, in terms of supply chain as well. But on the other side, you've been able to manage that very well. So considering that you want to reach to that 20,000 crore mark, do you think that is largely going to be volume driven? Is it going to be price driven? And largely, if I'm not wrong, it is going to be on account of premiumization as well.
When we take an aspiration, we take a kind of a normalized inflation. Obviously, you have years of high inflation followed by some deflation. Having said that, I think as an organization, we are also aggressively decommoditizing our entire portfolio. The clear drivers of growth is, obviously, we believe in volume-led growth, and therefore this preassumes that we should be able to deliver high single-digit volume growth in India, which is a combination of growth in the core, premiumization of the core, our entry into some of the new categories like shampoo and almond, which is expected to grow, or in cold press oil, which is again a premiumization of the core agenda, and continued growth of 20% plus in our food and digital business. As far as international business is concerned, I think we have had a great track record of sustainable, profitable growth in terms of driving double-digit growth, which we have done year after year after year. And there also we are reducing the concentration risk and driving premiumization in terms of entry into new categories. And that is something which we have been able to do independent of, the kind of adversity we have faced. If you really look at between 20 and 26, you have had 2 years of COVID, 1 year of Ukraine, then we had last year something unique to us, which was 100% increase in copra prices. So we have coped with all of them successfully, and that, I believe, is a unique management capability which we have developed, ability to cope with any adversity and having the agility and resilience to deliver consistent results.
The other aspect, Mr. Gupta, is with regards to the digital first brand that you were talking about, right? There's Beardo, there's Plix, Cosmic 4700 BC as well. They've now become important growth drivers. So going forward, what is going to be the strategy for these brands per se? Do you think it is going to be more towards increasing volumes and sales, or do you also think the focus will be on profitability? And will you be looking at acquisitions more in the digital first brand space?
I think I have spoken about this before, that we don't want a growth which is say 40-50% growth with cash burn. We want growth which is more deliberate, which is I'm happy with even brands growing at 25-30% while we continue to improve profitability. I think we should be able to exit the year close to double-digit EBITDA for the digital business. Beardo already delivers a double-digit EBITDA. We acquired Cosmix, which is a high-teen EBITDA. The acquisition in Vietnam, which we did on a digital brand, already had a EBITDA in the 20s. Plix is heading towards from a high single-digit to a double-digit EBITDA over the next couple of quarters. So I think there are multiple areas, and I think the way we look at digital brands, we see now two platforms developing. One is a BPC or a premium personal care, beauty personal care platform, and one is a foods or wellness platform. And therefore, there are a lot of synergies to be had, and there would be growth. Now, coming to opportunities, yes, we will continue to look at opportunities, but I think we have already completed a significant portion of the acquisitions we wanted to do. And we want to focus on growing them profitably, as well as continue to look for some opportunities outside. But a large part of our, I think if we call the digital chessboard or the portfolio, has been largely filled.
In terms of ad spends, because that has gone up by 25% this quarter, do you have anything in mind in terms of how these are going to pan out for the rest of the year? Do you think that ad spends could grow from here on, considering that this is the common phenomenon that I've seen across FMCG companies, that because of ad spends going up, of course, the top line is also increasing. Any thoughts on that?
I think we have been unique in a way that over the last 4 years there hasn't been a single quarter we have cut down on ad spends to manage margins. And if you look at it, we believe that the two things we must do is investing behind long-term brand equity and investing behind talent and people capability. And these are the two things which we have never somewhere cut in, even in the most difficult times. See, I think the ad spends, what we are doing is two things. We have also taken out a lot of inefficient trade spends and other things and converted into spend behind equity. If we look at VAHO is a classic case where we reduced a lot of trade spends at the bottom of pyramid and converted into investing behind equity in the premium part. Similarly, I think we will invest behind in the core things like shampoo, almond and cold pressed oil, and of course in our food and digital journey. So, and even in international business, there's a premiumization journey and also deconcentration risk which we are driving from Bangladesh. So I think all this needs money. We will invest behind it, but a lot of these money will come from continuous getting out wastages, and for that we are also investing significantly in analytics, tech and AI, which takes out a lot of spends which are currently not delivering the kind of ROI.
Interesting. Because you talked about premiumization, you've also indicated in the call that you are targeting your premium portfolio to be 50% of your entire portfolio by FY30. Do you think that this growth that you're talking about for premiumization specifically is sustainable, because demand across board is mixed right now, plus on a higher base as well, right? By FY30, premiumization is going to be on a high base as well. Just want to get a sense of the dynamics of how do you think that this will happen, considering the way demand has panned out so far?
Look at the entire premiumization agenda. We are challengers everywhere. So therefore, there is market share to be grabbed irrespective of whether the category grows or not. Look at value-added hair oils. Our value share is 29. And there is no reason why there is a pathway to 40 over the next 3 to 4 years. I think shampoo again is a 10,000 crore plus category. We are premiumizing in cold press oils. And as far as food and digital brand is concerned, I think all this entails is actually a growth of around 20-25% every year, which is very much possible.
And what is the response that you've seen in terms of shampoos?
It's an encouraging start. I think we'll take 1 year at a time. And as I said, that if we can do 100 crore in the first year, it's a good thing to start with.
Okay. All right. Just, one last question in terms of your FY30 targets, because that again, kind of indicates the transformation that, throughout, Marico has seen. Just want to get a sense as to what are the key milestones that you'll be watching out to reach to that 20,000 crore by FY30.
First, obviously, we have to keep on growing at a double digit in revenue, which means that a double digit growth, constant currency growth in international business, high single digit volume growth. We are looking at the numbers as far as the diversification agenda is concerned. I think it should get into 30% plus. And I talked about the food and the digital part of the business growing at 20% plus. And I think one of the other things is continuous mix change, so that we are consciously making a call to deselect, categories or parts which are actually not sustainable in terms of below the threshold level of profitability, and also decommoditizing the business. Having said that, I think distribution is becoming a big part, and our investment behind digital and tech capability in the organization is also going to be a big part of our entire journey.
All right, Mr. Gupta, thank you so much for taking out the time and always, being so candid with your answers.
Sure.
Well, that was the management of Marico. Of course, a lot more conversation we'll take forward with individual stocks as well. But let me welcome in Shashank Udupa. He's the founder at Vayu Capital, now joining in. Shashank, a very good afternoon to you. Thanks so much for joining in. Just the first question, because we've seen, of course, companies like Marico continue to perform well within that space. Is there anything that you like?
So yes, I think it has been a consistent compounder for a very long period of time, and they have been giving good growth across the industry, right? And I think the CEO just mentioned that they're now going to focus more on the profitability end, and they're not going to focus on things that are not doing well in their portfolio. And they've also acquired a lot of different companies, which are new age right now in the consumer trend, and also quick commerce revenue has gone up quite a bit. So I think overall it is bullish. Yes, the raw material prices because of crude oil spikes for paraffin and HDPE has actually gone up. But I think over a long period of time, there's nothing to worry about.
Got that view. But let's also focus on Mangalam Worldwide now, because, the company came out with its results in the last week, has been in focus as well. Stocks done well, gained over 20% just in the last 3 sessions. But it's a good time to talk to the management as well. Let me welcome in Chandragupt Mangal. He's the managing director of Mangalam Worldwide, now joining in. Mr. Mangalam, thank you so much for joining in. It's Puneet this side. Just a question on, this quarter, you saw good growth coming through. Revenues were up almost 20% on a quarter-on-quarter basis. How much of that has been led by volume growth in this quarter, and how much has been led due to the price increases that we've seen for steel, amongst others?
So I would say there have been two things due to which the revenue has increased. So one is definitely like what you just said, that the increase in prices of steel. And the second is, as a long-term strategy, what we are doing is we are going more into value-added products, which is we are moving up the value chain. We are a fully integrated facility where we are doing the melting, we are doing rolling in-house, then we are doing finishing of bright bar in-house, and we are then manufacturing seamless pipes and tubes. So as a part of long-term strategy, we are increasing the share of our finished products, which is the bright bars and also the seamless pipes and tubes. So it has been a two-factor thing, increase in the prices as well as increasing the share of the value-added products.
Got it. So definitely the finished product share is something that you're targeting as well. But Mr. Mangal, how much was in this quarter, when you look at this revenue performance as well as this margin performance as well? I'm sure there was some lag effect and hence they're down on a quarter-on-quarter basis. But how much of the revenue growth has come through led by volumes?
By volumes, you mean the volume of the value-added products, right?
Yes, the volume actual growth that you've seen in this quarter.
So the value-added products, what we have increased the volume share in our company is from, you can say we were earlier doing around 30%, which has now gone up to 40%.
Okay, got it. So from 30, you've gone to 40% in terms of value-added products, got it. And in terms of what we have seen, that the margins, they were impacted on a quarter-on-quarter basis Was this largely because of pricing action that you'd seen, or was there any particular other raw material for you that had also inched up and hence the impact?
So as part of the long-term strategy, we are also constantly working on the operational efficiencies as well as increasing the capacity utilization. That has been a key aspect, as well as our share increase in the value-added product has also given us a boost.
Got it. Also, Mr. Mangal, you mentioned that, and in terms of the growth, when you see of the last couple of years, you have been in that range that of roughly around 1,000 to 1,200 odd crores. Where do you expect FY27 to be? Should we expect 14 to 1,500 crores in terms of revenue as a profile that is sustainable at this point of time?
Yeah, we're expecting around, we can say, somewhere between 10 to 15% in the revenue growth.
Okay.
But there will be better growth in the EBITDA margins. That's what we are looking at. Since we are consolidating, going more into the value-added items, focusing more on the costs. So that is the focus for this year.
Okay. And how do you look at the margins as well? Because you mentioned a 10 to 15% growth. So you did about 1,200 odd crores. So definitely 1,300 to 1,350 odd crores is the minimum revenue that you will be at the end of the year. How should we look at margins? Because last year we did see that meaningful margin uptake going to that 8 odd % mark. Do you feel that you will bake into that growth, or is it visible that jump that we saw from FY25 to 26, will that also be visible here, or you'll see that stabilization as of now between that 8 to 9% mark and then follow through?
Yeah, the EBITDA margin, we expect it to be at a stable level from 8 to 10%. Definitely the goal and target is to increase, which it will be. But I don't think that what you're saying, that substantial increase is expected this year.
And just what is the capacity utilization as of now for you in your current plants? Is there any that you have already invested in over the last couple of years where the utilization is ramping up, and anything on capex that you can offer?
The average capacity utilization of all our integrated plants, all our facility comes to around 80%. What we're trying to now do is, like I said, going forward in the capex side also, would be more into the adding capacities in the finished products, which will be the bright bars as well as the seamless pipes and tubes.
And that capex has already happened, or that will be happening in those products?
So we are seeing good demand of our products. We are going into end user market, the approval base, where we are procuring approvals from companies like BHEL, L&T, EIL, and all these companies. Also, we are increasing our market share in the exports. So what essentially capacity is getting utilized, the idea is to invest more and more as and when the capacity is utilized.
Got it. Well, Mr. Mangal, we leave it at that. Thanks so much for joining in, giving us your views on the results as well as the strategy going forward. Look forward to our next conversation.
Thank you so much.
Well, Shashank, let me come back to you very quickly as well, because within the commodity side of things, we've seen multiple key winners over the last few months, led by price increase, led by volumes as well. Does Mangalam Worldwide focus and come back into that list, or are you preferring the larger players for now?
I mean, the commodity cycle is doing well. I think for people who are in that cycle, I believe that it should go on for another maybe year. But yes, these are very cyclical sectors, so we should be very careful about that. One interesting thing also is that Mangalam board has recently approved a borrowing limit of 2,500 crores. So that would be very interesting to note as to what are they going to plan with that excess borrowing limit. And will they over leverage, or will they leverage to a point where the revenue start flowing in as well? So that is something we need to look at. But I think the last 1 year performance has been good for the company.
Got it. Let's quickly look at Jai Bharat Maruti as well and pull up that counter too, because that stock has hit an all-time high in July. You've seen that peak coming through, and today the stock's down 5%. Could be on the back of results, because while we have seen revenue growth in this particular quarter at 623 odd crores, you've seen the margins actually go down. So EBITDA margins are 10.06 versus 12.05. Also seen the net profit being largely flattish, and hence, despite the up move that we saw at the start of the month, for the month of August, at least you've seen that correction come through. Now, they had mentioned, and the reason for the July up move was that almost 170 odd crores investment that they were doing in the Kharkhoda plant, that was led by the growth that was seeing for their primary customer Maruti Suzuki. and that 70 crore investment is in phase 2 is something that they're watching out for. So that led to the up move. Newer partnerships between India and Japan as well was another key trigger. But for now, stock continues to be under pressure as well. But Shashank, on this particular counter, would you venture in buying at the current price? Because we've seen, of course, that correction come through, but there has been a sharp run up before that.
Yeah, I think things are normalizing right now. So if you look at the last 3 to 6 months, we had the GST rationalization where all auto companies and auto ancillary companies did very well. And obviously, if you looked at Maruti Suzuki's numbers and the units that they were selling, they were doing a very good job. And I think right now, even with Maruti's result that you see, we are seeing some normalization kick in, which basically tells that the next few years of growth might not be as big as the base that was there before, right? So I think the growth premium is slowly going down. I'm not saying that the fundamentals might not be great, but I think the excitement factor is slowly going away. And if you look at companies like Jai Bharat and even NDR that is in the same space, they're mostly commoditized players, right? It is not something that they have a very big unique selling point that they actually do, and they're joined at the hip with Maruti. So I think everything depends on how Maruti performs. But yes, I think even though Maruti is growing, I think the growth premium is slowly going down right now with Jai Bharat.
Got it. Let's also look at RD Industries also. That's another counter that's in focus. We actually had the management in the previous show as well, but Parth is now joining in to get us some more perspective on this counter. Parth, what should we watch out for?
Well, the key trigger in RD Industries IPO is that the company has raised almost 128 crores from anchor investors before its IPO, and a big name has appeared in that anchor list, and that is the ace investor Ashish Kacholia. He has picked up 19.57% of the total anchor allocation for an amount of 25 crores. So that is going to be a key trigger for this IPO going forward. If you talk about the details, then the total issue size is 426 crores, out of which 320 crores is a fresh issue, and there is an OFS of 106 crores as well. The 226 crores from the fresh issue will be used for working capital purposes, while 20 crores will be utilized for debt repayment. Now, if we understand the business model of the company recycles lead acid batteries into high purity lead. They serve various sectors like energy storage, e-mobility, automotive and chemical sector as well. They have an integrated recycling capacity of almost 1.57 lakh metric tons per annum, and that is located in Tirupati. The company sources scrap from around 58 countries, which makes them import 87% of their raw materials. So that is going to be a concern there, because they are so much import dependent on their raw materials. And also there's one more concern, that Amar Raja contributes to more than 40% of their FY26 revenue. So that customer concentration risk is going to be there here as well. Now lastly, if we talk about the financials, then revenue has grown at a CAGR of 58.8%, while PAT has grown at a CAGR of over 200% in the last 3 years. Margins have nearly doubled in the last 2 years, while exports have grown at a CAGR of 139% as well. So a solid anchor book and solid financials as well, and that's why Street is very excited for this IPO.
Got it. Thank you so much, Parth, for that view. So, of course, a big name coming through in that aspect. But Shashank, we'll let you go on that note. Thanks so much for joining in and giving us your perspective as well. Viewers, out of time on this edition of Small Cap Bazaar. Stay tuned though. Ask Profit comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Welcome back. You're watching Ask Profit, the afternoon edition with me, Puneet Zaveri. Over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already done so, send us your WhatsApp query on the number flashing on the screen. Also call us for your stock-related queries. It's the landline number that you can call us. That's also flashing on the top of your screen as well. But before we do that, a quick check of how the markets are doing. We spoke about the pressure that was visible on the Nifty 50 just half an hour back. So pull up the advanced decline ratio and let's get an update of what that is coming through, because while you have seen majorly the advances dominate the day, 1.5 to 1 is the ratio, but you're seeing that starting to come down a little bit. So the last 90 minutes of the trading session becomes very important. Pull up the mid cap and the small cap too. That's something that we missed on to look at half an hour ago. Has been largely a day in the green for the mid cap 150, but just up 0.12%. The small cap 250 is up 0.6% right now. And in terms of the individual movers, yesterday you had a bunch of them reacting, the likes of Ather Energy amongst others on results. Today as well, PNB Housing is one of those counters that's doing well on the back of its quarterly results. Varroc Engineering up 6.7%. While Kansai Nerolac is continuing its bullish momentum post-reporting results in this week as well. Up in the losers though, CE Infosystem had largely a flattish quarter, seeing the stock down almost 6.5%. Kalyan Jewellers also not getting too much of a boost as of now, at least from its quarterly results. Metro Brands, we spoke to the management today, also down 4.2%. But let me welcome in our guest for the show, Rahul Sharma. He is the Director, Head Equity Research at Equity 99 Investment Advisors. We also have Nandish Shah. He is the AVP Research and Advisory at Motilal Oswal Financial Services. Gentlemen, both of you, thank you so much for joining in today. The first question coming through, and this one is on Kaynes Technologies. The results also in this week, so very important one for the company. Our viewer actually bought these shares at 3380, and this is Rajiv Mukherjee, who's from Bengaluru. Wants to know about this counter. He's sitting on massive gains as well, and asking what he should do with this counter now. Rahul, very good afternoon to you. How are the charts looking at this particular counter? Would you recommend him to book his profit just before the results, or probably take a look and then take a call?
He should wait for the results out, and because this particular season is morely based on how the numbers are playing, so I think he should wait down for the numbers.
Nandish, if you also have an opinion, because Kaynes Tech definitely had some a weaker Q4 numbers. There were cash flow concerns. How are you looking at the expectations now, because it's already back to those levels pre-correction essentially? How are you looking at it?
So we have been very positive on Kaynes, and we are aware of the issues which especially the cash flows issues. But the management has even promised that slowly and steadily these cash flows issues will get resolved. And one of their big business, which is the smart metering business, is facing that issues. And what you say, slow and steadily that business model is getting changed.
Got it. The next question coming through, and viewers, you can also call us for your stock-related queries as well on the landline number. Vanita from Mumbai has actually bought into DCX at 174 odd, asking if she should still continue to hold this counter or sell out. Rahul, on the charts, anything visible that in terms of momentum continuing right now?
See, the momentum has been a little slow. From the starting of the July month, we have seen a quite decline in this stock, and from last 5 to 7 session, it is consolidating between 185 levels on the upside and downside, I think at 177, 176 levels. So I think if at all 177 or 176 gets break down, the stock can see on like further downside. So I think she should hold on with this strict stop loss level placed at 177. And if at all the stock goes above 185, it can reach towards 190, 192 levels.
All right. Well, Raj, who's from Delhi, also has another question. You know, the question being, what would be the top 2 picks right now, Rahul, on the charts that you are picking up? Anything that you like?
Yes, Puneet, definitely. First of all, this Vedanta Iron and Steel Limited is my selection. It has delivered a strong start as a listed company of Q1. With revenue rising 18%, EBITDA growing by 54%, EBITDA margin expanding by 14%, which was earlier 11, and reporting a profit of 121 against a loss of 145 crores last year. So I think this is a great selection to get into. Even the CRISIL, which is a rating agency, have rated it as AA stable. So looking at its long-term growth strategy, I think this stock looks good. Technically, the stock has shown good support near 30 levels, which will act as stop loss, and upside long-term journey can continue towards 60 and 70 levels. Second selection is slightly uncommon name, but Azad India Mobility Limited, which is AIML. It is an Indian manufacturing specialized in electric buses and coaches for urban and intercity transport. The company has been working on reducing its debt. With new orders in line, company shall deliver good growth. And now, as they have diversified business towards EV playing theme overall, I think the stock can show us good rally on the upside. The technical charts. On the technical chart, the stock is maintaining its rounding bottom formation, and as soon as it crosses 103, 104 levels, a massive upside is possible. So SL should be placed at 85 levels for the upside journey.
Got it. Well, a very, very smaller name, Rahul, that you picked out, roughly around 520 odd crores in terms of market cap for Azad India Mobility Limited, but that's the expert opinion coming in on that technical pick. Let me go across to Mysuru now, though. Mohan, who's a regular viewer of the show, joining in for a stock-related query. Mohan, very good afternoon. Thanks so much for joining in yet again. What's your query?
I've got TVS Supply Chain Solutions, 76 shares at the rate of 197. I just want to know, I'm holding this share from past 3 years. I just want to know what your long-term perspective.
Long-term perspective. Got it, Mohan. Nandesh, I don't know if you have coverage on TVS Supply Chain, but has been an underperformer since its listing. Any view that you can offer, Mohan, right now?
So TVS Supply Chain is not under our coverage, so I won't be able to offer any views on it.
Anything on the charts, Rahul? We've seen a pullback from that 101 odd level, but what would your opinion be?
Yes, definitely. The stock has been pulled up from those levels, but on the upside, there is a resistance which is placed at around 140, 142 levels. And we can see a quite consolidation between 135 and 142 on the upside. So although the stock structure looks good, or it is moving above from all the averages. So I think the stock should be kept on hold for the further upside. If it breaks resistance above 142, 143, you can see a jump towards 150, 160 levels.
Got that view, Rahul. But the next question coming in from Sriram Raghuraman, who's a senior citizen, holding on to 600 shares of Samvardhana Motherson, bought at 75. So he's essentially up 100% from his buying price. Wants to know a fundamental opinion on the stock now. Nandesh, we've seen, the consumer electronics and the newer business come through now. Would you recommend him to continue holding, probably ride the wave on this one?
So he should, ride this wave. And we have been very positive, especially on the auto ancillary space. And Samvardhana Motherson, for me, is our preferred pick. So if he's looking for a longer term view, he should continue to hold it.
Got it. Next question coming through, and it's on Marico. We just had the management in the previous show, and Prakish, who's from Kerala, actually bought it at 851. He wants a short-term view here, Rahul, and he's holding on to actually 1,000 odd shares. Today we've seen a correction, but results were largely good. Anything on the charts that's visible that momentum can come back?
Yes, momentum can come back, Puneet, definitely. The moving averages of 200 days or even the 89 days of weighted moving average is around 830, 835 levels. So the stock has got good potential to sustain these levels. And with the results are positive. So I think he should hold on for the upside target levels of around 950.
Got it. The next question coming through, and this one's on BSC. A viewer is asking if it's a good time to enter this stock right now. This is Suresh asking this question for the next 1 to 2 years. Nandish, we had the results today of the count on BSC 2. How are you looking at BSC, and is it a good entry point now?
So currently on BSC we have a neutral view. And it seems that in next couple of months we are likely to get the NSE getting listed on the stock exchanges, and which would directly impact BSE in terms of volumes, being a market leader. So if he's looking for a longer term view, it is better to wait for a correction to enter into BSE, or we need to see how it behaves once the NSE gets shares listed in terms of volumes and market share.
Most certainly, and that will be a big event this year, of course, the NSE IPO. But another caller now, and Sridinath is joining in for a stock-related query. Sridinath, very good afternoon. Welcome to the show. What's your query?
Yeah, good afternoon, Puneet. I think it's been a while I complimented on your suit, but this one looks mid. It is not your A-type suits for sure. So,
I wish you would have called in yesterday. I was wearing a good one yesterday, but go ahead with your stock-related query.
My bad then. So I am looking for Manipal. I just got the IPO 325 shares at 590, and I'm not sure if I should sleep on this or if I should just check on it on certain levels and take partial money at maybe like a 20% or something like that. So I just want a view on that.
Got it. Well, I don't know if Nandish, because the stock just got listed today. I don't know if you have an opinion on Manipal, but if not, just on the space, how are you looking at it? Because even though there was some elevated valuation, complete OFS, the street's actually taken it well, right? Nandish, how do you look at Manipal Hospital or just the space as a whole?
So on the hospital space as a whole, we have been very positive, and Apollo and Max and Fortis are already there in our coverage. We also had a subscribe rating on Manipal Hospitals, and it is a good bet to keep it for a longer period of time, at least for next 2 to 3 years. We see that most of the greenfield expansion is likely to come in the next 6 or 8 months. So if he's looking for a longer term, Manipal is a good hold, or it can be even added in case there is a correction in it.
Got it. Well, the next question, this one is on LTF Foods. Sandeep, who's from Delhi, holding on to almost 975 shares that he's bought at 240. So I had bought at very attractive levels. Rahul, his question being if he should book out his profits now, would you recommend that?
No, I think there is a quite chance of getting more good value. At current levels, yes, it has been consolidating from quite a long sessions, but we have seen upticks towards 425, 426 levels. So I think he should hold on. If at all there is no such requirement of liquidity, definitely he should hold on. I think very good numbers can lead this stock towards 500 odd levels.
500 on LT Foods, got that view as well. But let's go across to another caller query from Chennai now. Dheeraj has a stock query for us. Dheeraj, what's your query?
Yeah, hello.
Yeah, Dheeraj, I can hear you. Go ahead.
So I got 50 shares of Aether Energy at 400 rupees.
Okay.
And I was thinking if now is a good time to accumulate more.
Okay, you want to accumulate more. Got it. Well, and Dheeraj, did you buy this just after the IPO, or did you get allotment in the IPO last year?
Just after the IPO.
Well, firstly, many congratulations. It's turned out to be a great pick for you, Dheeraj. But Nandish, on Aether Energy, he's sitting on almost tripled his money now in the last 1 year. would you recommend venturing now yet again to buy into this counter? If you have coverage, any view on this one?
Officially, we don't have a coverage on Ether Energy, but whatever we have read and the recent fundraise which has happened in Ether Energy, it reiterates the confidence in the electric vehicle space, and Ether Energy being a market leader, especially a sole listed player completely into electric vehicles, makes sense, and he can continue to hold, and at these levels he can even add.
Got it. This query was also by Ajay Kapoor, who was asking this particular question, but and hopefully that gives you an answer as well. But the next question from Jay, who's from Tirupur, wants to know between HUL or Jyoti Labs, either of those counters he can enter right now. How are you looking at this one, Nandish? Because for Jyoti Labs, we saw that massive correction on the stock because of that partnership with Henkel that got void. For HUL also, you've seen a correction post results. Do you like either of them in the space, or what's your preferred pick?
So it is better to stay with the leader, and HUL being a market leader in most of the categories they are present in, it makes sense to enter into HUL rather than into a mid cap or a small cap company like Jyoti Labs.
The next one and the next question coming in, and this one's on SRF. Dilip, who's from Kolkata, has actually bought 10 shares at 2,634, so very close to the current market price. Rahul, his question being, if we can add more at this juncture, what would be your opinion?
His entry point is quite similar to the current market price, and the chart structure is somehow weak, with the support levels currently at 2600 levels on the downside. So keep a close watch. If at all these levels are breached, stock can see a further downside towards the 2380 levels.
Got it. 2380 levels will be something to watch. The next one, and this is from the real estate pack, has done well today, the top gainer in terms of sectoral impact. A fresh entry into Sobha, if it's the right bet from Mr. Rao, is what his question is. Nandish, would Sobha be in that top list? Is it a good time to buy in the real estate space now?
So we had recently upgraded the whole real estate sector, and our preferred picks are Loda, DLF, and Aditya Birla Real Estate amongst the mid cap. Got it. Amongst the mid caps. Okay, got it. The next one coming through, and we spoke about BSC, but Grow is the other counter that Dr. Raj Kumar wants to know if it's a good one to continue holding at this point of time. What would you recommend here, Rahul?
No, I think he should definitely hold on. Although the structures are not well, but I think Grow is something which has been growing in terms of its business very largely. So I think this stock should be kept in a long-term portfolio, definitely. Got it.
Next counter, and this is from Murthy, who's from Vizag. He wants to know about Moltech Packaging and if it's a good counter to enter right now. Rahul, anything on the charts that suggests the same?
For Moltech Packaging, currently at 685 levels, the chart structure is positive, and I think the upside level of 720 will act as a resistance, because we have seen multiple times it has tested it, and if at all it breaches, the stock is poised to deliver good growth. So I think he should hold on. On the downside, we have a good support of 200 EMA and 100 EMA, quite below around 650 levels. So hold on to this stock with the upside potential of around 780, 800 levels.
The next question, this is from Mr. Sugunakar from Vijayawada, wants to know about Ujjivan Small Finance Bank and if it's a good time to enter this counter now. Nandish, not sure if you have direct coverage, but within the small finance banking space, anything that you like?
So Ujjivan Small Finance Bank is not there in our coverage, but amongst this pack, we like AU Small Finance Bank.
And what could be some targets that you're watching out for, and for how long? What's the duration?
Yeah, for AU Small Finance Bank, the target duration for the next 1 year is about 100 rupees from here, at least.
Got it. The next one coming through, and this one's on Vikran Engineering. He's bought the shares, our viewer, at 90 rupees. wants to know about his 3,300 shares and what should he do with this counter. How are you looking at the charts here, Rahul?
See, the chart structure shows us a major consolidation, and this consolidation has been in this counter since April and May month. So I think we have to wait further more. If at all it rises above 78 or 80 levels, stocks can show upside rally. But on the downside, the risk is limited at 66, 67 levels.
Got it. The next one that we have, this one's a smaller name actually, KMC Specialty Hospital. Sunita, who's from Hyderabad, wants to know a good entry point for this counter. On the charts, Rahul, anything that's visible? I don't know if you track this counter, but anything that you can spot right now?
No, I'm not tracking it, but I can see the chart structure earlier in the May month or the end of the May month, or you can say the starting of the June month. The stock has rallied really decently from the levels of 97, 98. It has shown an upside of around 140 and currently consolidating between 123 and 135 levels. So the quite support, which is 89 days of weighted moving average, is placed at 120. So it should be kept with this strict stop loss of 120 levels. And on the upside, I think the stock, if it all breaches 142 upside, it can show us a rally towards 150 plus levels.
Got it. Well, we'll continue with your stock-related queries, but an important story, because sources are telling NDTV Profit that SEBI has concluded the first round of discussions with qualified stockbrokers. Let's get in my colleague Nimit. Nimit actually to tell us more about this. Nimit, over to you.
Yeah, so what we're hearing from sources is that a meeting has concluded. We were tracking this meeting that was held earlier today, where SEBI has met with top stockbrokers to assess what is happening with the investor awareness side and how they're sort of implementing the new CAS process on their different platforms. Now, with these qualified stockbrokers, the SEBI has concluded its meeting, and this first phase of SEBI discussions has come out with the key conclusion here that there needs to be more needs to be done for investor awareness here, and the qualified stockbrokers have sought 2 to 3 weeks to complete front end integration on their apps for retail participation. Remember, the key here is increased retail participation, and stock brokers are requested to work with other parts of the system here and manage and increase retail participation, improve retail participation. Remember, we had reported earlier that SEBI is saying that the volatility is because of this lack of a deep volume-based participation in the CAS process, and once that happens and once there is a deeper pool of investors participating, the volatility itself will fade away.
Well, thanks so much for that, Nimit, and getting us that breaking as well. But just one quick question coming through from our viewer, and this one is on Azad India Mobility. What's your view on this, Rahul? I think you spoke about it as well, but anything, what could be a stop loss and a target to watch out for?
Yes, definitely. See, as I saw, Azad India Mobility, it's a specialized manufacturer of electrical buses and coaches, and I think EV is quite playing till now, and further more upticks can be seen from this sector. As far as charts are concerned, on the technical side, I think a rounding bottom formation is continuing, and as soon as it crosses 103, 104 levels on the upside, a massive move is possible. Stop loss should be placed at 85 levels.
Well, that was the last question today. We are a little short on time, so we'll probably take the rapid fire round tomorrow as well. But Rahul as well as Nandish, thanks so much for joining in, giving us your views across a whole bunch of stocks as well as spaces. But viewers, out of time, India Market Close comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and with me is Mahima Vachajani. We're coming to you live from the NDTV Profit Suzlon studio. It's a day of consolidation for the large cap end of the market. The broader end is actually looking pretty robust. But we've traded in a range of about 170 points for the Nifty 50. We did start in the green, but we gave up that ground quite considerably over the course of the day. We are trading very close to the low point of the day, but it makes sense this week in particular to not focus too much on the percentage change and to focus rather on the level that you should that you can see. So 24,500 is what you should pay attention to. Similar case for the Nifty Bank because of the kind of volatility that we've been seeing with the cash window or the closing settlement that we've seen, or the closing prices that have been arrived at on account of the new change that we've seen. So 57,535 is what we're seeing for the Bank Nifty. And let's take a look also at the heat map for the Nifty 50, because that's going to tell a story. Midway through the session, it actually flipped the script. So at the start of trade, it was even Stevens between green and red. Now you have more red on the screen.
Yeah, and you know, counters which did see volatility on account of the closing auction settlement are seeing action today as well. Right, you have Grasim, which is the classic example of that, up 2.4%, followed by something like a Shriram Finance. Though Shriram Finance has been doing well for the last couple of days, JSW Steel, in fact, metal as a pack is back in action again in terms of relative strength as well. L&T also doing fairly well, and of course you have names like HDFC Life and Hindalco. But on the flip side, you have your IT names. HCL Tech and TCS both losing grounds, almost 2% each. You also have Apollo Hospital, which continues to be under pressure. Names like, and because of RIL, of course, a heavyweight being under pressure, you're seeing that pressure coming on the Nifty 50 as well, as Alex pointed out, because at the day's low point as well. But I think the contribution will also be interesting to watch out for.
We should look at the contribution
that will give you a better picture as to what is exactly weighing down. So again,
all the heavyweights.
All the heavyweights, HDFC, ICICI, Reliance, and on the flip side, of course, you have smaller names that we talked about doing very well in trade.
L&T is actually doing pretty well, one of the top gainers on the Nifty 50 as well, and a reasonable weight, so therefore it's able to move the needle more than certain others, like Grasim, for example, that's contributing about 6.7 points on the upside. Let's take a look at the sectoral heat map, because at this juncture you will notice that the small cap index, which should feature in the top somewhere, there it is, the small cap 250 up about 0.7%. So the broader end of the market is actually doing well. We'll get you the advanced decline ratio in just a bit, but that will tell you that the gap has narrowed. We're still seeing strength in the broader markets though. Realty as a pack was doing badly yesterday, it's doing well today. So that script has gotten flipped. Auto as a pack has actually done pretty well in the recent past, and that continues. Metal, on account of a couple of base metal names, aluminium names, they're actually doing well, right? And that thesis or story is intact, and it's actually a broader theme, not just based on what you're seeing here in India.
Agreed, and like you said, right, so there was buying action seen in metals across the globe, and which is why you're seeing that uptick coming in. All your names, Hindalco, Hindustan Zinc, etc., all are doing very well. But let's also try to see the broad end of spectrum. As Alex mentioned, the small cap 250 just 1.5% away from the life high point. So we'll have to see as to when that is being crossed. The mid cap 150 almost flat now, has come off from the day's high point, but small cap 250, in fact small cap names are seeing very good buying action coming in, clearly outperforming the benchmarks as well as the mid cap 150 up by about 0.7%.
We should look at the advanced decline ratio, because you will see a narrowing of the gap between advances and declines over the course of the day, but you still have advances that are in the ascendance. You should look at individual counters as well.
And this is on account of the mid cap index, because it's come off quite significantly from the day's high point. But the BSE 500 quickly, if we can, and again yet another day of stock specific action, earning specific action is what we're seeing. On the green side, you have something like a PNB Housing topping that chart up 7.7%. Westlife, QSR pack as a whole has been doing very well. It'll be interesting once Jubilant Food numbers come out to see as to how volumes have grown, how the store growth momentum has picked up in these names. Something like a New India Assurance, VAC Engineering, Kansai Nerolac, all of these on the back of Kansai Nerolac, especially on the back of numbers doing very well. They posted numbers on Monday, but since then doing very well. But on the flip side, you have something like a Vaibhav Global, C Infosystems, Z Entertainment, which continues to be under pressure. Metro Brands, not a very very good quarter per se, but has done fairly well. But Kalyan Jewellers is the other one where we've seen significant amount of buying coming in, but post the numbers, it's seeing profit taking coming in, down by about 3.8%. Sugar stocks are also seeing profit booking coming in today after 2 or 3 days of rallies that it's seen. So Balrampur also down by about 3.6%. So that's Alex, with regards to how the broader end of spectrum goes.
Okay, all right. So that's the picture of how the markets are looking right now. Beyond the way that the equity markets have moved, you should also pay attention to the RBI monetary policy and the impact that has had on the money markets as well as the currency markets. So pull up the USD INR if we can right now, just to showcase where things are. Earlier on in the session, in fact at the start of the trade today, it was very close to the 95 mark. It slipped just a tad bit, and it's currently trading at 95.17. There was quite a bit of commentary with regard to the RBI's measures that have been taken to stem the tide that you've seen and stem the depreciation of the rupee. It hasn't necessarily moved as much as some people had thought, but then some important updates coming through. First, let's talk about the key takeaways from the RBI MPC meet. First and foremost, you have the fact that the MPC members unanimously voted to keep the policy rate unchanged. Not just that, and that repo rate therefore remains unchanged at 5.25%. Not just that, and this is something that will affect the course of monetary policy going forward, the MPC has maintained the neutral stance. Essentially what that means is that their stance is neither accommodative, which would indicate the possibility of a future rate cut, or on the other hand, it's not a tight stance or a hawkish stance that would indicate the possibility of a near-term increase in rates. It's neutral as things stand right now. FY27 GDP growth is projected at 6.7%. This is an increase of about 10 basis points, just a tad bit of an increase. On the flip side, the FY27 CPI inflation, that's a retail inflation projection, that has been pegged at 5% for the full year, and 5.1% was the earlier target or the earlier expectation. So it's been brought down just a tad bit because of the fact that the first quarter inflation had come in a little bit lower than was previously anticipated. But more importantly than that headline number, and something that the RBI pays attention to, is that core inflation is expected to come in at 4.3%. What is core inflation? Essentially, if you look at the CPI basket and you remove food and you remove fuel, whatever remains is called core inflation. And this is important to understand because food and fuel tend to be very volatile. There was also a comment that was made on FCNRB deposits, and the RBI governor saying that as things stand right now, there is no proposal to stem that flow or to close that window earlier. As per the last available disclosure, as much as $40 billion have already been mopped up by those swap windows, and the RBI says that it will allow it to keep coming through. So that's certainly something to pay attention to. It has had a bearing on the money markets as well. I'm joined right now by Nilesh Jain, who's the head and AVP Technical and Derivatives Research at Centrum Broking, as well as Sameer Zalal of Natvarlal and Sons Stockbrokers. Gentlemen, thanks so much for taking the time, and good afternoon to the both of you. Let me start, Nilesh, with a check with you on where the benchmarks are right now, where they're headed in the near term, and whether or not you would be you would suggest a long position as things stand right now.
Very good afternoon to you, Alex. Good afternoon, everyone. Well, in last couple of trading sessions, we are witnessing some bit of consolidation where earlier we saw Nifty face resistance at its 200-day long-term moving average. Resistance is currently placed at the levels of 24,770. And it is important that Nifty should break that barrier. Then probably we can expect a move towards 25,000. But as of now, we are expecting Nifty to trade in a range. The broader range looks like 24,300, 24,700. That's the broader 400-point trading range. And stock-specific action is something that we are focusing as of now. On index front, we expect both Nifty and Bank Nifty to consolidate in a tight range.
Okay, all right. So, and Nilesh, what about your picks for the day? What will you be going ahead and buying? And I suppose it's buying.
Right, I have a couple of buy recommendations. First of all, ITC Hotels. This particular stock has rebounded sharply from the lower levels, and the structure is looking positive. We have also witnessed a strong rebound and a breakout as well from the levels of 168. So we are expecting a move towards 175 on the upside, followed by 178. The stop loss can be placed at 164. So 164 should be the stop loss. 175, 178 are the two targets on the upside. Another buy recommendation that's on Dixon Technology. This particular counter recently tested its 21-day moving average and also trading well against all long-term and short-term moving averages. We are expecting a follow-up move on the upside towards 14,600, and the stop loss can be placed at 14,100, and Dixon Tech is a buy.
Second stock, Nilesh, can you repeat it, please? Dixon Tech, right?
Right, Dixon Technology.
Okay, all right. By the way, Whirlpool has just posted numbers, and a contraction in the margins is causing the stock to take a little bit of a tumble. We're talking about a washing machine stock here, don't get the wrong idea. It's down about 3% or thereabouts at 793. All right, well, let's get into, or actually before we get into the stock of the day, Sameer Dalal with us, of course. Sameer, what do we make of the monetary policy? Short, sweet, and to the point and along expected lines, but does it present any opportunities based on what you saw, particularly with regard to the flows that are coming through for FCNRB and what that means for the banking sector as a whole?
So good afternoon, Alex. Good afternoon, Mahima, and thank you for inviting me to the show. So yeah, the policy was a moot point, kind of saying nothing really comes from it. We talked about the fact that you'd already mentioned that inflation is expected to be around 4.3%. So there's no reason for the government, for the RBI to increase interest rates anytime soon. I don't see it happening in the next policy meet either, unless something changes drastically. On the other hand, if what Mark Rubio said yesterday with the Strait of Hormuz getting resolved and opening soon. If something like that happens and crude comes off further, in fact, it may open up a window, for a further rate cut over the next maybe 3 months to 4 months. But we need to see how things play out. Having said that, markets will remain volatile because of the global geopolitical issues that continue and persist. But what I like about the market is that we are now becoming more focused on our domestic front. Just to put it, you all discussed QSR starting to move up across the board. I mean, name it, it's all moved up. So the buffet is finally opened and people are making their way to the buffet. And I think that's something that we need to focus on, focus more on consumption of the domestic market, focus more on capital goods, which cater to Indian markets, where we think the capex cycle is now going to start reviving and where the opportunities will lie. Unfortunately, some of them are still trading at expensive valuations, but there are many which are attractively priced and at 52-week lows, and those make great buying opportunities.
So that's, the entire, view that Samir has. But the interesting one to watch out for in trade today is PTC India, because it's not like Q1 was very strong for this one, right? But something that Sharath pointed out very early in the morning is something that's actually taking the stock almost at 8%, at that 8% high. And I'll bring in Sharath to give us exactly that. It's a dividend yield, right?
Correct.
If you combine the last 3 years, it's more than that, right?
Exactly, you're right, Mahima. And also this stock is a multi-bagger identified by Vikas Khemani. But enough on that. But let's talk about how the stock has moved. Over the last 4 sessions, we are seeing a good momentum in the stock. The stock is on a 6-day gaining streak. 15% jump already in the last 4 sessions coming in. If you look at the momentum, it shows some good strength. If you could just show the performance of the stock has touched its highest levels since the 52 sessions, or let's just put it in a 52-week high. Also, another key reason is, of course, the dividend part. The dividend, looking at that dividend move, it's around 23 rupees per share. Now, look at the current market price. That itself is less than 200. That means in yesterday's closing, it was a 13% dividend yield. Come on, just add all of them up and put it here. It's still more. Look at the magic here. Despite weak set of numbers, look at the momentum in the stock. The stock is up 8% as well. So yes, a dividend also gives you good returns, and maybe it comes on your growth numbers as well. But let's also point out the Q1 numbers. The trading volume, that saw 12% growth coming in terms of the units, but largely the numbers were on the weaker side. The total operating income was literally nothing. It's just up 2%. But if we go into the details and do a breakup, short term, medium term, especially the medium term segment, that is where a good year-on-year growth has been recorded, and even short term trading as well. The company is into power trading, largely nothing much happening for Bangladesh and the long term contracts. So operationally the numbers were, we could say, mixed, financially weak, but dividend, that's the new story for PTC India. So essentially, correct me if I'm wrong, there is another power exchange, of course, and we're talking about the peer being IEX. IEX. So therefore, this is not a business that requires a significant amount of capital expenditure. And they are very cash rich also. Exactly. That's a reason. And when there is a bad results, there should be one way to reward the shareholders. Yeah, absolutely. All right. Thanks so much, Sharath, for getting us those details. IEX is the competitor, and something that you need to bear in mind on the reaction that PTC India has had and the performance that it's had as well. So I want to come to you, Samir, on this particular company. It's not likely that this company needs a significant amount of capex, and so therefore what it does with its profit and distributing it is not such a bad idea. But what do you make of PTC India in the larger context, though? This whole market coupling story with the IEX and the fact that it hasn't yet come through. If it does come through, it would be advantage PTC India?
Not necessarily advantage PTC India, right? So PTC India is not directly an exchange. They do a lot of their own trading also in the power segment, right? So that's where a lot of the profitability comes from. The exchange is today, I think 92% of all exchange volumes of short term, which is the very short term spot trade, the next day trade, all of that is happening on IEX, which is not happening on PTC, right? PTC is slightly longer term. So the market coupling that happens may not drive PTC's volumes up significantly, because there are other players who are there in that who may get some of the share. And again, secondly, it doesn't mean that people who are already getting a good amount of volumes on IEX need to shift if they're already working with IEX. What is the benefit of moving to a different exchange if the pricing is going to be calculated based on the average of all three? I might as well do my trade here and I'm okay. So it's not necessary that IEX loses its volume. So just to justify that, no, I don't think that's the end answer. Now, is PTC India trading at reasonable valuations? It's trading at about what, 15 times trailing earnings. Growth is very limited in the near term, we believe. So, is there a reason for a re-rating and valuation? We doubt it. We don't think so. So, for me, at this point, yes, the dividend is fantastic at whatever they've given, 23 rupees, but that could be a one-off paying out of the cash. But it can, unless the profits keep growing at that, because their last year's profits were, I think, about what, 13 rupees earning per share or 14 rupees earning per share, and they've given 26. So they've in fact paid out from their share capital rather than from their profits, and they cannot do that endlessly. So the profits need to grow to justify the growth in share price movement. I wouldn't go out and buy it just because the dividend is at 23 rupees. That's a one-off.
Okay, all right. So that's the comprehensive view that we've gotten for PTC India. The stock still trading at the day's high point. But RITES is the other one which is doing very well in trade today. And this is on the back of the Q1 numbers that it has come out with. It's been, a healthy growth led by largely growth in turnkey leasing consultancy, and the energy business as well. But let's try to decode these numbers, the order book especially. And to understand exactly that, we're now joined by Rahul Mittal, who's the chairman and MD of RITES, joining us now. Rahul, thank you so much for taking out the time. Mahima this side. I think I'll start with the order book first. You've said that for FY27, you plan to reach an order book of around 10,000 odd crore. You're already sitting at 9,400 odd crore, which is at an all-time high. Give us more sense as to whether this 10,000 crore order book guidance that you already have can be extended further, and if yes, by what quantum?
Yeah, good afternoon. No, so the Q1, we have maintained a trend of more than one order a day. We've got 128 orders, which is about 1.4 orders, totaling to 670 crores. And despite the execution, there has been a growth in order book between 31st March and 30th June. So the target that we've set ourselves of reaching 10,000 crores, that's definitely on track. The first month of Q2 is also showing us very healthy signs in that direction. So definitely, and the interesting part is, and the reassuring part is that this is orders coming from across the sectors. All our 13 infrastructure consultancy verticals, and both domestic and international, we are getting orders across the sectors, whether it's highways, buildings, metros, export of rolling stock, etc.
Mr. Mittal, hi. Good afternoon. Alex here. I'm just wondering about the execution timelines of the orders that you've been winning. What is the average timeline that you would say these orders have?
So all our 4 streams of business across 13 verticals, by and large, all infrastructure projects have roughly about a 3-year time frame. And since the order book started jumping in a big way from about last 12 to 18 months back, this is a young order book. A substantial portion is very young. And that's why the execution this year is the year where, as per the guidance which we have given at the beginning of the year itself, that sequentially we will see a substantial growth in every quarter, so that the entire year we are aiming at least a double-digit growth vis-a-vis the last FY.
And growth is going to be double-digit?
Yes, for sure.
Okay. So therefore, and I'm just extending that, Mr. Mittal, and trying to understand. So if you're saying that it's a young order book, and FY27 looks robust from that perspective, and you're talking about 12 to 18 months, and if you're talking about 3 years, which means that FY28 would look even more robust. So therefore, what is the kind of number for the full year or for revenue that is penciled in? And this is obviously, there is complete safe harbor to say that this is assuming that everything else stays the same.
Yes, so FY27, we are, as I said, targeting a double-digit growth in the top line vis-a-vis the last year, and also targeting an order book somewhere by the end of the year reaching 10,000 crores. So that's, as you said very interestingly, besides heavy execution, also a growth in order book. So definitely FY28 would build up from there above the base that we create in FY27. And there are stresses on margins due to various factors like the travel costs and etc. But primarily still the aim is to have as much of a growth in the top line, maintaining our borderline, our red lines which we have kept for the EBITDA margin, so that there's an incremental growth in profits also.
To that, Rahul, just a follow-up in terms of margins. Like you mentioned, there's travel cost, there's also employee costs on account of which your margins have slightly moderated. But considering that you also have turnkey projects into picture and that those margins could be chunky, so just want to get a proper sense of FY27. Where do you expect the blended margins to be at, if at all there's a number to that?
See, we are very clear. We have set ourselves, as I said, red lines on a console basis, EBITDA margins in no condition falling below 20%, PAT margins in no condition falling below 15%. So despite the challenges, as you said, of the turnkey segment being a lower margin, travel costs going higher, then the pending pay revision, which has to be accounted for somewhere this year, as well as since more than 70% of my orders which we are getting in the last year or so are on a competitive basis, which are definitely on a tougher margin. So all these factors being there, but still strategically, since we have about 700 plus consultancy orders that we are executing across our different verticals, what we try and do strategically is to have a blend of high and low margin execution, so that definitely we will not fall below the red lines of 20% EBITDA on a blended basis on the overall year.
Rahul, the other aspect is your international order book is now almost around 2,100 odd crore, and this, I suppose, is from that 9,400 odd crore that we've been talking about. Because Bangladesh was a one-off thing where it was impacted in terms of performance, overall, the order book growth has been very strong. Where do you expect this to go, let's say 2 years down the line, FY28? And do you think that the margins in your international order book are better than the domestic ones?
Yes, so our international business under the Rights Videsh initiative has two parts. One is the design and export of rolling stock, and the other is the project consultancy. Together, as you correctly said, they are today at 2,100 crores. It's about 22% of the overall order book. As the execution improves of this, the first rake of Bangladesh is targeted to go out in next few days, and subsequently this will only step up in the subsequent quarters. We are still maintaining the strike rate for the last about 7 trailing quarters of 1 export order a quarter. So despite the fact that this year we are aiming that international business would contribute roughly about 14 to 15% of the total pie of revenue, and aspirationally on a long-term basis, we would like to have our Rights Videsh order book being about 25% of the total order book, and revenue about 20% of the total revenue.
Mr. Mittal, since we're talking about aspiration, just want to close out the conversation, and double-digit growth for top line for FY27 is something you've told us about. But the peak of the EBITDA that you've achieved over the last, say, 10 years or so was in FY23. It's close to 760 crore rupees, right? I'm just trying to understand, at what point do you think that the company will once again hit that mark? And of course, the full year margins were closer to that 30% mark. Based on the projects that you're currently doing, that may not be possible. So therefore, it's going to be a factor of how large the revenue pie goes. So when do you think that you can achieve that peak?
So you're very correct. You see, comparison of the order books mix and the margins and the competitive versus the nomination vis-a-vis from about 5 to 6 years back and now is totally different. It's about 70% plus on a competitive basis, both in domestic and international. International orders, we are getting literally all on a competitive basis. So you're very correct. To reach with the current margins of about 20-21%, the aim is to step up as much as on the top line, so that you reach actual levels of the actual bottom line EBITDA and PAT of the levels about 5 to 6 years back. So definitely, while I don't want to preempt that, but definitely double-digit growth on top line minimum building up on a CAGR basis, so that at least 2 to 3 years we are able to get that levels of actual profits and those EBITDAs.
Okay, all right. So that's certainly something to aspire to. Mr. Mittal, thank you so much for taking the time. Wish you all the best in achieving those aspirations, and speak to you soon.
Thank you. Thank you.
All right, well, it's at the high point of the day, isn't it? Right, it's up considerably, close to 4% higher as things stand right now. Let's head across to Soumit Sarkar now to find out whether there are more stocks beyond just REITs in the space that is buzzing. Of course, on earnings, there's quite a bit that is buzzing, and quite a few that are also based on khabar confirmed. Soumit, what are you hearing from the dealing rooms?
A lot of stocks that remain in focus. Firstly, a couple of them is Lenskart and Dr. Agarwal. I know dealers are expecting a block deal very soon in both the names here. Apart from that, Bajaj Twins also continue to remain in focus. There are buy flows on the institutional desk. Dealers indicate that large long-only funds have been accumulating both these counters in trade. And when on the flip side, there is Infosys and HCL Tech. There are sell flows on the DI desk is what dealing rooms are indicating for both the IT names in focus. Then given the fact that it's earnings season, Blue Star continues to remain in focus. There are sell flows on the large HNI and the PMS desk. Dealers are expecting a weak Q1 earnings. And on the flip side, there is Hindalco, Electronic Marts of India, Wellspun Living and Greenlam. All these stocks continue to remain in focus. There are buy flows here. Dealers are expecting a strong Q1 numbers to come in from all the four names. So keep an eye out for these counters in trade.
Okay, all right. Samir, thanks so much for that, Soumit. Samir, let me come to you on what you made of the conversation with REITs as well, right? And I'm sure that you were paying close attention to some of the answers that were given with regard to the trajectory, etc. So double-digit growth in top line and an aspiration to hit the peak of 760 odd crore EBITDA in 2 to 3 years, right? Is that something that enthuses you, or do you think that there are better opportunities in the space?
So honestly, there are better opportunities in the space, if you ask me. Look, this is a business that obviously has potential to grow. A 10% growth for a consulting business with some amount of turnkey work, nothing that exciting, because when you increase your turnkey work over the consulting, it hurts your margins. So for me, that obviously is not something that goes down well. Now, there are other businesses in the railway space, if you ask me, which have a great opportunity for growth. So if all these new rakes and metros and all of these things are happening, who are the guys making all of this? So there's Texmaco Rail, there's Titagarh Rail. Titagarh Rail is something that faced a lot of difficulty over the last year and a half, because they were getting shortage of wheels. So they were not able to supply the rakes to the quantity that they wanted. Plus, now that problem is behind them with their joint venture started, where they will be making the wheels in-house. So they will be able to scale the business up. Second, they are increasing the number of passenger coaches versus freight coaches. Now, these passenger coaches will have a much higher profitability. So as that scales up, we will see the margins expanding. And this stock has corrected significantly. Titagarh has corrected from 2,000 odd levels, I think maybe 2 years ago, to about 800. So you're getting it at a very decent valuation with the correction in the stock price and the correction in the earnings and everything. And now with the rebound, it'll do well. Then there's IRCTC. We think that is a fantastic idea, because look, they book 94%, 95% of all train tickets booked are booked through their portal. They have the food, the rights to all food sales, which is constantly increasing, and they're getting into this vacation and pilgrimage kind of packages which they sell on their platform, which is also gaining more and more traction. All of it capital light in nature, debt free, cash rich, and even a 1% increase or 2% increase in the per ticket revenue that they sell can change the dynamics of profitability quite significantly for them. So if that comes through, which we think can come through in the next year and a half, something that can do really well.
Certainly. All right. So IRCTC and a couple of the others that have been mentioned to you. Nilesh, I want to come to you very quickly on a pair of stocks that has done well, particularly Bajaj Finance, but also Bajaj Finserv. After the results, it's been on an absolute tear. And according to Soumit and what he's picking up from the dealing rooms, of course, it's come off the high point of the day, but take a look at the last week or so. It's done incredibly well. Would you take money off the table if you managed to get it about 10 days, 15 days back? Because it's up as much as 9% in the week, so over the last week.
Well, Alex, a very good setup we have already seen in last few trading sessions. So it's better strategy would be to take out the profit if you are making and wait for some meaningful correction towards 2050 or maybe 2000 kind of zone that will give a good entry point because the stock has a major support at 1920. That should be your stop loss, and buy and decline should be the strategy. But in case somebody is making money, then these are the good levels to take out the profit and sit on a sideline for the time being because the counter is overbought. Both the counters, Bajaj Finserv and Bajaj Finance.
Okay, all right. So that's the view coming in on both the Bajaj twins. But, we've decided to do bull versus bear on Marico today because despite of posting a strong set of numbers, the stock did see, profit booking or pressure in trade today, and it's continued to do so. We'll take a look at what the bull versus bear case looks like for this one, though the stronger one, the stronger side is, of course, the bull side. But, in terms of the Q1 numbers, it was definitely a strong beat in terms of EBITDA and PAT, we've seen this beat across quarters for Marico for last so many quarters, right? But despite that, valuations are not looking cheap for this one because 5-year average sits at around 54 times. The stock is currently trading at 58 times, and 1 year forward is indicating around 51 times. So the stock is not going to get cheaper. That's also one of the reasons as to why we are seeing profit booking today. In terms of the volume growth at 11%, a double-digit volume growth, which the management, by the way, has also said that they could do it in the next quarter as well, though the guidance is for a high single digit at a 12-quarter high. But like I said, the guidance still management has maintained at that high single digit volume. So next quarter or so, we could see volume come off slightly from that 11% mark. In terms of the segment specifically, Parachute has done very well. Yet another quarter of strong growth, 10% growth YY basis. Again, a 20-quarter high for this one. But on the flip side, Saffola edible oil was where volume decreased in high single digits, and this is on account of the hike in prices that they had to take for Saffola. Lastly, in terms of where margins go, margins this quarter were much better than what the street was expecting. The expectation was of around 19.4%, but it's coming at 20.7%. But going forward, I think for every FMCG company this applies, going forward, inflation is something that we'll be watching out for. Crude oil prices is something that we'll be watching out for, and that will decide as to how margins will fare. Because at the end of the day, if companies go ahead and take price hikes, it is going to impact the overall volumes and in turn impact their overall sales as well. So this is the overall view and a bull versus bear summary of Marico. Samir, I'll quickly come to you on not just Marico but across FMCG. I think we've lost Samir there, but Alex, I'll quickly come to you.
Yeah.
So this is the whole and soul of how things have panned out for Marico.
Yeah, very interesting. All right. Thanks so much, Mahima, for that. In fact, we've got Shivangi Sarda, who's analyst equity and derivatives and technical at Motilal Oswal, as well as G. Chakkulingam, who's the founder and managing director of Economics Research. Thank you so much to the both of you for taking the time, and good afternoon to you. Mr. Chakkulingam, I'll come to you on Marico because the numbers look good, and we just had Mahima present a bull and bear case. The Parachute volume was strong, the value growth was strong, the value-added hair oils segment has also looked particularly good. So a lot of factors working for the company. Do you think that it's all in the price, or do you think that there's an opportunity even at these prices?
Yeah, so to some extent it is in the price because last 5 years the company has been struggling in line with many other FMCG. The profit growth has been poor single digit at around 9% in the last 5 years. So that is why, despite quite impressive performance in June quarter, it's not reflected, the stock price much. So there is apprehension whether, this kind of year-on-year growth will be continued or it's a one-time event. That's a doubt in the minds of the analyst.
Okay. I just want to bring on board Hiral. She is joining me in studio as well. Hiral, by the way, stock reactions, some individual stock reactions are quite sharp and robust today. We were just speaking with the management of RITES. That stock is up and about. PTC India is doing particularly well. Anything else that you've been spotting and looking at closely?
The names are seeming very interesting. The insurance pack, I don't know if we've spoken about that, but the
not on this show yet.
Pack, with regards to motor insurance is doing very well. Look at an ICICI Lombard. Look at a Go Digit. All of these counters up and about in trade. If you can just quickly pull up those screens. ICICI has cooled off, but you're still seeing gains of 1.8%. Go digit, absolutely strong. 6 to 7% is the kind of up move that is coming in there. And this is only on the back of the changes where any new vehicle that gets registered will have to take a third-party insurance, which is changed from 3 years to 4 years. So that's the reason why these companies benefit. Mr. Chokalingam, any quick view on any of these general insurance, motor insurance, catering kind of names?
It is positive, no doubt, but the way the market is rewarding, I doubt whether it's in the right direction. Because just by paying in advance for 4 years, the insurance companies are not going to gain anything except possibly the interest income, on account of the payment of this insurance coverage well in advance. Otherwise, this is going to be compensated by, not receiving in the remaining 3 years. So there will be a marginal positive impact only to the extent of, getting the money in advance and making some, investment income and interest income. But otherwise, I think this reaction is overdone.
Shivangi, a quick view on individual counters that you may be liking, and just about 10 minutes to go for F&O stocks in the cash market. So if those are stocks, perhaps we should get them out of the way now.
Very good afternoon, Alex and Hiral. Thank you for having me. We've seen that the indices have witnessed some sort of consolidative move after the rally of the last 7 sessions with over 1150 points up move. Now, stock specific, of course, I'm looking at some counters. Eternal is one counter which is looking quite positive, holding on to the higher levels, and the QSR space or the new age company space is looking quite positive. And this stock has actually made higher top, higher bottom from the last almost 4 months, and we've seen good momentum adding up here at the higher levels. So this one's on radar. Apart from this, I think some of the counters, some of the auto names could be kept on radar. Selective names, but of course, these are doing quite well. So this is the space that I'm looking out for.
Okay. So that's with regards to where the auto index goes. Shivangi, any top picks there before I go to the next story that we're looking at in terms of SEBI, which has concluded the first round of discussions with qualified brokers. But before we get to that, quick top picks at this hour.
So definitely we've seen some of the FMCG pack run up because of the results of Marico lately. But overall, I'm looking at Grasim, which has given a Poland flag pattern formation breakout, holding on to the higher levels till the last hour of the trade. This one's looking quite positive, and we're looking at around about 1380 and then 1400 levels for this one, and with a support of 1300 zones.
Shivangi, which stock are you talking about?
JSW Steel.
JSW Steel, yeah. We just have a Grasim which is on the screens, but it's about JSW Steel as we speak. But moving on. Sources tell NDTV Profit that the SEBI has concluded the first round of discussions with qualified stockbrokers. Now let's get Nimit to tell us more. Nimit, good afternoon. This is everything to do with the first 2 sessions of CAS that have been concluded. Today is day 3, and I'm sure a lot of concerns, a lot of discussions, etc. that have gone by. What are you picking up from your sources?
Yeah, so there are 2 key things that SEBI has told the qualified stockbrokers in this first round of review that they're doing with the brokers. The two key issues they've raised is first on awareness, saying that maybe brokers have not done enough on awareness and need to do more to build that awareness. And secondly, they've reiterated and made it clear that retail participation is key here in this CAS program to make it successful and to make the volatility stabilize. Now, what the QSBs have said here is that they sought 2 to 3 weeks to complete front-end integration on their apps to improve retail participation. Now, we also understand that this meeting is part of a longer review that SEBI is doing now, and is going to be meeting with different stakeholders. The key message that it's going to be making to all stakeholders is that we need to ensure larger retail participation, and that will directly reduce the volatility that it's causing right now.
Yeah, absolutely. All right. Thanks so much, Nimit, for getting us those details. All right. Let's focus in on another cohort of stocks that's doing well, and that's in the metal pack. And I do want to ask Shivangi what she has to say about this cohort of stocks, particularly the likes of Hind Copper, Hind Zinc, Hindalco. these are stocks that are buzzing, and Hind Copper is up as much as 8.5%. Would you ride that rally?
Definitely, Alex. Metal pack is one such space which is looking quite positive. In fact, from the last 3 days, we've seen that there was some sort of OI which was adding up, and from the last 2 days, we're seeing the price conversion as well. Now, Hindalco is doing quite well given a bottoming out structure on the daily basis, and we've seen that there is a negation of the lower top, lower bottom formation of the weekly frame as well. So this one's definitely looking quite positive. Hindalco, if we have to look at the levels per se, one could look at 1080 and then 1100 levels with a support base of 1020 levels. Now, apart from this, of course, I discussed JSW Steel, which is looking quite positive, and National Aluminium. NALCO is one stock which is also quite resilient and has come out of the consolidation of the last 5 weeks. So this one should also be kept on radar. Slightly muted performance today, but overall, this one's quite positive as well.
With regards to NALCO itself, we have seen a double upgrade as well that did come in from a Kotak Securities recently, and there was a lot of momentum since then. But let's quickly pull up a Berger Paints, and if you can just get an intraday chart. Profits up almost 20% at 404 odd crores is what you're picking up on a sequential basis. Revenues have grown 25% as well. So the revenue and the profit growth, if you go to see, is pretty much in tandem, which is a positive. You're seeing the stock also climb to the day's highest levels. That vertical spike that is coming in there. 3,584 crores is what you're tracking in terms of where the top line goes. The profit number, 21% at 404 odd crores. And this is on a sequential basis that you're talking. 26% EBITDA growth, 607 odd crores is where the EBITDA has come in at. So again, strong growth momentum on that front as well. And I think this is clearly telling you that the margin picture is also looking strong. And this is in spite of all the supply side constraints that we were talking about. Crude derivatives becoming one of the key components there.
Yeah, and the stock is at the high point of the day and climbing further. The question is, how much of this is on account of inventory gains that have come through? In that they have undertaken price increases over the course of the quarter, Hiral, and this is something that our colleague Ridhima reported on consistently. It's not just Berger Paints, it's also Asian Paints. All of those paint companies undertook price increases over the course of the quarter. Maybe they had a benefit of raw materials that they already had in inventory, and so to a certain extent they had that benefit come through, and whether or not this is sustainable heading into the second quarter is something to pay close attention to. However, one can't take away the fact, and there you have the margin picture there, it's an improvement by about 20 basis points on a sequential basis that has pushed the uptick in net profit to the extent of 21% on a sequential basis. We'll find out from Mr. Chokalingam what he has to say about Berger Paints after this very quick break. Stay tuned, we'll be back before you know it.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Welcome back to India Market Close on NDTV Profit. Let's quickly just pull up the markets once, because you have Nifty 50, which is nearly at the day's lowest levels. And if we can just have that sectoral heat map once again, no, in fact, that mild uptick from the day's lows is what you're seeing. You're hovering around that 24,500, 550 kind of mark. Metals, auto, real estate, PSU banks gaining. What's losing out is the financial service sector. So you have banks, services, FMCG, oil and gas, IT are the ones which are down in that range of 0.3% to almost 0.5%. But the top gaining sector continues to remain metals as we speak. And what's driving this kind of rally as well is the key question. In fact, let me actually head across to my colleague who's standing by to tell us what's really happened with the small cap index as well. You have Nifty small cap, which has scaled a record high, and this is after 406 sessions. But the broader small cap 250 has slipped 1.7% from its peak, signaling a need for caution. Parth is here to share insights on the small cap rally. Parth, the question is, will people really make money on this rally, or this momentum is not going to be sustainable? What are the cues that you're picking up so far? Good afternoon.
Good afternoon, Hiral. Well, the momentum so far looks pretty much sustainable, and that's how the markets have been behaving in the last couple of years as well, where small caps pick up the pace first, and then mid caps and large caps follow them. And that's what is happening right now as well, with small caps outperforming the benchmark. If we first talk about the small cap 100 index, it has hit a new all-time high after 406 sessions. That is almost after 21 months. The last all-time high was on December 2024, and not just small cap 100 that is outperforming, also small cap 250. To cover an even broader view, that is also down just 1.7% from its last all-time high from September 2024. Now, if we pull up the index performance to get a better view, in the last 1 month, both of these indices have gained almost 2%. In the last 3 months, almost a similar performance of 8%. In 6 months, small cap 100 has outperformed, gaining over 15.5%, while small cap 250 is at 14%. And on the 1 year side as well, small cap 100 gaining almost 11%, and small cap 250 gaining 7.5%. So with the small cap 100 index hitting a new all-time high, let's look out the top 5 winners, the gainers that have led this movement. The first one is Ather Energy. It wasn't even listed back in 12th December 2024. It got listed on 5th May 2025 and has gained over 379%. The main trigger behind the rise in Ather is that Q1 revenue has gained over 90% year on year, with the company reporting its first ever EBITDA positive quarter as well. The second one in the list is Force Motors, which has gained over 180% since December 2024. The third quarter of FY26, the net profit jumped by over 250% year on year to reach over 400 crores. The third company on the list is RBL Bank, which has gained over 119% since December 2024. The main trigger is that Emirates NBD has acquired a 60% stake in the company, in the bank, for over 26,000 crores. That's what has driven this rally in RBL Bank. The fourth one is Welspun Corporation, gaining almost the same level as RBL Bank at 118% since December 2024. The main reason is order book growth on the back of US order wins that has grown above 25,750 crores. And the last one on the list is Naveen Fluorine, which has gained 113%, with Q4 PAT seeing an uptick of above 120%, mainly led by CDMO growth. So these are the main drivers that have led this rally in small cap 100, and let's hope that this rally continues towards large caps and we see a brand new all-time high in Nifty pretty soon.
All right. That's certainly something to hope for. Thanks so much, Parth, for that.
I mean, Parag Thakkar today was very optimistic about it as well, in terms of at least Nifty 50.
Yeah, he was. By the way, the cash market for F&O has shut. And in fact, take a look at the last tick perhaps at this junction. Of course, you'll see a settlement later on in the session, I should say. It's currently at 24,570. Pull up the Nifty 50 futures though, and we can do a comparison perhaps and take a look at where it is at, and you can look at maybe the Nifty Bank futures as well, and we can see where it's ending at. So, but remember the value of the Nifty 50 at 24,570. So the Nifty 50 futures currently trading at a premium of about 80 to the spot at 24,650. Remember 24,570, because that's something that you should compare with the closing levels that we'll come to know closer to 340 today. And we've seen a bit of a diversion, to say the very least, over the course of yesterday and day before between the closing level at 315 and the final level at 340.
Absolutely, and that's how it has been, right? And I think from the stories that Shrimi has got for us on CAS, or Nimit has got for us from SEBI as well, all of them are indicating that somewhere the participation needs to be higher to make sure the system actually works well and in the benefit of all the traders, investors, et al. And I think that's what needs to happen from here on.
Yeah, because at this moment, and this is something that came in as advice from a number of people that understand derivatives. This is not a space that a retail investor or retail trader can get into and succeed. It's where the institutions will come in and make the price, and it's not something that you can perhaps venture into. So the call has been essentially to close out your position. Shivangi, would you buy into that kind of an approach right now? Is caution warranted beyond 315? Is that a space that you should ideally not venture into unless you understand what is going on?
Yes, Alex, absolutely. This TAS system which has come into play, it will take another, a week to again settle down and for the people to start participating in it. But of course, in the long term, this is going to only ease the last hour volumes and the volatility. And looking at the immediate, movements that we've seen, that of course the spot is kind of shooting up where the futures are down. Of course, the improvement we've seen is that the premiums were very high on Monday, which reduced, on Tuesday. So we'll obviously have to look out for it today. But we are still recommending that once this, system settles down and the people are in practice of the same, till then, I would suggest that, you should kind of square up the positions, round about 315. And because of the kind of crazy movement that we're seeing. And also expiry day, some, decay is not happening till, 315, which was earlier the case. So now that will also be a challenge to look out for the next few expiries.
Okay, so that's with regards to the view. But, Shivangi, one question I have for you is, this is the third session. In terms of your observations at the rates that we close at 315, once it opens up yet again in terms of the auction window and the final closing price that we see at 340, what is that key observation that you've had which is becoming a trend? I mean, too early to call it a trend, but, something that has just started to build on over the last 3 days?
So from the last 3 days, I think one thing is very common that, futures are closing at a discount of the spot. So that will be important to look out. Earlier, this trend used to be there, when the market trend used to be kind of slightly negative. But overall, right now, the other factors are adding to this trend. So this is one thing to look out for, of course. And the option open interest is kind of acting up till the end of the session. So even that is quite significant, which is different from, earlier. So I think these would be important to watch out. But of course, this is aimed to settle down in the next course of time.
Okay. So then, okay, thanks, Shivangi, for that. Stay with us. A quick question I want to take with Mr. Chokalingam as well. Mr. Chokalingam, I'm sure there are a lot of murmurs, etc., that are happening in and around the markets right now with regards to this cash window that is opened up over the last 3 days. What are you making of it?
Definitely, I should admit that my ignorance as well as understanding this F&O segment and its implication. So kindly excuse me.
Sure, no problem. Okay. The other thing I want to talk about is Bharti Airtel, Mr. Chokalingam, with you. In terms of the earnings, what brokerages made out of it as well. We did have the opportunity to listen to the con call where Shashwat Sharma, MD and CEO at Bharti Airtel, highlighted the pricing architecture in telecom sector for a long-term growth and emphasized the need to start data usage charges as well. We'll first listen in and then I'll come to you. Let's listen in.
Postpaid is a key ARPU growth lever for us with significant opportunity ahead of us. Our recently launched Fastlane technology leveraging network slicing on 5G is delivering the differentiation on postpaid, which is driving an acceleration of the business. For upgrading customers here, we are focused on driving persuasion, simplification of our journeys, and superior value discovery across all our channels. Within prepaid itself, we continue to see a large opportunity to move customers to their most relevant plans by using customer context and next best action capabilities that we have developed on our digital stack. In addition, handset upgrades from feature phones to smartphones, rising data usage, 5G adoption, and international roaming provide meaningful headroom for ARPU expansion going forward. I do want to reiterate that the longer-term pricing architecture of the industry still needs to be repaired, and the industry must charge for data consumption. This is paramount for sustained ARPU growth in the longer term.
Okay. All right. So the ARPU was better in the quarter gone by, just primarily because there was one more day in the quarter gone by compared with Q4. But there was a little bit of an ebb in a couple of their businesses, broadband as well as DTH. Is that what is causing the stock to lose a little bit of steam, Mr. Chokalingam, or is it the gain that it has had in the recent past that is causing people to take money off the table? And would you say that it's an opportunity to get in at these levels?
Yeah, there are two parts to your question. One, yes, the latest quarter year, the momentum in profit growth has come down. That is what is affecting the stock price. Second, it's a fabulous stock for long term. Whether you take a market structure, which is favorable to the top player like Bharti Airtel, and data, the growth opportunity for data segment is fantastic. ARPU is steadily increasing. And government role also, if you see, they have the 42 share in the revenue from the telecom sector. So therefore, going forward, we can expect a steady growth in the the revenue of telecom industry. So all augur well. Even its own track record, whether you take 3 year, 5 year, 10 year, CAGR in profit is fabulous. So I think this is a good opportunity to accumulate for medium to long.
Got it. Okay. All right. Let's focus in on another stock that is doing well today, and that's Cello World. A strong move coming in after media reports indicate that Bain Capital may acquire a controlling stake from the promoter group. Shivam joining in to talk about what the details are here. The stock is up as much as 15% as things stand right now. Shivam?
Yes, the stock has seen a significant up move in today's session, and according to media reports, the Bain Capital that is leading the discussions to acquire a controlling stake in Cello World. Currently, the promoter group currently holds around 75% of the stake, and the transaction value it is pegged at over 3,000 crores. Also, in terms of other supporting factors, we have margin normalization, which is expected to normalize going forward. And earlier in FY26, the margins were mainly impacted by the higher raw material cost, and steelware sourcing also was one of the major reasons that the margins were down. Also, the glassware plant that was seeing a delay, and that's why was the reason that margin has declined. Newly acquired the Cello stationery and pen brand is also expected to contribute to the revenue in FY27. Also, the new steel bottle plant, the commissioning and ramp up is expected for FY27. In terms of revenue growth, the margin management expects the revenue to improve from quarter to FY27 going forward. So all these reasons have supported the positive sentiment in the stock, and that's why we are seeing a strong uptake.
Got it. All right. Okay. Mr. Chokalingam, Cello World Is this something that you've tracked, and if so, what are the opportunities here? The stock is, of course, at this juncture 15% higher.
Sorry, I haven't tracked it in the recent time.
Okay, all right. Shivangi, then let me come across to you on the charts. What would you suggest is strategy here?
For Cello, I think if you look at it technically, we've seen that this stock has kind of traded in a downward sloping channel from the last 25 months. So, of course, today we are seeing a lot of price surge here around about more than 15 odd %. But overall, this stock has kind of dampened in the long term. So we'll have to check if it kind of holds above 380 zones for this to sustain and the next leg of recovery to begin from here, or else it would find some consolidation at these levels.
Okay, all right. So just a couple of minutes to go for the closing of the cash market, and this is X, the F&O stocks. Okay, so 570, remember, was the close at this is very interesting. All right, 570 was the close at the end of 315, and take a look at the benchmark right now, 24,624. So there's a bit of a pop that you're seeing, and we'll have to look at the internals to find out which of the constituents of the benchmark have moved higher in the interim. Shivangi, what do you make of this?
So of course we've seen that from the last 3 days, the kind of movement that is happening in the last hour or last 10 minutes, if I may say, is kind of very absurd. But overall, if this index continues to hold above 24,500, then we could extend the move towards 24,800 odd marks. Buy and decline is continuing here because overall trend is quite positive, even despite the moves of lately. But support base can be seen at 24,400 levels, and buy and decline to continue with outperformance in Nifty as compared to the banking index.
So 24,624 is what you're looking at right now. Let's just pull up Bank Nifty on the screens as well and see what's happening in terms of Bank Nifty and what are the rates that we're tracking there. There you go. I mean, 57,739 is what you're looking at.
At 315, the level was 57,629.
Okay, so you've seen that surge that's come in there as well. We should look at individual counters. HDFC Bank, ICICI Bank, Reliance Industries. Let's just pull up a few of these names and see SBI, which are the components in terms of Nifty 50, where if these companies are the ones which are also seeing that kind of a surge. SBI pretty much plateaued, hasn't moved to that extent. Can we have the other ones which I just mentioned to see if there is...
The heavyweights we
can
look at.
Even the IT names like an ITC. If we can have an intraday chart, guys, quickly.
Please.
Just the intraday chart to understand the kind of spike that's coming in any of these counters. There you go. I mean, HDFC, I mean, again, plateaued, not a major spike coming in there. Axis Bank, no. I mean, can we have Infosys? Can we have Reliance Industries? No, I mean, not any of these major ones.
Grasim has moved in the past. Pull up Grasim maybe.
See, Reliance also did see that spike, but has plateaued right now in terms of closing. So it's very interesting to see is in terms of the discoverable values that are coming in for all of these players. I mean, actually, I feel like going across to Sharath also, who's standing by to do some other link, but to just get his perspective in terms of what's really happening right now in terms of individual names, in terms of Sensex, in terms of Nifty 50 as well. Sharath, right now, I mean, we were just talking about levels. 24,624 is what you're looking at in terms of Nifty 50 as well. Any words of wisdom on this, I would say?
Well, wisdom requires practice, and it's just the third day for us. But if you're a student of mathematics, it's been the last 3 sessions, all the start, we have seen the spikes going up. Of course, it's one-way directional if you talk about the predictions, but a Nifty Bank has seen a slighter move as compared to Nifty, and this is the movement happening. Sensex, remember the turnovers are on the lower side, and that's what I'm keeping on repeating, but the action is definitely there on the Nifty. Looking at the differences, there is a premium of around 90, and remember the rates are settling in, it's not fixed right now as compared to spot. And also looking at how Nifty is panning out, let's just talk about that also, the difference between the futures and the cash, and this is it. The premium levels are coming down. Last 2 to 3 sessions it was around that, of course there was 200 point, there was 60, and now it's 20. So slowly participation is happening in the definition of cash. What was supposed to happen, that's slowly happening. But this is very volatile, you know, 1 at 25,000. This is a very surprising data which I got. Generally, the congestion for both call and put were in this 24,600 level. So we need to understand what has happened here. Is this an anomaly here or not? And that's what's happening here. So let's see how the rates are settling down. But let's look at the open interest gainers and losers also. Largely, you know, short build up coming in for both of the exchanges, and they are moving as well. Some settlement, and remember that plus minus 3% is there, so there can be more action here as well. Open interest losers, let's see what's happening there. And largely we see LIC, the good short covering is happening here. Some action might come in here, as well as SBI Life. That's where you're seeing the life insurance stocks also a good short covering is coming in. But either sides, it's that 100 rupees at max order goes 103, at lowest it goes 97. That's the range.
Okay, all right. So certainly interesting. Sharad, thank you for that. And I like that line, wisdom requires practice. We haven't had enough practice clearly yet. Another 6 minutes to go. Shivangi, what do you make of this though? And we're now seeing, so if we were looking at the premium that the futures were trading at 315 or thereabouts, so soon after the reference rate was set, for the benchmark Nifty 15, and that gap was about 65 points. That gap is now narrowed to about 25 odd points. So what have you made of the last 15 minutes or so?
Absolutely, Alex. You know, we've seen that on Monday the gap was much higher than 100 points, and Tuesday it did lessen up, and we're seeing today there is a significant decrease in the gap. So definitely this is kind of coming in line, or we may say that you know, participation is kind of getting into action. But overall, we're looking at the gap to become normal, you know, as it was before, and to move in line with the market trend and the market participation. But this will, of course, ensure that there is no gap up or gap downs the next session, which was happening in the last 2 days. So, yeah.
Okay, so that's with regards to where, you know, what's happening in terms of markets right now. If you have to look at the FNO August futures, we are looking at a premium of around 23 points right now. But Sensex currently 78,581 is what you're tracking. Bank Nifty before the special window was 57,630 as you're seeing right now, and current levels is 57,740 as was Alex mentioning. Ms. Chokalingam, let me come to you apart. Okay, we don't have Ms. Chokalingam now. I think from a technical perspective as well, Shivangi, now that the window will be open for 5 minutes, any calls that you have that viewers can actually look at, because investors can buy, sell FNO stocks in the cash market between 330 to 340. Any calls or recommendations?
So here we've spoken about the recommendations. We are kind of very bullish on the metal pack of lately, and apart from this, auto names are looking quite positive. One stock which has come up to my radar is Shriram Finance. This one could be kept on radar for a good move. A good amount of open interest addition here with significant rollovers as well, and it has surpassed its previous hurdle zones of 1100 zones. So this one's looking quite positive, and we could look at the next level of around about 1200 levels. Yes, 1200 is what we're looking at, with the support of 1100 zones.
And okay, so these would be the shorter term trades that you would suggest, or how would you look at it? So therefore, can you still undertake a BTST at this juncture, and if so, what?
So for BTST, I think you know, JSW Steel, which I mentioned earlier, this would be my pick, because we've seen that buying interest can be seen till the last take of the session. And overall, this stock has come out of the consolidation on the weekly band as well, with good amount of volume adding when the price is rising. So this would be my BTST with the next targets around about 1400 levels and 1300 as a stop loss.
Okay, so pretty much this is where things are settling, right? Pull up the benchmark, 24,625 or thereabouts, and we were pointing this out to you just a short while back. 24,570 is where the reference rate had settled, and so in fact that gap is narrowing even further as we speak right now. The gap between futures and the spot, the futures are currently only at a premium of about 11 points or thereabouts. The Bank Nifty reference rate at 315 was 57,629, so close to 630, and it closed at 57,739 or 740 or thereabouts, and currently the premium between futures, August futures, and the spot close is about 62 points or thereabouts. So remember that this is the final countdown. In fact, the last couple of minutes for the F&O trade to conclude, but this is pretty much where the Nifty 50 has closed and the markets have closed for the day. I think, Shivangi, I think we can call it at this moment. Thanks so much for taking the time, and pleasure speaking with you as always. So it's been an eventful day. It's been an eventful close as well. Just about a minute or so to close. But just to sum things up, you've seen a fair bit of consolidation. At the broader end of the spectrum, you've seen resilience in the small cap index in particular, which has ended with gains of about 0.7%. And you've seen the market breadth actually close over the course of the session. So pull up the advanced decline ratio and you will see what I'm talking about. It's actually closed over the course of this session where a little bit of gap from the mid-cap index has been given up, right? Where the mid-cap index has ended with gains of just about 0.1% or so. And as a result of which you're seeing the closing of the gap between advances and declines. Among the frontline counters, there were a few that stood out in terms of newsmakers. Marico was one of them in the consumption space, but you had the IT names that gave a little bit of ground up today. The likes of Tata Consultancy Services losing about 2% or thereabouts, the likes of HCL Tech losing about 1.5% or thereabouts. Apollo Hospital also one of the stocks that lost ground, down about 1.5% or thereabouts. Among the gainers, you had the high beta counter, Shriram Finance, that ended with gains of about 3.2%. Grasim was one of the top gainers, about 3% higher as well, and that was certainly something to track. But I think that brings us to the end of this edition of India Market Close from the team that put the show together. Thank you so much for staying tuned, and up next is a lot more that you should pay attention to on NDTV Profit, so do stay tuned.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by Coin Switch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin trades above the $64,000 mark on regulatory optimism. Russia legalizes regulated crypto trading. BlackRock tokenizes $311 billion worth of European funds on Ethereum. US-UK reaffirms support for stablecoins and tokenization. Well, those were the top crypto headlines at this hour. Let's talk about strategies now. Let's get you some expert insights that help you shape these strategies. Now, every market correction creates winners and laggards. So, what helps some crypto bounces back faster than the rest? Here's Pratyush Shah, Head of Investments at CoinSwitch Ventures, with the answer.
Thanks, Sharad. Markets don't reward every asset equally. After a correction, capital becomes far more selective about where it flows first. And that's what creates the difference between early leaders and laggards. Fresh capital doesn't enter the entire market at once, whether it's institutional investors, large funds, or retail investors deploying new money. Capital usually flows first towards crypto where conviction is the strongest. That often means assets with deep liquidity, established track records, and the ability to absorb larger investments without significant price disruption. Beyond that, investors look for evidence that the underlying ecosystem continues to strengthen. They ask whether the network is attracting more users, whether developers are continuing to build, whether on-chain activity is improving, and whether adoption is expanding. These indicators help investors assess whether the asset is becoming fundamentally stronger, irrespective of recent price movements. Another important concept is capital rotation. Money doesn't simply enter crypto as a single asset class. It moves between different segments of the market. In the early stages of a recovery, capital often concentrates in larger assets like Bitcoin. As participation broadens, it gradually rotates into Ethereum and then into other crypto, where investors see stronger growth potential. Ultimately, every market cycle produces its own leaders. The pace of recovery is determined by where investors see the strongest combination of liquidity, adoption, utility, and future growth potential, rather than by how far an asset has fallen.
And Pratyush, finally, if an investment continues to underperform across multiple market cycles, when should an investor reassess the holding instead of simply waiting for a recovery?
I think the most important question to ask is, if I didn't already own this asset today, would I still choose to invest in it? That helps separate objective investing from emotional decision making. Every asset in a portfolio is competing for the same capital. If other crypto continues to strengthen while one holding has consistently failed to keep pace across multiple market cycles, it's worth asking whether your capital is still being allocated in the most efficient way. That doesn't automatically mean you should sell. It simply means taking a fresh look at whether the original investment thesis still holds true and whether the asset continues to deserve a place in your portfolio. It's also important to remember that crypto is generally an alpha allocation within a wider diversified portfolio rather than the portfolio itself. For many investors, an allocation of around 2 to 4% of their overall portfolio can be a prudent starting point, depending on their financial goals and risk appetite. Reviewing your portfolio periodically and ensuring your allocation remains aligned with these goals is a much healthier approach than holding to an asset simply because you're waiting for it to recover.
Thanks a lot, Pratyush, for that. And now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus
You're watching Market Express with me, Shreyanti Singh, and this is the show that gets you a snapshot in terms of everything that has happened in today's trading session and lot of other news and updates as well. But first things first, let's talk about the markets. First up, benchmark indices in fact ended on a mixed note as profit booking really kept the Nifty near the 24,600 levels. They're about just a tad bit above that level as well, while the Sensex also managed to close with gains of over 150 odd points as well. So that's something that you're looking at when you talk about the markets. Let's also talk sectors right now in terms of what the sectoral picture really looked like. Selling pressure dominated the broader market, with most sectoral indices also ending lower. Financials and pharma really led the decline, while realty and auto really stood out as the day's top gainers. Some bit of resilience really coming through when you talk about those two sectors. And in an otherwise tepid market, that's something that you're looking at in terms of the sectoral picture as well. But let's also start talking about some of the counters that were really buzzing away in trade. Top of that list is actually something like a Castrol India that saw strong buying coming in, 2.5% uptick really coming in after reporting a robust June quarter number as well. The lubricant makers' profit really jumped more than 42% from a year ago, helped by healthy demand across its consumer, industrial and institutional businesses as well. Revenue also saw a growth of about 25%, and operating profit, that's the one that's improved sharply as well despite supply chain disruptions and commodity inflation. Let's also talk about something like a PTC India that was doing quite well after reporting a weak set of June quarter numbers as well. Despite that number as well, the power trading company's consolidated net profit really fell nearly 50% from a year ago, and this is even as revenue really rose about 19%. Margins also came under pressure, reflecting a challenging operating environment despite higher sales as well. The sharp drop in profitability is also likely to remain in focus as investors assess whether the earnings can really recover in the coming quarters. But of course, the top story when you talk about this particular counter was that dividend also. 23 rupee dividend that they had, 13% yield that you're looking at when you talk about the dividend, and that's something that had the stock buzzing away in trade. Let's also move on and talk about HFCL that is stepping up its investment to meet the growing demand for fiber infrastructure. The company has approved a capital expenditure of somewhere close to 400 crore rupees to expand its optical fiber and optical fiber cable manufacturing capacity. The move is coming in as demand really rose from the AI infrastructure, or even when you talk about hyperscale data centers and the continued rollout of 5G networks. So that was one stock that was buzzing away in trade, 4.5% uptick coming in right there. Let's also move on and talk about something like a Deepak Nitrite. And this one's making a major investment to strengthen its chemicals portfolio, about a 1% uptick thereabout coming in. The company has approved a 2,500 crore rupee project to set up a manufacturing plant with a capacity of up to 240,000 tons a year. And the project is a key step when you talk about the company's strategy to really build a fully integrated value chain from, end-to-end chemicals as well. Let's also move on and talk about something like an IEX that reported a steady rise in electricity trading activity for the month of July. Total traded electricity volume also grew nearly 8% from a year ago to 13.5 billion units. So that's something that you're looking at. The stock wasn't doing all that much, at least towards the end of the session, but when you talk about the demand, that really remained healthy, and that's across market segments that you're looking at. The real-time market also posts double-digit growth as well, while prices in the day-ahead market, they also climbed nearly 20% on a year-on-year basis to just under 5 rupees per unit. Let's move on and talk about something like Berger Paints that delivered a strong start to the financial year as well, reporting healthy growth in both revenue and profit for the June quarter. Consolidated net profit, that's the one that's risen about 20% from a year ago, supported by robust demand and higher sales. Revenues, the one that's climbed also about 25%, crossing the 3,500 crore rupee mark for the first time in a June quarter. Let's move on and talk about Kirloskar Ferrous Industries that has reported a mixed set of numbers when you talk about this particular quarter. Modest revenue growth is what you're looking at, sharp fall in profit. Also something that dragged on the stock as well, consolidated net profit that has declined more than 65% from a year ago, as the base quarter had benefited from a tax gain that did not recur this year. Now, when you talk about this particular quarter, it's also including a one-time loss weighing on the bottom line as well. So that's something that you're looking at when it comes to this company. Let's move on and talk about RD Industries, a Tirupati-based lead recycling company that has raised 127 crore rupees from anchor investors. What's interesting is that ace investor Ashish Katolia has also picked up 19.5% thereabout of the total anchor allocation, putting in 25 crore rupees according to the anchor book as well. And the IPO is open and will close on August 7th, with the price band also fixed at 50 to 53 rupees per share. The issue comprises a fresh issuance of 320 crore rupees and an offer for sale worth 106 crore rupees from promoters Sandeep Agarwal and Nikunj Agarwal. And in terms of the commentary also coming in from Nikunj Agarwal, he's talked about how the margins are going to be seeing a swift expansion also going forward. And that's something that the company is really doubling down to. So you do have the total issue size though that's risen to about 426 crore rupees when you talk about just this IPO as well. Let's also move on and talk about the Reserve Bank of India that has kept the repo rate unchanged at 5.25%, extending its pause on interest rates. The Monetary Policy Committee has said that the decision balances the need to support economic growth while also keeping inflation under control, with inflation showing signs of easing but risks from food prices and global uncertainties still present. The RBI has chosen to really stay cautious. And speaking of caution, the RBI in fact has also lowered its inflation forecast for the current financial year by 10 basis points thereabout, even as Governor really flagged risks coming in from food and fuel prices, rainfall patterns, or for that matter volatile global oil prices as well, that made it to his list of factors to really watch out for. The Reserve Bank of India cut its consumer price inflation forecast for the financial year ending March 2027 to 5% from 5.1% projected in the month of June. Let's also move on and talk about India's services sector growth that slowed in the month of July, with the HSBC India Services PMI really falling to its lowest level in more than 4 years as new business growth weakened and business confidence also dampened just a tad bit. The services PMI dropped to 53.3 in July from 57.4 in June, marking its lowest reading since February 2022, and the composite PMI, which tracks activity across services and manufacturing, also declined to 54.3 from 57.1, its weakest level since March 2022. And let's talk about Anthropic and something that affects all of us. A UK government AI safety test has in fact revealed some shocking findings, troubling new development when it comes to AI. During controlled evaluation, an Anthropic AI model really created fake human profiles and attempted to deceive people to gain access to GitHub, mimicking the behavior of a human cyber attacker. The UK's AI Security Institute has said that the level of autonomy and deception displayed was unprecedented in its test. In fact, while both Anthropic and OpenAI have said that the evaluations were conducted with safety guardrails reduced, the findings are likely to raise fresh questions about AI security and oversight. Let's move on and talk about South Korean police that have raided the headquarters of Starbucks Korea as part of an investigation into a controversial marketing campaign. The company's Tank Day promotion, launched on the anniversary of the 1980 uprising as well, sparked widespread outrage after many saw it as a reference to the military crackdown on pro-democracy protesters. Starbucks withdrew the campaign, apologized and said that the incident was unintentional. However, civic groups filed a criminal complaint, while the controversy has also triggered a boycott and hurt the company's sales in South Korea. On to some national news then. The flood situation in Assam unfortunately remains critical, with fresh overnight rainfall in fact raising risk of new inundation in low-lying areas. The death toll in fact has now climbed to 89, while more than 1.2 lakh people continue to be affected, and that's across 5 districts. Authorities remain on high alert as rainfall threatens to slow relief and recovery efforts. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myths from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds,
Markets end flat, but last minute cash boost lifted Nifty by 55 points. Broader markets outshone benchmarks. Shriram Finance was the top gainer while TCS dragged. The RBI has kept the repo rate unchanged at 5.25% while retaining its neutral policy stance. The MPC's decision was unanimous, with key liquidity rates also left unchanged. The RBI has raised its FY27 GDP growth forecast to 6.7%, citing a resilient domestic economy. The central bank also upgraded its first half growth estimates. RBI governor also confirmed that they are targeting to roll out polymer currency notes by 2028. SEBI stands firm on cash, rules out immediate changes. The regulator remains confident in the framework, saying wider participation is now the key focus. SEBI reviews implementation on cash, holds meeting with qualified stock brokers. Meta under fire over PM Modi's video row. Top global Meta officials meet MeitY secretary. Parliamentary panel gives 3-day ultimatum to Mark Zuckerberg to apologize or face action. Bombay High Court allows Nitin Gadkari to sue social media giants over E20 AI deepfakes. Court orders the immediate removal of abusive and obscene AI-generated posts targeting Union Minister Nitin Gadkari over E20. Oil prices extended their losses for a third straight session as hopes grew for a deal to reopen the Strait of Hormuz. Positive signals from the US, Iran and Qatar eased the supply concerns, adding pressure. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets are really fair today. So viewers, benchmarks indices have ended on a mixed note as profit booking really kept the Nifty near 24,600 mark, while the Sensex has managed to close with gains of over 70 points. Moreover, Nifty is seeing a spike of 55 points in last minute due to cash. Let's go over to my colleague Parth for a complete market roundup.
So Nifty has seen a spike of 55 points in the last minute due to the closing auction session that has been introduced by SEBI. While on the other side, Sensex saw a spike of 0.1%, while Bank Nifty also saw a spike of 0.2% in the last minute. If we talk about the overall markets, the Nifty ended on a flat note today, with Shriram Finance being the top gaining stock of the index, gaining over 3% for the day, and TCS was the top loser, seeing a downtick of over 2%. On the broader market side, they have outperformed the benchmark, with Nifty Midcap 150 ending in green, seeing an uptick of over 0.2%. This was mainly led by New India Assurance, that was the top performer in the Nifty Midcap 150, seeing an uptick of almost 7% today. On the other side, Nifty Small Cap 250 pulled up an even better outperformance, ending in green, seeing an uptick of over 0.7%, mainly led by Hind Copper and Ola Electric, which were the top gainers of the index. Hind Copper gaining almost 8.5%, while Ola Electric also gaining over 7.5% today. On the sectoral side, Nifty Metal was the top gaining sector, ending in green for the 6th consecutive day and gaining over 1.7% as well. Hind Copper was the top gaining stock of the Nifty Metal Index, seeing an uptick of almost 8.5%. On the losing side, we saw Nifty Bank that was down 0.3%, which was its second consecutive red closing in a row. Also, a lot of many indices have closed in red for the second day in a row. Those include Nifty FMCG, Nifty Defence, Nifty IT, Nifty Pharma, Nifty Oil and Gas, and Nifty Financial Services as well.
Right. Thank you so much, Parth, for that. In fact, now shifting focus to the RBI's Monetary Policy Committee, which has kept the policy repo rate unchanged at 5.25%, extending its pause for the 4th consecutive policy meeting. Now, the decision reflects the central bank's preference to stay cautious amid an uncertain global environment. Now, RBI Governor Sanjay Malhotra has highlighted persistent risk from elevated crude oil prices and also geopolitical tensions, indicating that the MPC remains focused on balancing growth with inflation while also closely tracking global developments. Let's listen in to what the governor had to say.
After a detailed assessment of the evolving macroeconomic and financial developments, as well as the outlook, the MPC decided unanimously to keep the policy repo rate unchanged at 5.25%. Consequently, the SDF rate shall remain unchanged at 5% and the MSF rate and the bank rate at 5.5%.
In fact, now let's go across to my colleague Piyush to take us through the key takeaways from the meet.
We are here with the key takeaways from today's Monetary Policy Committee meeting and press conference as well. First, the RBI has continued to maintain its repo rate at 5.25% and maintain the neutral stance. The governor said RBI will have a very data-dependent approach when it comes to repo, and said that they are neither dovish nor hawkish. They are neutral at this stand and will take the data as it comes and make future decisions. Further, the governor also mentioned how liquidity will continue being in surplus mode. In fact, it has been so, liquidity has been in surplus of around over 1 lakh crore rupees since the last Monetary Policy Committee meeting was there, and it will continue being in surplus mode. Third, the RBI has lowered its forecast on inflation. It has tweaked it by 10 basis points and now says that FY27 CPI would be at around 5%, whereas GDP growth forecast has been slightly revised upwards by 10 basis points to 6.6%. Now, in terms of some of the recent policy measures, the governor mentioned how good flows have come in from the FCNRB deposit window, and they do not want to prematurely close it, even though the flows are very high, and the scheme will continue till September, the FCNRB deposit one. The governor also on the MDR, UPI payment MDR, governor said that somebody has to bear the cost, and in a way people are already somehow the costs are already getting passed on to the customer. The governor mentioned how this is a very premature stage to comment on which sort of transactions will be MDR will be levied on, because the government is still making amendments to the payment bill. Now finally, we have also heard from the governor on the upper layer NBFCs. The governor has said the list will come out soon, and broadly it will remain the same except for a new additions which will be of government-backed NBFCs.
In fact, one of the key issues that also came up during the RBI's post-policy press conference, viewers, was the debate around charges on UPI transactions. Our colleague Piyush also spoke to RBI Governor Sanjay Malhotra regarding this. Let's listen into that snippet of that conversation.
Sir, yesterday the government has made some amendments to the Payments Act. Now there is chatter that there could be, government may levy MDR on certain transaction, whether above 2,000 rupees, or it could use that on large retailers. You have earlier mentioned how somebody has to bear a cost for this public infrastructure, utility. I want to understand from RBI, will we look at transaction size? Will we target certain retailers? What is the strategy going ahead? If you can share some views on this front, sir. And last time, sir, you had said that the upper layer list of NBFCs will come out very soon. So how soon will it come, sir?
So, your first question I will answer is that it is very premature right now. The government is still carrying out the amendment. The costs have to be paid by someone. I mean, it's a public, we all want, that this public infrastructure should continue to strengthen, become more efficient, etc. We continue to do that. That's our primary focus as of now. Let's wait and watch for further developments on this. I don't have anything more to add.
User get charged, sir, because if you're levying a fee on a merchant, eventually it passes on to customer. So the goal is to have 800 million transactions a day or so. So imposing a fee.
Let's wait. It's premature right now.
In fact, at the RBI's post-monetary policy press conference, Governor Sanjay Malhotra has said that the RBI is targeting the rollout of polymer currency notes by the start of FY28. He said that the notes will be tested under different conditions and are also expected to offer greater durability and even a longer lifespan. Let's listen in to that remark.
This polymer thing, basically two purposes. One is that it enhances the durability in the life, especially for this is relevant especially for your lower denomination notes where the velocity and therefore velocity is higher, and so therefore the lifespan is lower. These notes have been in circulation for more than 30 years in various countries. And one finds that the life is much more, 3 to 4 times the life of the paper substrate. We are targeting that they are in circulation, if everything goes as per plan, in the beginning of the next financial year.
And viewers, amid concerns over volatility, SEBI sources indicate the regulator remains confident about the CAS framework, that is CAS framework, and even sees market behavior stabilizing as participation broadens. So my colleague Nimit is now joining us with more details on this development.
The sources that we speak to, especially the regulatory sources, they say that actually the problem here is not about the volatility, it's about the participation. And once the pool becomes deeper and we see more meaningful investor participation here in this SAS period, then there's going to be no volatility, and this volatility will reduce over time. In fact, they say that there are no plans to modify the current SAS framework that's been set out, and the sources within the regulatory framework say that the design and the technical architecture here is robust and it matches international standards as well. The simple message here is that over time, as we see more participation and widening participation, the volatility is naturally expected to just settle down.
In fact, viewers, NDTV Profit has also learned that SEBI has completed the first round of consultations with qualified stockbrokers as part of its review of the closing auction session framework. Let's bring Nimit back to break this down for us.
Yeah, so there are two key things that SEBI has told the qualified stockbrokers in this first round of review that they're doing with the brokers. The two key issues they've raised is first on awareness, saying that maybe brokers have not done enough on awareness and need to do more to build that awareness. And secondly, they've reiterated and made it clear that retail participation is key here in the CAS program to make it successful and to make the volatility stabilize. Now, what the QSBs have said here is that they sought 2 to 3 weeks to complete front-end integration on their apps to improve retail participation. Now, we also understand that this meeting is part of a longer review that SEBI is doing now and is going to be meeting with different stakeholders. The key message that it's going to be making to all stakeholders is that we need to ensure larger retail participation, and that will directly reduce the volatility that it's causing right now.
We are switching gears now. LIC remains in focus as the government's proposed offer for sale is expected to attract strong passive inflows. According to Motilal Oswal, the OFS could bring in cumulative flows of nearly $800 million, including inflows from the Nifty indices. Now, looking ahead, LIC is also seen as a potential candidate for inclusion in the Nifty Next 50 and Nifty 100 during the March 2027 review. Now, if the green shoe option is exercised, the brokerage believes that LIC could really qualify for MSCI inclusion, potentially attracting another $450 to $500 million in flows. Separately, FTSE inclusion is also seen as likely after the deal with estimated inflows of around $200 million. And switching gears now, viewers, at HDFC Bank's 32nd annual general meeting, part-time chairman Rajiv Kumar has addressed the shareholders as the bank really navigates a leadership transition. Now, during his address, he said that there are no governance-related concerns at the systemic level. Let's listen into his remarks.
Let me reiterate on my behalf and on behalf of the board. The bank is fundamentally strong with a pristine balance sheet. There are no governance-related concerns at the systemic level. The board is committed to ensure that HDFC Bank operates from the pedestal of highest levels of corporate governance and remain anchored in integrity, transparency, accountability, and prudent stewardship.
Viewers, Meta team was summoned today by government over PM Modi's restricted video. Now, sources tell NDTV Profit that Meta's officials met led by Chief Global Affairs Officer Joel Kaplan. He met MeitY Secretary for 45 minutes, and Meta has shared reasons for temporary takedown of the Prime Minister's video. So, Meta's team to now meet IT Minister Ashwini Vaishnaw. An earlier parliamentary panel had also sought unconditional apology from Mark Zuckerberg and given a 3-day deadline. My colleague Rishabh Bhatnagar is sharing the details here.
Right, the row between Meta and the Indian government over the deletion of Prime Minister Modi's video across platforms has moved to another step. What we've seen is that Meta officials, including the likes of the global head of regulatory affairs, Joel Kaplan, have also arrived here in India. They met with the MeitY Secretary S. Krishnan today, and they explained the reasons as to how it happened temporarily, how the deletion took place, and how it will not happen in the future. What we're picking up is that the meeting was roughly about 45 minutes long, and they're also slated to meet the IT Minister, who's Ashwini Vaishnaw. What we've seen is that the parliamentary panel has also escalated this issue. You have the demand for an unconditional apology coming in from Meta founder Mark Zuckerberg is what the Indian government wants. So what they're saying is that if this has not happened and if safeguards are not put in place, you'll also have the fact that the IT Act safe harbor may be withdrawn for large publishers like Meta. What we've seen is that the committee has flagged this violation as a very serious one, and they are willing to escalate it further. What they've also said is that the proliferation of child sexual abuse material, that is another very serious issue that this committee has brought up, and that needs to be dealt with by Meta very, very seriously. Safe harbor can also be withdrawn for these CSAM violations. There have also been talks about some sort of action that is required against Google India with regards to the cyber fraud case in Hyderabad. That's also an issue that the parliamentary panel on IT and electronics has taken up. So this entire row is escalating. You have the team which is in town from Meta, the global team in town for the next 2 days, 5th and 6th August, and you'll have more and more updates coming on that.
Absolutely, Rishabh. In fact, BJP MP and Parliamentary Affairs Committee's Chairman Nishikant Dubey has raised Prime Minister Modi's video deletion issue in the Parliament as well. Let's listen in to his remarks.
देखिए, सबसे बड़ी बात आज दूसरी बात है जो आपने ध्यान नहीं दिया कि हमारी कमेटी ने जो परसों बैठक ली थी, उस बैठक में हमारी कमेटी ने पत्र लिखा है मिनिस्ट्री ऑफ आईटी को और मिनिस्ट्री ऑफ होम अफेयर्स को कि प्रधानमंत्री जी का जो वीडियो उन्होंने डिलीट किया वो इंटरमीडियरी का काम नहीं है, वो पब्लिशर का काम है। और इस नाते जकरबर्ग को जो है 3 दिन के अंदर माफ़ी मांगनी होगी। यदि माफ़ी नहीं मांगेंगे तो उनके ऊपर जो जितने भी सोशल मीडिया प्लेटफॉर्म हैं उनको जो सेफ हार्बर दिया हुआ है हमने, जिसका कि वो गलत फ़ायदा उठाते हैं, सेफ हार्बर ख़त्म कर देंगे।
Here's the controversy around the E20 ethanol fuel policy has taken a fresh turn now. The Bombay High Court has ordered the immediate takedown of AI-generated and deepfake videos linking Union Minister Nitin Gadkari to the policy, calling the content prima facie defamatory. Meanwhile, auto industry body SIAM has also issued a clarification saying that media reports citing selective excerpts of its communication on fuel quality were misleading. Now, SIAM has reiterated that E20 fuel continues to meet industry requirements and has also stressed that there is no cause for concern here. And switching gears now, viewers, DLF is expanding its retail business with several new mall projects in the pipeline, including its first project in Goa and the upcoming Mall of India in Gurgaon. So NDTV Profit's Rishabh spoke to Pushpa Bector, who's the Group Executive Director and even Business Head, DLF Retail, about the company's expansion strategy and also its upcoming projects. Let's listen in.
Talk to us about the sort of retail portfolio, retail pipeline that now DLF has, right? We're very well aware about the residential pipeline that DLF has, but there's a lot of sort of mystery around what DLF Retail will come out with next. Talk to us about what you have in pipeline when it comes to formats, and also geographies.
Sure. So this is an interesting year for us and a busy year for DLF malls. 2 plazas opening this year, and Goa. This financial year we'll see 3 projects, and Goa is going to be a 7 lakh square feet project, which is a mall. I'd like to say it's almost like the Mall of India for Goa market. We premium positioning. We've called it DLF Promenade Goa, and the location is Panjim. So both North and South Goa can really access it very well. Those are the 2 geographies that we are playing with now. As you know, Mall of India Gurgaon is under construction, and that is our pièce de résistance. So more on that later.
Okay, lovely. So we have the Mall of India Gurgaon also coming up. Can we expect that to be more on the lines of what you already have in Noida? Of course, that is also a Mall of India that we're seeing. Talk to us about maybe the timeline that you have on the Mall of India Gurgaon as well.
So I think Mall of India as a format, I'd like to say that that's a format that we see has scale because it's destinational in nature. It's typically 2 million plus square feet, and that has scale, and that can really, transfer geographies.
Viewers, let's have a look at some national stories now. The Vijay-led Tamil Nadu government's maiden budget has placed a strong focus on welfare and election promises. Now, the government has earmarked over rupees 1,300 crores for its gold assistance schemes, 2,000 crore rupees for laptops for college students, and also announced the closure of 717 liquor outlets. My colleague Vijay Gopal joins us with all the key highlights.
So it is very important day for Tamil Nadu government and also for newly elected TVK government under Chief Minister C. Joseph Vijay, as they just tabled the very first budget for TVK government, and the budget was like tabled without any chaos or ruckus inside the Legislative Assembly. Opposition parties have criticized the budget, calling it as a zero budget. Parties like BJP, DMK and even ADMK had criticized the budget. But what exactly the budget is about? In the budget, they have mentioned about the Victory Vision document. Remember, Victory Tamilagam Vision document was the term coined by the TVK government on their first cabinet meeting. So, in a way, to reflect their vision for next 5 years, there were many important schemes are part of this budget. Very importantly, the budget has given importance to the education and AI sectors and also infrastructure development, especially to the Chennai city. The budget has pointed out there is going to be an implementation of master plan, third master plan for Chennai city, and also free laptops to the students and branded bicycles to the students, targeting Gen Z voters. So these are all the very important announcement from the budget. But on the other hand, these are all very existing schemes only. That's what opposition party is also claiming. They have changed the name of the schemes. Very interestingly, one or two more schemes or also new schemes also announced. From that, very important was maternity uncle scheme, Thai Maman Thanga Modiram Thitam, which is like all newborn babies in the government hospitals will be awarded with a 1 gram gold ring. So this is very interesting scheme, and despite the criticism on the scheme, it is a visionary scheme for Tamilnaga Vetri Kalagam party as a party, and also for Chief Minister C. Joseph Vijay, as these are all the part of their poll promises also. But whereas the other parties have criticized the budget, but in the budget overall they had pointed out that their overall target will be $1.5 trillion economy to propel to Tamil Nadu before 2036. For NDTV, Vijay Gopal Muralidharan with camera person Venkateshwara Prasad.
And viewers, before we wrap up the show, memory chip prices have really surged sharply this year, putting fresh cost pressure on smartphone makers. Now, in an exclusive conversation, Lava International's managing director Sunil Raina has said that the industry is witnessing an unprecedented spike in memory prices, also describing it as a black swan event. Let's listen in to a snippet, and also for the whole conversation, don't forget to tune in at 6:30 this evening.
A couple of trends that are also around the electronics components industry is, of course, the memory price have skyrocketed across the world. It's a global phenomena. What are you seeing in terms of an impact at Lava? Of course, you will get affected by it. There will be some sort of cost passed on to the consumers as well. Give us an idea of how you're dealing with it. And also, how does in-house manufacturing of it, will that also help sort of alleviate the pain that will come through these global price hikes?
So, you're right, component prices per se, and more so in case of memory, have really skyrocketed. We've not seen this kind of a scenario before ever at all. There's something completely unprecedented.
Yeah.
So, it took a time to really adjust ourselves to the situation, and I'm sure it's due for every other company, so to say.
Absolutely.
It's like, I would say it's more black swan event than even the COVID was. But COVID, at least, you knew that things have to stop for some time and then tend to start it again.
Mm-hmm.
But here it just keeps going up and up and up. So, see, one of the things that we are doing, because the segment that we operate in, right, which is the budget segment, is mostly where we are operating in. If you see, there are a lot of new buyers who come into this category, right? So what is typically happening is that if you go higher, the markets are mostly replacement markets, right? Here it is I want a phone for the first time or a second time or whatever. So it's like people use a gateway. It's a must have device, right? Something who attains a certain age and is doing some work, they need a device.
Okay.
So therefore, what we are seeing is, while the market has shrunk, overall the market has shrunk, but for us, it has been pretty good. In fact, we've been growing much higher than what we were growing earlier.
Okay.
Because we already were growing at about 50% CAGR for the last 4-5 years.
Mm-hmm.
And we had that momentum of the brand.
and because of this situation also, it has actually gone only better for us.
Viewers, we are getting to know that first round of talks between government and Meta officials have concluded. According to Meti sources, government has told social media platforms to comply with the Indian laws, and officials are saying that move is not aimed at curbing the free speech. Government has also flagged concerns over arbitrary takedowns, selective enforcement, and government has also raised concerns over abusive content on the platforms. And with that, it's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों। कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just
presented by Canara Bank. Together we can.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies and also at times very chill companies as well. Why I'm talking about chill company? It's very interesting and maybe this will be the first time you can guess the company in the first hint in KYC. And of course, there is no guessing. It's India's largest beer manufacturing company. I know the good times are there, but there are some more hints to it as well. It's the part of Heineken company right now. Also, 2 more hints to you, but largely I'm sure you must have guessed it by now. Strong Q1 from their premium segment. And also I'd like to point out the stock has reacted positively from the May lows as well. It's up 12%. Already I'm sure you know the company's name, but nevertheless it's the good times. So the company in focus is United Breweries. Interesting, right? We have got in a decent size, you could say mid cap, large cap company in KYC, and at times change is necessary. But why are we getting this company right now? What's the main focus like? And yes, earning season is going on, but the company has come up with something really good, especially on the volume growth segment despite inventory reduction. How did that happen? That's the big question. Also, other key questions we'll be asking the management will be the improvement in the free cash flows, how they have been able to do that. Remember, larger companies have better balance sheets and cash flow strategies, and that's what's playing out. Margin recovery guidance, is there a stress right now on inflation and supply chain? That's the big question to be asked. And apart from this, the Karnataka policy and the UK FTA impact, is there any more positive leg of growth for them, or is beer outside this FTA impact? Apart from this, why FY26 borrowings has spiked, especially in the short-term segment? We'll try to understand the entire methodology, especially looking at the balance sheet and of course the capacity addition plans. Is the company planning something big in Karnataka? We'll try to get that answer for you. And the premiumization trend, this is something which is going on for the last 4 to 5 years and expected to go much more. So industry specific questions coming in as well. But let's understand what the company does. I'm sure a lot of consumers know it, a lot of stakeholders know it, but let's do a revision. What does the company do? It's India's largest beer manufacturer. Also, let's point out what are the other key numbers. It's a part of the Heineken company right now. This is the logo. I'm sure a lot of you follow Champions League, and this is the logo which we generally see. Portfolio now includes, of course, the Kingfisher Ultra, Kingfisher Ultra Max, and Amstel Grand as well. Also, they are into the non-alcoholic segment also. That's where Gen Z is also focusing on. And this is called Heineken 0.00. Interesting, because the alcohol content is 0, but maybe the taste would be on the alcoholic side. 18 owned breweries they have, 28 products in the portfolio. There is of course a mix of owned as well as in-house manufacturing. The Q1 revenue was strong, especially by the volumes, price hikes was there, and change in geographic mix was also recorded. But let's understand the war-related cost pressures were partly mitigated, driving a EBITDA beat as well. Understanding other key factors on Q1, the overall sell-in volume was at 9% and sell-out volume growth stood at 13%. The premium volumes turned margin accretive for the first time. That's where a 7% year-on-year basis growth was also recorded. There are key strategic updates also for the revision. Recently, they commissioned their canning line at Telangana. Second important reason and the strategic update coming in for United Breweries is the progress on the capital investments, especially in Maharashtra and Uttar Pradesh. That's where the expansion is happening. Strategic manufacturing tie-up with ABB in Punjab post the closure of Ludhiana Brewery. So a little bit of reorganization is also there at play for United Breweries. But India's growth drivers, the first is the evolving consumption culture. People want more options going ahead, and things are of course moving towards the soft beer category as well. Rising affluence, not just tier 1, it's tier 2, tier 3, tier 4, all across the story is playing out, and the shift towards premium choices as well. So a lot of trends are moving, be it Gen Z, millennials, the way the consumption is happening, it's changing in India, and of course the digital and channel modernization as well. That's also very much important. So these are the growth drivers for this industry. But let's try to understand other key factors, especially what may work for the company. The volume growth remains strong. Second important reason I would like to point out is the inventory levels. That is reducing, but despite that, the company is doing well. So the working capital churn is improving as well. That's of course, you could say one of the key reasons. And premiumization, this is a mega trend if you catch it, and the company is diversifying. Let's talk about another reason what may work for the company. That's the progressive policy reforms which are happening in the states, be it Jharkhand or even Tamil Nadu, Karnataka. So a proper re-rating is happening and a disciplined working capital management is there, and that is why we saw the free cash flows also going up. But what may not work for the company, this is largely industry specific risks, mixed views coming in from the analysts, and just hang on with me, I'm going to explain you how much buy, sell, hold is there. Valuations still remain fairly expensive. This is largely for the entire, you could say, alcohol pack. The inflationary pressures is not over yet. There might be some issues, but this is something which is industry specific and an uncertain macro environment. Are the cans going expensive? Is the bottling cost becoming expensive? Supply chain issues. So these are the sectoral overhang for the company. But I've given you the enough picture for United Breweries, but let's try to understand the KYC ratings of where things stand. And of course, we have the usual income statement, balance sheet and cash flow. But interestingly, I have added the volume growth here when you are actually judging a company. The return ratios, if you're expecting, it's largely very inline and flattish, so it doesn't make sense to analyze that. Shareholding street cred is important over a period of time, how things have changed. I've got you important valuations, peer analysis with 3 more companies in this space. And lastly, the analyst take, where there are mixed views coming in. But what are the total numbers and the 12-month target price? You need to be with us, and I'm going to give you that number. Let's understand income statement, what's happening here. That's the first rating. Largely, you could say single digit growth coming in the revenue and EBITDA. PAT numbers are improving. Q1 was a positive surprise. If you remove the margins front, there has been a largely, you could say, a decent set of numbers coming in despite what's happening in the industry. So there was a positive surprise. So I'm going to give this a neutral rating in my analysis when it comes to United Breweries income statement. Balance sheet, very much important to track, and largely we have seen that the borrowing levels that has spiked up. So we'll try to understand from the management why, but it's decently managed. It's of course an MNC. Properly it is managed, and the cash levels are also pretty strong, and they're expanding as per the key ratios. So it's a neutral rating from my side as well. Cash flows has been the big surprise in my analysis. Look at the jump, the free cash flow numbers. This is not only in Q1 but in FY26 also. This is the number to talk about. A really good working capital management coming in from the company, and the operational to EBITDA conversion, that's at 51%. This is also positive. So overall, the cash flow for United Breweries remains strong. Now let's talk about volume growth, and volume growth has been pretty decent. It is around that 7 to 10% mark over the last 3 to 4 quarters, but then the momentum coming up, and this quarter itself it's at 11%. So definitely there is a positive momentum. Of course, there are some adjustments to it also, but nevertheless this is a strong performance despite the headwinds coming in the industry. So I'm going to give this a thumbs up as well. Let's talk about shareholding, and largely it's neutral. Promoters hasn't moved an inch. It's at 71%. One side FIs are there, slight decrease coming in, but the other side the DIs are lapping from 16%, that's coming into at 18%, and FIs largely there has been a decrease from 7% to 5%. So net it's a neutral rating for the shareholding segment. But let's talk about street cred, how much money actually the stock has made, and at times seems like there has been a patience testing, especially if you're a long-term investor. Last 5 years, no return has come. It's been flat. Congratulations if you are a trader, you have made money in bits and pieces, and that is why from May lows the stock is up 12%. But definitely there is a correction in 1 year and 2025 highs as well. To balance things out, I have given this a neutral rating in my analysis. But valuations, do you think despite the stock not performing in the long term, are the valuations quite cheap? Well, the answer is no. The valuations of the entire industry is on the expensive side. Just remove Global Spirits, that's on a 12-month forward P of just 13 times. But the other bigger names, the main 3 companies which we are actually targeting, UBL, United Spirits and Radico Khaitan, all of them having the valuations between 54 to almost 70 times the forward P ratio. So yes, the valuations are expensive, but this is something which is very generic in the industry, and I'm sure most of the viewers who are tracking this company would know and justify this. So let's keep this a neutral rating here when it comes to the valuation picture. But let's understand the analyst take, what's happening here. There are almost 22 analysts tracking the stock. 12-month target price is 1442. This is the number which you should note down, and there is a concern. One side the analysts are bullish, 36% of them, while hold is 18%. That means majority is still in the buy and hold category, but the sell category is also not small. 46% of analysts have a sell rating as well. So there is a divergence in analyst community also for this counter. So I'm going to keep things balanced, and I'm going to give this a neutral rating as well. But let's try to understand the KYC ratings for United Breweries, how things stand as the moment, and of course things change a lot in future as well. Income statement, balance sheet is neutral, but company has done well in the cash flow and the volume growth front. So I've given this a thumbs up. Let's pull in the street cred and shareholding, and largely that has been quite neutral. Valuations, this industry is fairly expensive, but analysts take divergent, buy or sell. So a little bit of concern, but the total KYC ratings for United Breweries overall comes at 5 out of it, largely in line to positive numbers. And remember, this is the numbers on the past data as well. Things change in the future also, so do keep that in mind. But let's try to understand from the management, and we'll be joined in by Vivek Gupta, MD and CEO at United Breweries. Now we are joined in by Vivek Gupta. He's the CEO and MD of United Breweries. And sir, of course, a good set of numbers, especially with, you could say, a challenging quarter. The cash flow from operations has improved significantly. Do you think this momentum will continue?
Yes, I think we are overall very excited with the quarter results, especially around category growth. This is the second quarter in a row where category grew more than double digit, and we grew almost 13% in our sell-through volumes and 9% in the sell-in volume. You're absolutely right. We reduced almost 20% inventories for two reasons. One is we wanted to make sure that the beer remains fresh, especially when we come out of the season and during the monsoon period. At the second time, cash is extremely important in a scenario where the cost has got significantly increased behind the Middle East war. So the discipline in the organization to manage cash flow has really helped us to accelerate our growth as well.
And sir, the Q1 volumes grew 13% despite inventory reduction. Is this demand sustainable?
The 13%, let me correct, is our sell-through volumes. Our sell-in volumes are 9% because of the inventory reduction. We do expect category to grow, the category growth to be high single digit to double digit over the next few quarters because some of it is very structural. As I mentioned in my note yesterday, I think it's a time where there is a revolution happening on beer, especially led by Karnataka, where they brought a revolutionary policy to have taxation based on ABV, and we are seeing a significant jump in the beer category. Last year, Maharashtra did some reforms on taxation, which meant that category is growing more than 20% there. We have seen category growth in Jharkhand behind privatization of retail. So some of these numbers are coming behind structural policy reforms, which were long overdue. And some of it is also happening behind strong summer season. But I do expect that the structural reforms will continue and which will continue to make sure that the category will grow. And at the same time, as UBL, our role is to be the category maker. And we continue to invest in brands and invest in programs which lead to the category growth. So I am quite positive that the category momentum should continue in the coming quarters.
Right. Sir, the Q1 EBITDA margins declined this quarter. When do you expect this margin to recover? Of course, the impact was because of supply chain disruption and input cost inflation.
No, thank you for sharing. As I mentioned in the last quarter's call, our industry and specifically our company has been significantly hit by the war impact on the cost. We estimated it is anywhere close to 400 to 500 crore impact on our profits for this year. Despite a 300 bips impact on our gross margin, the team did an excellent job in recovering almost 150 bips out of initiative through better mix, through our own internal cost initiative. I don't think we are out of woods. We are still pleading and requesting states like Telangana, Andhra, and Tamil Nadu to reconsider the pricing because we sell to the government corporations in these states, and the viability of business is extremely important because if our raw material cost is going up, our packaging cost is going up, there is no way we can recover that cost unless we get higher EBPs or higher price from the corporation. So we are in consistent conversation through BAI and directly with the government to reconsider the pricing. So unless that changes, the pressure on margins will continue to be there. But at the same time, we continue to work our internal programs to save cash, save cost, and make choices. So we continue to invest behind the brands and consumers.
And Vivek sir, you're mentioning about the states, a lot of factors are moving positively as well as some kind of stress, but Karnataka policy, that seemed to be positive. What kind of impact we can expect?
See, it's early days. we are into the third month of the Karnataka policy. What we are seeing is a category growth upward of 40 to 50% in the first 2 months. As I said, it's fueled by summer as well as the policy change. But we feel very positive that this change is the right change for the category and for the consumer, because with the youth population and especially almost 23 million people coming to legal drinking age, I think going towards moderation, having more socially responsible drinks like beer, and having taxation based on alcohol content is the right thing to do. So I really want to applaud what Karnataka government has done here. So I think first it's the right thing to do, and we believe this momentum will continue, and the early signs are extremely positive behind this policy.
Interesting. And Vivek sir, how much headroom do you see for premiumization playing out over the next 3 to 5 years?
See, as I mentioned, we expect premiumization to continue to happen in India and accelerate in this, in this category as well. In 2024, we actually grew premium business by almost 34%. Last year, we grew by almost 23%. And I do expect a similar growth rate to continue in the coming years and years to come. And for us, our brands like Heineken Silver, they are already growing at 28%. Our Ultra is growing at 12 to 14%. And more importantly, we have also got a structural profitability right now, where premium is going to be margin accretive for us going forward, which means that there is more incentive for everyone to invest behind premium brands. So there is a lot of headroom. I think at the same time, we need to really make sure that we manage the affordability at the mainstream and the economy end, and we continue to drive our superior execution at the premium end.
And Vivek sir, how much capacity addition is planned, especially over the next 2 to 3 years?
See, recently we actually announced the commissioning of our can line in Telangana, which actually the first cans were produced last week and also sold to the consumer. Our can line in Maharashtra is on track. We should be able to get our first can from that line in a couple of months. Our Greenfield project, which we already announced in UP, is on track, where by end of next year, we will have significant capacity enhancement. We also are working with our partners across India. We work through 17 contract manufacturing partners where we are utilizing capacity. We also are planning to make a mega investment in state of Karnataka in the coming days to enhance the capacities as well. So there's a lot of work happening on capacity.
Right. Speaking of capacities, what will be the long-term mix between the owned manufacturing setup and, say, a contract manufacturing setup? How do you see things moving ahead?
I think, for us, it will be a balance. We do expect to be 60-40 kind of a mix, where, long-term 40% could be contract manufacturing in certain states, because in some states there is excess capacity and it is not right for the industry to create more capacity when the existing capacity is not utilized. So for the overall value chain, we do expect contract manufacturers playing a big role in our growth plan.
And Vivek sir, is there any impact, be it positive or neutral, for the UK FTA which has been completed?
Actually, beer is not part of UK FTA, unfortunately, so we don't see any impact on beer.
Right. Apart from this, also let's try to understand, the FY26 borrowings. Is it all short term, but it has spiked? What's the reason for it? And by when we can see the normalization of these short term debt?
I think some of the borrowing is because we continue to make capex investment behind the capacity expansion and new breweries you asked. But some of the borrowing is because we still have significant outstandings in one of these states. So it's a combination of that. So I think we will need to have a good ratio of debt and equity as we continue to invest behind the category growth in India.
Vivek sir, you mentioned a huge number of youth actually coming in the drinking age. So what are the consumption trends looking like in the beer segment, be it Gen Z, be it millennials?
See, I think, as I said, this is a revolutionary time for beer in India, and we have seen what a policy intervention can do. See, 23 million youth are coming to the legal drinking age. All our surveys are suggesting that 70 to 72% of them wants to try a drink. And it is for us to orchestrate towards more socially responsible, moderate drink, which actually builds connection and socialization, which is beer. So I think a lot depends on how the policy interventions are coming, and beer needs affordability, availability, and awareness. We are very positive on what we are seeing in states like Karnataka, states like Andhra, and states like